Everyone, good morning, good afternoon, good evening to all of you. Welcome once again to this live एनालिसिस। स्टार्ट करते हैं आज का ये सेशन। फिलहाल देखोगे तो कल के लेवल है, फिलहाल के लिए तो अभी कोई चेंज हुआ नहीं है। 12:30 होने वाला है, तो न्यूयॉर्क सेशन से पहले हमारा 12:30 पे लंदन सेशन ओपन हो जाएगा। एंड देन 5:30 पे न्यूयॉर्क सेशन की ओपनिंग। एंड देन शाम को 7 बजे यूएस मार्केट की ओपनिंग, 6 बजे एवरेज आर्ली अर्निंग है एंड नॉन फार्म एम्प्लॉयमेंट चेंज और अनएम्प्लॉयमेंट रेट का डेटा आएगा। इंपॉर्टेंट, बहुत इंपॉर्टेंट डेटा है आज का ये। गोल्ड, सिल्वर और थोड़ा बहुत क्रूड को भी इम्पैक्ट कर सकता है। और हमारा इंडियन मार्केट पे भी मंडे को शायद इम्पैक्ट पड़ेगा, तो गिफ्ट निफ्टी को देख लेना। कल इन्वेंट्री आई थी, बेरिस इन्वेंट्री थी, लेकिन नीचे एक सपोर्ट बनाया था, उसके बाद एक टारगेट लगाया था, पहला टारगेट हो गया था, फ्लैट ओपन हुआ, थोड़ा बहुत मोमेंटम आ रहा है। लेट्स सी सेकंड टारगेट तक जाता है तो वहां पर फिर से सेल का प्लान करेंगे। क्रूड ऑयल कल इन्वेंट्री क्रूड ऑयल की भी आई थी वैसे तो। एंड इन्वेंट्री देखोगे क्रूड ऑयल की तो इन्वेंट्री के बाद भी कुछ खास मूव किया ही नहीं क्रूड ऑयल। यू नो, इन्वेंट्री वैसे क्रूड ऑयल की नेगेटिव थी, बेरिश थी प्राइस के लिए, बट यहाँ पर देखोगे शाम को 9:30 पे जब वो इन्वेंट्री आई थी, प्राइस थोड़ा बहुत ऊपर ही चला गया, फिर वहीं पर साइडवेज हो गया था। अभी फ्लैट ही ओपन हुआ है तो स्टिल इन अ साइडवेज रेंज। क्लियरिटी नहीं है कि कहाँ जाना चाह रहा है, रेंज ब्रेक नहीं हो पा रही है इसमें अभी भी, तो इट इज़ स्टिल इन अ रेंज। लेट्स सी क्या प्लान कर सकते हैं। मॉर्निंग पे दो तीन न्यूज़ आ रही थी जिसकी वजह से इंडियन मार्केट थोड़ा सा प्रेशर पे था। निफ्टी, बैंक निफ्टी दोनों ही मॉर्निंग पे तो हल्का सा गैप अप जरूर हुआ था, लग रहा था कि थोड़ा ऊपर जाएगा, बट ऊपर से एक सडन फॉल आया था बिकॉज ऑफ यूएस। जो ट्रम्प हैं वो इंडिया के जो आईटी सेक्टर्स की कंपनीज हैं, जिनमें बहुत सारी आईटी सेक्टर की कंपनीज हैं, लाइक टीसीएस हो गई, इन्फोसिस, विप्रो, एचसीएल टेक्नोलॉजीज, तो इन सब पे टैरिफ लगा सकता है। तो इससे इंडियन आईटी सेक्टर को काफ़ी ज़्यादा लॉस होने के चांसेस हैं। तो उसका एक सिग्निफिकेंट इम्पैक्ट मार्केट पे देखने के लिए मिला, एंड आईटी सेक्टर की वजह से ऑलमोस्ट फाइनेंशियल सेक्टर भी थोड़ा प्रेशर में आ गया। निफ्टी के साथ साथ बैंक निफ्टी भी लोअर एंड से थोड़ा बहुत प्रॉफिट बुकिंग आई जरूर थी, उसके बाद साइडवेज ही हो गया। तो लेट्स सी, कल का जितना गेन था मार्केट 2 दिन का, वापस उसी लेवल पे वापस आ गया। क्या और गिरेगा इस फेव से या फिर कुछ मूव करता है? बाकी जिन लोगों ने लाइक नहीं किया, डोंट फॉरगेट टू लाइक द स्ट्रीम। थोड़ा सा रिफ्रेश कर देते हैं। मेरी वॉइस आ रही होगी, आई होप सो। लेट मी नो इन द कमेंट बॉक्स, मेरी वॉइस क्लियर है एंड स्क्रीन विजिबल है, आई होप सो। मुरलीधर राव जी, वॉइस आ रही है ना क्लियर? ठीक है, चलो। लाइक करते रहो गाइस, लाइक करना मत भूलना। ठीक है, अभी कोई नया ट्रेड अभी बनाते हैं, कोई नया ट्रेड है नहीं अभी। नीचे आना चाहिए एक बार, नीचे लेवल पे भी नहीं जा रहा है। रेजिस्टेंस है तो वहां पर से भी प्राइस ब्रेकआउट नहीं कर पा रहा है, तो थोड़ा सा वेट करेंगे। मतलब वॉल्यूम भी कम ही लग रहा है क्रूड में। भी नीचे का सपोर्ट ब्रेक हुआ नहीं है क्रूड में, ना ही ऊपर का रेजिस्टेंस, तो थोड़ा वेट करना पड़ेगा और ऑप्शन नहीं है। ये कल का लेवल अभी भी होल्ड कर रहा है क्रूड ऑयल। बट इस लेवल से इतने बार बाइंग आ गई है, आई डोंट नो फिर से होल्ड करेगा नहीं करेगा। इसके नीचे थोड़ा सा कल का एक लेवल था जो एक्सपेक्ट कर रहे थे, नहीं आया था, 5490 480 वाला, वो अगर हिट करता है आज। तो बेस्ट के सिनेरियो रहेगा, एंड उससे पहले अगर ऐसा भी ना हो गिरे नीचे और ऊपर कोई रेजिस्टेंस ना बनाए, अगर रेजिस्टेंस बनाते हुए ही गिरेगा तो बेटर रहेगा। उस केस में एक प्रॉपर टारगेट मिल जाता है। नहीं तो होगा क्या, जो सारे रीटेस्ट हैं वो फिर से प्राइस को होल्ड करने की कोशिश कर जाते हैं, विच इज़ नॉट गुड। से भी एक बार बाइंग आई थी, हाई बना था, दूसरी बार हायर हाई बना था, तीसरी बार एक और हायर हाई बना था कल, ये चौथी बार लोअर हाई बना है। तो लॉजिकली तो ब्रेक होना चाहिए इस लेवल को अब क्रूड ऑयल में। ठीक है, बाकी नेचुरल गैस को देखोगे, कल बाइंग आई थी, उसके बाद ये भी थोड़ा सा साइडवेज ही चल रहा है। लेट्स सी थोड़ा ऊपर अगर पहुंचता है, वहाँ सेलिंग जोन अच्छा है। वैसे ही कल का जो लेवल है, इसमें भी रेंज ही बनी हुई है, ऊपर का लेवल ब्रेकआउट किया नहीं है। 1230 ऑलरेडी हो चुका है, लंदन सेशन ऑलरेडी ओपन है स्टिल। बहुत स्लो है। आज का डेटा एक तो इम्पॉर्टेंट है, मोस्टली में भी हो सकता है उसकी वजह से ऐसा हो रहा हो। शाम को जो डेटा है 6 PM वाला, एम्प्लॉयमेंट चेंज और अनएम्प्लॉयमेंट रेट, वेरी इंपॉर्टेंट डेटा। Apple India's sales hit record $9 billion after big retail push. Wow. Broadcom to help OpenAI create AI chip to take on Nvidia. $9 बिलियन की सेल यहीं से कर दी इन लोगों ने।
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equityfutures.
News when you want it with Bloomberg News Now. I'm Caroline Hepker. OpenAI is partnering with Broadcom to design and produce artificial intelligence accelerator chips in a direct challenge to NVIDIA's market dominance. Bloomberg understands that the first chips will begin shipping next year. Broadcom CEO Hock Tan made a veiled reference to the partnership and to $10 billion in orders from a new customer during the company's earnings call on Thursday. Tan also told investors that Broadcom's AI outlook will improve significantly next year, with the company expecting revenue from AI semiconductors to reach $6.2 billion in the fourth quarter. Here is Bloomberg's Charlie Pellet now with more.
His comments on the conference call helped ease concerns about slowing growth. Tan says the company's working with prospective customers to develop AI accelerators, a market currently dominated by NVIDIA. Jay Goldberg is an analyst at Seaport Research Partners.
I think the truth of it is, anytime NVIDIA loses share today, it's not to AMD, it's to somebody who's doing their internal silicon, and Broadcom is helping them do that.
Tan says he'll stay on as Broadcom CEO until at least 2030 in New York. Charlie Pellet, Bloomberg Radio.
The US President Trump, says that he will be imposing tariffs on semiconductor imports very shortly. He said that the levies could spare goods from companies like Apple that have pledged to boost their investments into the United States. Trump spoke during a dinner at the White House with a rare gathering of some of the world's biggest tech leaders.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff.
The US president has previously suggested that the tariff rate on semiconductors could be well above 100%, reaching potentially as high as 200 or 300%. Now, bond and currency traders are bracing for today's US employment report, which is now seen as pivotal to the Fed's coming rate decisions. Markets are currently pricing in a quarter-point cut in 2 weeks' time and almost 4 more by the end of next year. Chicago Fed President Austin Goolsbee says that policymakers will be watching the data closely.
The job market is in the dual mandate. So if we feel like the job market is deteriorating, that's going to be a thing arguing for maybe we should loosen.
Goolsbee also stressed his independence from partisan politics. He was speaking after President Donald Trump's Fed nominee, Stephen Miron, told the US Senate that he would retain his White House job while serving at the central bank. Now to Europe. Markets are pricing in a political crisis in France as Premier François Bayrou looks set to lose a confidence vote on Monday. According to new research from Bloomberg Economics, any further tightening in financing conditions adds risks to France's anticipated recovery in 2026. French Prime Minister François Bayrou told the TV station France 2 TV that he does not regret calling the vote.
Est-ce que je regrette? En aucune manière.
Do I regret it? In no way. And this is exactly the choice I've made. I will explain to you why. For months, France has been discovering the situation that I myself have been highlighting for years, that we are drowning in debt.
En évidence depuis des années qu'elle croule sous les dettes.
François Bayrou speaking there via a translator. Bloomberg Economics projections show that failure to deliver a crucial €44 billion fiscal consolidation plan could see France's debt-to-GDP ratio increase and hit 125% in 2030 versus 115% in 2025. Bayrou has said that he remains open to other budget proposals as long as the overall deficit reduction target remains in place. In the UK, Prime Minister Keir Starmer says that he will act on the outcome of an independent investigation into his deputy, Angela Rayner. Rayner has admitted underpaying tax on a flat that she bought, blaming incorrect legal advice. Starmer told BBC News an ethics probe needs to establish the facts.
There's a clear procedure. I strengthened that procedure. It is now taking place. I am expecting a result pretty quickly. I do want it to be comprehensive, as you'd expect. And then, of course, I will act on whatever the report is that's put in front of me.
Keir Starmer there. A government official says that the report could be presented to the Prime Minister later today. Today also marks the start of Reform UK's party conference. Lobbyists and journalists are headed to the event to see if the party's lead in the polls is matched by its professionalism. And France's Emmanuel Macron says that 26 countries are ready to deploy troops to Ukraine after a ceasefire in order to guarantee the country's security. But there was little clarity about US commitments. The French president spoke alongside Ukraine's President Volodymyr Zelensky after a gathering of the so-called Coalition of the Willing in Paris.
This force does not have the will or objective of waging some war against Russia, but it is a force that must guarantee peace and provide a very clear strategic signal.
Emmanuel Macron speaking there via a translator. US President Donald Trump joined the meeting remotely, though Washington's concrete commitment to the measures was not made clear. This comes as the US President is moving to sign an executive order today, changing the name of the US Department of Defense to the Department of War. Those are some of our top stories for you this morning. Let's get to a market check. So the dollar is falling and could be under further pressure as we think about Fed rate cuts. Traders are now fully pricing in a rate cut in 2 weeks' time in September. Bloomberg Dollar Spot Index is down 0.2%. The euro trades at 116.75, so stronger 0.2%. Stock futures for the US and Europe are both in the green, are up 0.3 for Euro Stoxx 50 futures. The S&P 500 hit a record high at the close yesterday. European stocks gained 0.6%. Bond markets are much calmer at the moment. 4.15 10-year US yields down a basis point, and gold is also up 0.25%, so $3,554 for the bullion price right now. That's news when you want it with Bloomberg News Now. I'm Caroline Hepker, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple.
And Jim, how much money will Apple be investing in the United States? Because I know it's a very lot, and it's, you were elsewhere, and now you're really coming home in a big way. How much money would you be investing?
$600 billion.
$600 billion. All right. It's a lot of jobs.
We're very proud to do it.
That's great. Thank you very much.
Thank you.
Appreciate it.
Thank you, sir.
Hearing there from the U.S. president hosting tech executives at the White House. And of course, we've been hearing that mutual praise being lapped upon each other from these tech executives. They're also talking about how Trump has provided a lot of support for the AI sector. China never far from their minds. Trump said that the U.S. is leading China by a lot in that regard. We also heard how the BLS data, when asked a question, the U.S. president said that the real numbers will be in a year from now. Let's bring in Bloomberg White House reporter Laura Dezensky. Lauren, we're hearing a very positive tone from everybody at the table, and it's mutual from Trump towards the tech executives as well. What was your key takeaway from all this?
Yeah, this is such a classic Trump event. It's an opportunity for CEOs, American bred, these are classic American companies. It's a chance for Trump to get all of them in a room in front of cameras and have them talk about how great Trump is and how significant their investments are. And it goes both ways, too. Trump is saying that, he's very proud of Google. He's seated next to Meta's Mark Zuckerberg. It's really just, it almost kind of reminds me of The Apprentice a little bit, where it's all of these people who are working for and on behalf of Trump and investing in the U.S. And, Trump also has the opportunity to give them a little bit of red meat and a little bit of something that these CEOs are looking for as well. Proximity to the president helps and is a good thing for these CEOs. When you're on the president's good side, he's much less likely to tank your stock with some errant Truth Social post. We had him discussing the significant investments from these companies and really praising these CEOs in very personal terms. Again, saying that he's proud of someone, that's not very formal speech. And again, it just goes back to being such classic Trump. It's also worth noting that he talked about chips tariffs. Our man in the room, Josh Wingrove, asked, what what's happening next with tariffs on semiconductors and chips, and obviously the industry is really waiting for any details there. We didn't get a whole lot necessarily. Essentially, the president is saying that it will be fairly substantial, but not that high. So it's up to insiders to figure out what exactly that means. But it's a little bit of reiteration as well. It's Trump saying that if these industries or if these companies plan to come here, they won't be subject to the tariff. If they're building here, if they plan to build, no tariff. He also mentioned that Tim Cook will be in pretty good shape, which is classic Trump in that, what does that mean? The specifics are obviously a little unclear, and we'll have to see what happens there. And I know our Bloomberg reporters will be all over the next steps.
We've reduced stocks will be in focus when market. We've reduced the slabs. There shall be only 2 slabs, and we are addressing also the issues of compensation cess. Ease of living, simplifying registration, return filing, and refunds. These reforms have been carried out with a focus on the common man.
India cuts taxes on hundreds of consumer goods, from soaps and cars to insurance, to boost spending and soften the blow from Trump's punishing tariffs. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Indian consumption stocks will be in focus when markets open in about 45 minutes. But globally, investors are watching for clues on the Fed's next move. Specializing in high growth, coming up later this hour on Opportunities Market Positive.
Oh, absolutely. And, it's more positive for the market than the economy. But you have to keep in mind the context that Prime Minister Narendra Modi actually spoke about it during his Independence Day speech. So since then, a bunch of stocks have already discounted this optimism, which I'd say are staples. So consumer staples as a theme has discounted this to a great extent. But consumer discretionary spending related stocks are yet to price this in. And, the impact is not just because the taxes have been cut and rationalized. It has also been cut ahead of festive season, and it has been cut in a manner where the market share is largely going to move from unorganized players to the organized ones, and most of the organized ones, or at least a whole host of them, are listed in the stock market. So it's definitely way more positive for market. And as Jonathan was saying, that this might actually sow the seeds of an earnings upgrade cycle, or at least the bottoming of earnings that we have been seeing in India. I was talking to a bunch of strategists before coming on air, and what I got was that definitely it sort of adds to the monetary as well as fiscal measures that government has been carrying out over the past few quarters, and put together this might actually be enough to put a floor in earnings and maybe even start a new upgrade cycle for India equities.
But aren't there fiscal concerns? If you take a look at the bond market, we saw how yields surge on the back of that, because there are concerns perhaps India will have to issue more bonds to support spending.
That's right. I mean, it would be a concern on the fiscal side, but it's nothing that one should worry about. I mean, our reporting and, my talks with a variety of market participants sort of suggest that, this is pretty much manageable. It's not something which will put the credit rating or profiles in danger. And this was the need of the hour. I mean, it was either these kind of measures that support the market or support the economy, or, you're taking tariffs with a pinch of salt, and that can impact the market's psyche even more. Remember, like the context that we have been pointing out, that India has been among the major markets which have underperformed this year, and significantly. Money has been rotating out. Global investors have been exiting the market on fears of valuations and earnings not picking up as expected, slowing down capex over the last 2 years. So, in this backdrop, it was way more important to take care of these things before actually thinking about fiscal profile, and it is manageable even if you talk to bond investors, if you talk to market participants.
Abhishek, thank you so much for that. Bloomberg senior Asia equities reporter Abhishek Vishnoy. Let's get insights on what this means for long-term investment opportunities in India. Manraj Sekhon is CIO of Templeton Global Investments. Manraj, good to have you with us. I mean, we heard from Sitharaman, the finance minister. She says it is very positive for GDP, but how much can you counter that 50% tariffs from the U.S.?
Well, I think you have to consider a few things. First of all, how long will this 50% tariff be in place for? Is it here for the short term? Is it here for the medium term or beyond? Once we see the Russia-Ukraine situation resolved, which we're probably closer to the end than the beginning, then I think the pressure on India with respect to what President Trump feels about oil imports from Russia, that pressure eases. So I think you have to ask yourself about whether the tariffs are here for a very long time or not. In terms of the tax cuts, I think it's very positive. If you look at something fairly simple, just like price elasticity of demand in India compared to, say, the US or China, it's much higher in India given the profile of the average consumer, lower income, and so on. The last time taxes were adjusted back in 2019, you did see a meaningful improvement in demand, especially for consumer discretionary items. I would argue there will be an improvement, there will be a significant improvement. And on the point on the fiscal situation, if you look back in 2019 again when they did it last, net it was positive for the fiscal position because the increase in demand more than offset the reduction in taxes. So I think all of that is positive. And when you look at the inflation picture in India, it has been fairly well behaved. You have a new chairman of the Reserve Bank who is fairly dovish. He's been easing monetary policy. So when you put that together, an easing monetary policy picture, decent inflation numbers, tax cuts, a market where sentiment is pretty poor, expectations are low given what's happened with tariffs, I think this is a positive catalyst for the market for the medium term.
But does it fundamentally change the view of the Indian market? Does it make it so much more attractive that foreign investors are going to be flocking in?
I think you have to split the short term and the long term. I think in the short term, some people who don't fully appreciate what's going on in India are focused on the on the tariff increases. But if you look at the long-term dynamics of India, the secular growth, the demographics, the talent, none of those stories have changed. And I think when you look at the performance of the Indian market over the long term, these corrections in time have proven to be buying opportunities. So I would argue those fundamental secular drivers haven't changed. In the short term, you might still see some noise thanks to tariffs, thanks to the uncertainty brought about by tariff policy out of Washington. But in the medium to longer term, we're still very constructive on India.
So buy India and buy consumption plays. After all, consumption is 60% of GDP.
Well, I think consumption will be a short-term beneficiary from the policy changes, but if you look broadly across the market, the number of other sectors that have been beaten up because of the tariff situation, and I think you have to be very stock-specific. The thing about the tariff situation is that companies that have pricing power, companies that are in a very secure part of supply chains, of value chains, those are the ones that will benefit. And I think you have to be very stock-specific in India. Consumer is an area. There's some other areas as well.
What is the biggest risk right now for India? I mean, we talk about that 50% tariffs, and you question how long that would be, and the signs are not really positive right now.
Yeah, well, I think we need to focus on what the agenda is out of Washington. Now, the most important thing on the agenda for President Trump is the trade deal with China. He's focused on that. The Chinese are focused on that. They don't want anything to get in the way of that because of how important that economic relationship is. Once he gets that out of the way, I believe the next one will be Russia-Ukraine. That issue needs to be resolved. We're close to the end and the beginning. The Europeans haven't come to the table yet. They need to. Once that pressure comes off, and it will have to come off before 2026 meaningfully begins, because at that point, President Trump will be focused on the midterm elections, which are very, very important for him, especially now. I think then the focus comes on what else he can do. So once that pressure is off with respect to Russia, I think you could see some avenues where India and US find a way of coming back to the table. Right now, that looks a long way away, but bear in mind the approach out of DC has been fairly transactional, based on the issue of the day in the eyes of the Trump administration. So I think we shouldn't rule that out.
The other issue that investors are focusing on in India is actually Jane Street. Now it says it's pushing back on the manipulation violation which SEBI has imposed on it. How are you, as an investor, looking at that situation? What are the implications broadly?
Sure. I think regulatory situations in any jurisdiction are tricky, and I'm not privy to the specifics of Jane Street and SEBI, but I'm sure they will work it out over time. But I think SEBI has always been focused on what ensures a long-term, liquid, efficient market, and what works for all segments of Indian society in terms of investors in the market. So I think they'll be very focused on that. The only thing I would say is I don't think this will be resolved in a very short period of time.
But this is a high-stakes legal battle in a way, right?
Yes.
And it could set the precedent for the future for foreign investors in India.
It's difficult to speculate, but I think wherever you look in the world, there have been regulatory situations which have looked very tricky at a particular point in time, but over time they all get resolved.
And for the broader market, it is about the Fed, how much it will cut, what it will do, and what's crucial actually is that data coming out on Friday. If the data comes in weak, might 50 be a possibility? Might 50 be on the cards in September?
Who knows? 25 or 50, I think. It doesn't really make a huge amount of difference. I think in the short term...
it's the optics, isn't it?
Well,
if he does a 50.
Perhaps, but, non-farm payrolls are a very volatile data series. We're coming at the end of the summer in the US, which has been a very active summer. The weather's played a big part in things, so it's very difficult to predict what the short-term numbers are going to be. Having said that, I do believe that over the next 6 to 9 months, Chairman Powell will be thinking about the legacy he leaves behind for his term at the Fed. There will be likely a dovish new Fed chairman that will come in. Currently, markets are expecting something in the region of 150 basis points
by the end of next year.
Between now and the end of next year. I would argue that's excessive. I think if you look at interest rate forecasts over the last few years, they have been pretty inaccurate in terms of predicting a easing monetary policy cycle, and I think the same will happen this time. I think we're going to see easing. I would be very surprised if we see 150 basis points by this time next year. If you look at what's happening around the world, the impact of tariffs, if you look at the comments from Secretary Bessent on how much the US is pulling in from tariffs, it's annualizing at about $330 billion. That's a big number. If you look at, say, personal consumption expenditure in the US, just the change year on year is about $1.5 trillion last year, ballpark. So 333 billion is a big number. That number has to come from somewhere. So the two things I think we should be looking out for are inflation numbers, perhaps spiking, reflecting those tariffs, and that could be cause for concern for the market short term, and also just the overall demand picture. We've seen evidence that demand has been pulled forward earlier in the year, given tariffs. So companies, consumers have been pulling forward demand so that they don't have to pay up for tariffs. So it is logical that you will see some follow-up from that in terms of slowdown. So I think those are a couple of things to look out for, which could spook markets in the short term.
Neutral, 3%. How quickly might we get there?
I think it'll take longer than people expect. currently.
How much longer?
I don't
What's
think
a possibility?
I don't think we get there before the end of next year, as the markets are expecting.
So given that the markets are pricing in deeper rate cuts than what you're suggesting, is there too much optimism in the stock market right now? I mean, take a look at where we are. We're constantly testing new highs.
Well, again, there's the headline and there's what's happening underneath. Now, if you look at the headline, the markets are up significantly. If you look at the performance of markets since Liberation Day, 5 stocks account for 3/4 of the S&P 500. The S&P 500 is looking at double-digit returns year to date, but the median stock is probably low single digits. So there's a real bifurcation in the market between the AI winners in this AI arms race, because the marginal returns from AI investment are still supernormal right now, and the market's giving those companies a lot of credit for the investment they're making. And then there's the rest of the market where there's uncertainty, where the tariffs are having an impact, where there is evidence of a slowdown. If you look at some of the logistics companies, they are talking about a slowdown. If you talk to the advertising companies, the traditional advertising companies, there is evidence of a slowdown. So you do have this bifurcated economy, bifurcated market. Headlines suggest a very healthy S&P 500, but that again, in 2025, as it was last year, is concentrated in a small number of companies. So I think there's scope for disappointment in that space.
So what? We could see a correction of what, 10%, 20%? Some have suggested that could be the case.
I think a 10% correction is not unreasonable to expect, given how strong this market has been and the amount of profits there are out there to take. But I would say that any correction will probably be short-lived, because you have got such a large segment of the market that has lagged, and their valuations are not as demanding as the very large companies. So there is not a lot of optimism there. There's very low expectation. There's enough scope for rotation into those companies.
To your point, the concentration risks are there. How do you play? How best? And what are some of the major changes you make to your portfolio that you're willing to share?
Well, we take a long-term view. I think the AI story is undeniably one of the biggest stories in our lifetime, and that's going to change the way all businesses operate. It's happening already. So I think you have to be in that story. Now, where you position yourself is important, and I think the semiconductor companies, including those in Asia, are real beneficiaries of that. Some of the hyperscalers are executing extremely well. So I think you have to be very careful, but you have to be positioned within that. Now, outside of that area, I think you also have to look at some of the places that have lagged. Some of the areas that have lagged, say in the US, have been areas like healthcare, some of the consumer discretionary areas. So valuations have begun to look a lot more attractive there, and we're looking at some of those areas to take away some of the steam away from the bigger stocks in the market.
Munraj, China, it has been a red-hot market, and today we hear that the Chinese government is possibly looking at speculative investments. Your take on where the market's headed?
Yeah, I would come back to the big picture again. The most important focus for Beijing right now, as it is for Washington, I would argue, is this trade deal between China and the US. And the Chinese leadership does not want to see anything distract or get away from that. So any signal to the US that the Chinese market is looking through that risk, is interpreting the outcome overly positively, I think is something they would like to avoid. And when you come back to President Xi Jinping's agenda, and has been the case since he's stepped up into his role, common prosperity hasn't gone away. Common prosperity is about alignment. It's about ensuring that different parts of the Chinese population benefit from growth, benefit from the opportunities in the same way. Domestic demand hasn't really picked up in China this year, despite some of the improvements, some of the reforms.
And property sector hasn't either.
It hasn't. So again, that rally has been driven by very cheap valuations, some expectation that we're past the bottom in China, which is probably fair, but they want to take the steam out of the market. So I think it's something we have to watch closely.
But the AI plays in China are attractive, no?
Well, I think China's one of the biggest beneficiaries from AI, and they have some of the most interesting companies and interesting technologies. Not enough attention is being paid there by global investors right now, and I think that will continue to be interesting for years to come. So it is an area we like a lot.
Manraj, always a pleasure to have you with us. Manraj Sekon, CIO of Templeton Global Investments. Still ahead this hour, Moody's Ratings Senior Vice President for Credit Strategy, Nikki Dang, will be joining us for analysis of India's debt markets and economic outlook ahead of the new tax cuts. Keep it here with us. This is Bloomberg.
For over 147 years, BGRIM has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
Welcome back. You're watching Insight. Indian Prime Minister Narendra Modi is hailing the GST Council's decision to lower the nationwide consumption tax. The tax cuts are expected to put more disposable income in the hands of consumers to lift consumption, which accounts for 60% of India's GDP. For more on the latest reforms, let's bring in our South Asia economy editor, Ruchi Bhatia, in New Delhi. Ruchi, we have to pay attention to the timing of this announcement.
Oh, absolutely. In fact, this is coming in right ahead of the main festive season in India, that is Diwali, that happens to be in the month of October. And remember, a lot of consumers had deferred their purchases in the run-up to the big festival, and hoping that the GST cuts far and wide will really reduce the prices of a lot of goods. And that's exactly what has happened. From the existing 4 slabs, we now have only 2 rate slabs, which is the 5% tax category and the 18% tax category, and more than 400 products ranging from toothpaste to TV. The GST rates have been reduced on that. Also remember, this consumption tax cut is coming in at a time when India's economy is expected to get a big hit from the punitive 50% tariffs that have been imposed by US President Donald Trump. If you look at the last GDP figures, we did see a good growth, but the expectation is that going forward we may see some sort of a tapering of growth in the economy, tapering of expansion in the economy, and this is what the consumption tax is aimed toward. The expectation is that there will be more buoyancy. Now we will see more people getting into the markets, buying products. This is going to spur consumption that accounts for almost 60% of India's GDP. Having said that, it is going to come at a cost of 480 billion rupees for the exchequer. So that is something that one has to look at as to how the government is going to fill this big hole, and also how the states will be compensated, because the states have said that there is some sort of a revenue loss that they will be facing as well. But for now, in the interest of consumption, they have given it a go-ahead, but needs to be seen how the compensation cess or for various states will be worked out by the federal government.
What are some of the options? What might the government do to ensure that its coffers are still filled?
So, as far as the federal government is concerned, we already know that there's a big bonanza that came in earlier this year from India's central bank that is going to sufficiently, keep the kitty intact, the government's kitty intact. On top of it, there is an expectation that there will be a privatization for IDBI Bank that will happen this year, which will also give some substantial chunk of money to the government. So all in all, so far, the federal government government is saying that they will be able to stick to their 4.4% fiscal deficit target for this year. But remember, the borrowing program for the second half of the fiscal year kickstarts from the 1st of October. We will be hearing from the government on their proposed plans very soon. But there was a risk that various market participants saw in terms of whether there will be any fiscal slippage, because it's not just the GST cuts. Remember, the government is also talking about some sort of incentives that may come in for exporters, and what will that mean for the central exchequer is something that we will have to wait and watch out for.
Ruchi, thank you so much for that perspective. South Asia economy editor Ruchi Bhatia there in New Delhi. Well, India's tax cuts have a net impact of around $5.5 billion on the government's revenues, which the country's revenue secretary is fiscally sustainable. Let's get perspective from Nikki Dang, Senior Vice President, Credit Strategy and Research Group at Moody's Ratings. And Nikki, your thoughts on the fiscal position of India on the back of those consumption tax cuts?
Yeah, thank you. And I think this is similar to the other guests have said. So basically, we're looking at a 480 billion rupee worth of tax cut or revenue loss at this point, which is equivalent to about 0.14% of the GDP. So that's a relatively small amount. So we're expecting the government to be on track of maintaining a 4.4% of GDP fiscal deficits this year. But don't forget, I think there was also putting in the budget, the whole thing was really trying to stimulate or boost more private consumption, which is going to strengthen the growth for the economy on the backdrop of a 50% tariff coming from the U.S. side. And this is a continuation of government's supportive measures in addition to the income tax cut that's been implemented and put into the fiscal budget for the budget for fiscal year 2025 to 2026. But in our estimate, given that India is still a large domestic-driven economy, the 50% tariff is going to take a toll of the GDP by 0.3%. So that's a lower estimate, and we're still getting to a 7% full calendar year growth estimate for this year.
But Nikki, there's still some concerns out there. We continue to talk about, the bond market, how yields surge, because there are concerns that perhaps the government will have to issue more debt to support its spending plans. I mean, is that something you're looking at?
Yes, indeed. We're looking at a more balanced view of how the government is going to fund this $480 billion. But again, I think on the relative size perspective, right, relative to what the government is putting on the table, I don't think that's going to have a big dent to the government's continued fiscal consolidation at this point.
So just to be clear, the tax cuts, are they sustainable or not?
Well, at this point, it's a small portion, and what we're hoping to see is more of a growth coming from the tax cut, especially for the private consumption, which, as you noted, 60% of India's GDP but in the recent years, I don't think the household is suffering from a lot of high inflation and reduced disposable income for the household, and so that's what the government is trying to resolve at this point at again the 480 billion rupees of cost.
Nikki, just hang tight. We have several headlines to tell our viewers about. Japan's 30-year bond bid cover ratio is 3.31 versus the 12-month average of 3.38. Once again, of course, this is an auction which we have been keeping an eye on, the 30-year bond bid cover ratio of 3.31 versus 12-month average of 3.38. We've been talking about how this 30-year seems to be a pretty much unloved duration. The auction tail has been a wide range of 0.02% to 0.75%. And in terms of yields, they've climbed from 2.3% to 3.3%. Again, Japan's 30-year bond auction, which we have been keeping an eye on, that bid cover ratio is 3.31. The monthly average was for a 12-month period, 3.38. Nikki, just coming back to our conversation, in terms of credit ratings, we've seen some concerns, especially when it comes to the developments in Indonesia, those violent protests we've seen. Are you reassessing Indonesia's credit rating on the back of that?
Well, of course, we're monitoring and working very closely with where the domestic uncertainty, the protests is taking us. But at this point, I think it's really on the protests came on the backdrop of a lot of concerns on softening of the economic growth and job prospect, as well as the income disparity in that sense. And we're still expecting a 4.7% GDP growth this year and next for Indonesia. But if the unrest is sustained, a heightened political uncertainty is sustained in that sense, we're going to see some downside risk to that, in particular as reflected in the FDI, inflow FDI, which Indonesia heavily relies on. I think the recent first half of the GDP growth is fairly decent in a way. However, the growth pattern is a little bit concerning and raising some of the concerns among the public. That is, the growth driver mainly comes from the good production output from agriculture sectors as well as the downstream processing sectors. However, the growth in those sectors were not able to offset the job losses in the more labor-intensive sectors such as textiles and garments and some part of the auto industries. That's causing wide concerns about disparity in growth, and that has implication on the weakening of living standards.
In terms of its fiscal deficit, do you see a risk that it could breach the 3%, target?
We'll have to see how things evolve, in particular for this year, given also we also have headwinds from the tariff impact, right? So, but we're assessing the situation as it goes.
What in particular are you looking out for before deciding whether or not that could be a downgrade in its credit rating? This is a situation which has been brewing for months.
Yeah, and I wouldn't be speaking on behalf of the expert. I'm not a sovereign analyst in any means. But again, our holistic approach is looking at many aspects of the fundamentals of the credit strength of issuer, sovereign issuer. That includes economic strengths, physical strengths, as well as external risk of vulnerabilities. So a whole slew of things have to come together in order for us to take a rating action.
I guess when it comes to Asia Pacific in particular, those tariffs from the U.S. have a bearing on how the economies will fare for the rest of the year and the coming years. How are you weighing those tariffs and how the economies will fare?
Yeah, I mean, overall, we rate about 25 sovereign issuers in the region, and we're looking at a collective, the GDP-weighted growth rate of 4.1% this year. This is slightly down from what we had last year in the region. So in relative terms, the tariffs are higher, tariffs are real, but relatively speaking, the region's economy is relatively resilient to this tariff shock, if you will. We're also looking at 2026. However, the growth is going to slow down for the region, and same for the global economy as well, given the tariff uncertainty will keep percolates into different aspects of the economy, including the business decisions, business investments, and consumer sentiments.
How about in terms of China's credit rating? Some say that perhaps its credit conditions are pretty much resilient, pretty stable at this point in time. Is that a fair assessment?
Well, we're talking about credit condition. We're talking about a lot of credit supplies and demands in the economy. As we all know, China is facing external challenges because of uncertainties of the trade negotiations with the U.S. And domestically, we're also looking at an economy that remains to be export-driven, at least for the first half of this year, due to a lot of front-loading. However, monetary policies and supportive measures from physical support is also helping the household in terms of the expending consumptions on some of the household items, including EVs, electronics, as part of trade-in scheme, subsidy scheme. However, looking under the hood, so to speak, there has been no broad-based recovery of private consumptions. We are still looking at a very muted retail sales growth for the first half, and which also came down to 3.7% in July. The investments sentiment still remains very low. The private investments remains in a contraction area, and this is mainly because of muted consumer sentiments due to the income growth, weakened income growth and growth prospect as well as job prospect, tag along with the continued drag from the property sector in that sense. So again, the momentum that's happening in the first half, we're expecting to by the pull ahead from export sector is going to wane in the second half of the year. We're expecting to see a full year growth of 4.7% this year, but next year it's going to come down to further down to 4% in absence of additional government supports.
And Nikki, thank you so much for that. Nikki Dang, Senior Vice President, Credit Strategy and Research Group at Moody's Ratings. Still to come, we'll focus in on India's sales tax cuts, implications for regular consumers with Venturi partners Rishika Chandan. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
India's been trading for about a minute now from the get-go. Take a look at that. It's green pretty much across the board. The Sensex up by 0.7%, adding to the 0.5% gain just yesterday. And not surprising that Indian staples, auto stocks, they're rallying after the consumption tax cuts announced just yesterday. Take a look at where we are in terms of the Nifty 100, also higher by 0.8%. Now, the revamp of India's consumption tax marks the first major change since its implementation in 2017. Reforms have long been sought by Indian businesses, which have often struggled with a convoluted, multi-tiered GST regime since its introduction. For a look at just how convoluted it is, here's the popular popcorn explanation as an example. Under the old rate structure, spiced or salted popcorn sold loose was taxed at 5%, but if the exact same product was sold pre-packaged and labeled, it was taxed at 12%. If you had a sweet tooth and opted for the caramel version, which I would, the tax rate would jump to 18%. Thankfully, things are expected to get a bit easier now. While we're still waiting for the fine print, the new GST regime is set to tax salted or spicy popcorn at 5%, regardless of whether it's sold loose or packaged. Sadly, the rate will still be 18% for those with a sweet tooth, as caramel popcorn falls under the sugary treats category. Bad news for me. Venturi Partners is a Singapore-based private equity firm investing in consumer brands across India and Southeast Asia. The firm raised $150 million in the first close of its second funding round, with a final target of $225 million by mid-2026. Let's get insights, perspective from Rishika Chandan, Managing Partner at Venturi Partners. Good to have you with us.
Thank you so much. It's a pleasure being here.
First off, your reaction to the consumption tax cut.
Yeah, well, I think, it's good for our portfolio companies. We have a portfolio company that operates in the dairy space, so it's definitely a net positive that. We have one we're investing in the nuts and dry fruit space. I think I think all round it's definitely good for boosting consumption. Taking a step back, I think this is India's strategic sort of step in trying to balance domestic economic consumption together with external shocks. And while we're yet to see the second order effects of this in terms of how fiscal deficit gets impacted, and I think to that extent India is playing the thin line of trying to balance both. They do have the ability to use a little bit of fiscal flexibility to be able to boost domestic consumption. So I think this hopefully should be a net positive, but the second order impact is yet to be assessed completely.
Net positive, is it necessarily the same for urban and rural consumers?
No, I think I think it would largely, at least looking at where the cuts have come from, likely to boost more rural consumption. But I think just given how democratized India is now becoming in terms of consumption patterns, you also have urban India that's very value seeking. I think there's a slightly more thin line compared to what it used to be before between urban and rural. And so to that extent, there will definitely be positive effects for urban India as well.
We talk about how, if you take a look at the headline, it is market positive, but if you take a look at the possible implications as seen from the bond market, the concerns about perhaps having to sell more bonds to back spending, what are the major concerns? What are the risks that you see?
Yeah, look, I think the risks are really, linked around, for example, where will the government make up this fiscal deficit or this extra revenue loss that they will incur from? Right now, there is talks of privatization of banks that will probably be able to generate a little bit of revenue for them, the bond markets, like you said, but it's not as straightforward. I think estimates currently suggest that in the near term, their target of 5.5% to maybe, or 5%, I'm sorry, to FY26 might get pushed to 5.3, 5.4%, and whether they're able to stick to the 4.4% FY27 is really where we need to see. I think the other risk really is that this GST basket differs state to state, as we discussed, and so what is the state level impact of some of these, changes in GST, because you might have some states that depend a lot more on certain categories where rates have been cut. I think that is the other second order implication that we don't know yet.
So given the perspective that you have just shared with us, does it shape the way, influence the way you look at the companies that you are looking to invest in, or perhaps, further invest in whatever you have right now?
Yeah, well, not really, simply because, our mandate has always been going after domestic private consumption. So in fact, all of the companies that we've invested in have little to no revenues coming from outside of India. And so to that extent, purely from a portfolio perspective, this is going to be a net positive as long as consumption kicks off in the way the government and the rest of the economy is expecting it to happen. For our portfolio, it's definitely a net positive at this point.
And you don't see that much of a risk coming from that?
No.
In terms of the timeline for preparing for an exit, what are you looking at? What are some of the considerations?
Yeah, so look, I think from our Fund 1, we're expecting our first exit to come next year. This will be a 5.5-year hold period, and so very much in sync with what we've promised to our investors, which is a 5 to 7 year hold period on any investments before we exit. Will likely be a public market exit, and I think that's the beauty that India has, or the advantage that India has today, is that even liquidity in the market is so domestic driven that the public markets are, one would argue, operating at all-time high multiples, but on the other hand are seeing enough liquidity for companies to be able to exit effectively.
Well, the question really is whether you see the risk from it being a domestically driven market.
No, I mean, for us, like I said, right, 60% of the GDP is domestic consumption. That's not going to change tomorrow, and so actually for us, this GST reform is beneficial not only to our companies but to other countries as well. Now, if the rupee were to depreciate, what are the impacts of that on exports, etc.? So I think our portfolio is insulated from that because, like I mentioned, we don't have too much of dependence on exports, or our companies don't sell outside of India. So yes, there could be an impact for companies that are highly export driven. Today the tariffs are more towards products. What happens if Trump decides to place tariffs on services in India? I think those risks always exist.
And of course, your Fund 2, you're looking to raise even more. Where are you with that? Yes. What are the chances that you will will meet, possibly even, exceed, perhaps.
Yes, look, we've been very fortunate. Our first close target was $125 million, against which we raised $150. And so, very fortunate to have received, a lot of backing from our existing Fund 1 investors as well as new investors. The markets are obviously not easy, simply because, DPIs have come down, especially in the US and the other developed markets. And so when DPIs come down, new allocations, they're the ones that suffer the most. Having said that, I think, India as a market is now on everyone's mind, from a diversification perspective, from a size of geography perspective, from economic and political stability perspective. And so, we are actually seeing a positive intent from most LPs, and we feel fairly confident that we will get to 225. Whether we exceed that or not, I think, it's just a function of really where we are in 2026.
And of course, when you take a look at Southeast Asia, some of the markets here are also pretty much domestically driven.
Yes.
Indonesia, case in point. But unfortunately, we've seen, the recent developments, violent protests. Does it affect how you look at that particular market?
Yeah, so look, we've, when we originally thought of Fund 1 and we sort of thought of our sort of investing mandate, candidly, we had hoped to do 50% Southeast Asia and 50% in India. But I think, we've become overweight on India over time. Our deployment is now 70-75% India and slightly more opportunistically towards Southeast Asia. And the main reasons for that is, I think the exit landscape here has been not as strong as it has been either on the M&A or on the public market side. There's no one single market here. And so from a regulations perspective, if you're building a consumer business, you have to really build individual businesses across different countries from a regulations perspective, a consumption and a consumer mindset perspective. And then each of these geographies is seeing their own sort of political challenges with corruption becoming up front and center in Indonesia and the Philippines. And so today, while we've got two very large investments in the Philippines, it so happens that that's the only market that we've invested in, and we haven't really dipped our feet into Indonesia yet.
Okay, Rishika, thank you so much for your perspective today. Thanks for joining us.
My pleasure. Thank you.
Rishika Chandan, Managing Partner at Venturi Partners. Now, before we go, here's a look at our show for tomorrow. We'll keep the focus on emerging market stocks with Morgan Stanley's Amy Oldenburg. Plus, we'll discuss growth opportunities in India's chips industry. Keep it here with us. This is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equityfutures.
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
Bond and currency traders are bracing for today's U.S. employment report, which is now seen as pivotal to the Federal Reserve's coming interest rate decisions. Markets are currently pricing in a quarter-point cut in 2 weeks' time and almost 4 more by the end of next year. The Chicago Fed President Austin Goolsbee says policymakers will be watching the data closely.
the job market is in the dual mandate. So if we feel like the job market is deteriorating, that's going to be a thing arguing for maybe we should loosen.
Goolsbee also stressed his independence from partisan politics. The gap between shorter-term yields and longer-term treasuries has grown as investors weigh a slowing economy against fiscal worries.
The jobs report will land as concerns over the political influence on the Fed continue. Fed nominee Stephen Myron says he will act independently if he gets the job at the central bank. Myron pushed back on Democrat critics who say that he is President Trump's lackey.
Look, the president nominated me because I have policy views that I suppose that he liked. If I'm confirmed to this role, I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data, my own personal analysis of the effects of economic policies upon the economy, and act based on my judgment of the best economic policy possible.
Stephen Myron in yesterday's Senate hearing. His potential nomination is part of a broader White House campaign to change Fed leadership. Yesterday, the U.S. Department for Justice opened a criminal investigation into whether Federal Reserve Governor Lisa Cook committed mortgage fraud.
OpenAI is partnering with Broadcom to design and produce artificial intelligence chips in a direct challenge to NVIDIA's market dominance. Bloomberg understands that the first accelerator chips will begin shipping next year. And Broadcom CEO Hock Tan made a veiled reference to the partnership and to $10 billion in orders from a new customer during the company's earnings call on Thursday. Tan also told investors that Broadcom's AI outlook will improve significantly next year, with the company expecting revenue from AI semiconductors to reach $6.2 billion in the fourth quarter. Bloomberg's Charlie Pellet has more.
His comments on the conference call helped ease concerns about slowing growth. Tan says the company's working with prospective customers to develop AI accelerators, a market currently dominated by NVIDIA. Jay Goldberg is an analyst at Seaport Research Partners.
I think the truth of it is, anytime NVIDIA loses share today, it's not to AMD, it's to somebody who's doing their internal silicon. And Broadcom is helping them do that.
Tan says he'll stay on as Broadcom CEO until at least 2030 in New York. Charlie Pellet, Bloomberg Radio.
President Trump says that he will be imposing tariffs on semiconductor imports very shortly. He said that the levies could spare goods from companies like Apple that have pledged to boost their investments in the US. Trump spoke during a dinner at the White House with a rare gathering of some of the world's biggest tech leaders.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff.
The US president has previously suggested that the tariff rate on semiconductors could be well above 100%, reaching potentially as high as 200 or 300%.
And markets are pricing in a political crisis in France as Prime Minister François Bayrou looks set to lose a confidence vote on Monday. According to new research from Bloomberg Economics, any further tightening in financing conditions adds risks to the country's anticipated recovery in 2026. Bayrou told French station France 2 TV that he does not regret calling that vote.
Est-ce que je regrette? En aucune manière.
Do I regret it? In no way. And this is exactly the choice I've made. I will explain to you why. For months, France has been discovering the situation that I myself have been highlighting for years, that we are drowning in debt.
En évidence depuis des années qu'elle croule sous les dettes.
François Bayrou speaking there through a translator. Bloomberg Economics projections show that failure to deliver a crucial 44 billion euros fiscal consolidation plan could see the country's debt-to-GDP ratio hit 125% in 2030 compared to 115% in 2025. Bayrou has said he remains open to other budget proposals as long as the overall deficit reduction target remains in place.
And here in the UK, Prime Minister Keir Starmer says that he will act on the outcome of an independent investigation into his deputy, Angela Rayner. Rayner has admitted underpaying tax on a flat that she bought, blaming incorrect legal advice. Starmer told BBC News an ethics probe needs to establish the facts.
There's a clear procedure. I strengthened that procedure. It is now taking place. I am expecting a result pretty quickly. I do want it to be comprehensive, as you'd expect. And then, of course, I will act on whatever the report is that's put in front of me.
A government official said the report could be presented to the Prime Minister Keir Starmer later today. Also today, we have the start of Reform UK's party conference. Lobbyists and journalists heading to the event to see if the party's lead in the polls in Britain is matched by its professionalism. And those are our top stories.
And on the markets today, Caroline, the markets are just opening up here in Europe. Stock 600 is up 0.2%. We've got the FTSE 100 up 8 basis points, so marginally more positive. Of course, a lot of paying close attention to the downward revisions to UK retail sales. And in the US, S&P futures are up 0.2%, building on that all-time record high that was reached yesterday. All eyes on the employment report later today. And also keeping a close eye on oil as we head into the OPEC Plus decision this weekend. Brent is down 0.3%, trading just shy of $67.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity futures.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
कहीं सीलन की बूंदें आपके घर में भी संगीत बनके ना गूंजे, इसीलिए घर बनाएं।
Where there's a profit squeeze as AI hits the server makers' margins despite demand.
But first, let's take a look at the broader markets. You're going to dig into the details of these earnings, Ed. I look at a context that it's up 0.3% on the NASDAQ. We are digesting pretty woeful labour data once more, but all eyes on the Fed to cut. 90% chance in the money markets that they will move as soon as this month. This, as we still are looking at what the Senate is discussing on the future of the Fed and who's actually sitting on it.
There's a lot going on this week, but software in particular, now earnings in that context, are driving markets lower in this case. So Salesforce is talking up its kind of historic growth rates, but the outlook for its top line growth, particularly as it relates to AI, it's just not there yet. We're going to get into the analysis in just a second. Now, Figma, this is its first earnings post-IPO at the end of July. Big drop on the stock. Remember, it jumped 250% in its debut. Caro, you were there, you lived through it. It basically met estimates, but it just shows how high and lofty expectations of the market are right now. I want to dig into numbers, starting with Salesforce. Let's get out to Bloomberg Intelligence senior tech analyst Anurag Rana. Maybe you caught Benioff on the call. Maybe you caught him in interviews on other networks. He was talking up about, like, Salesforce growth rates, Anurag. They are better than anyone out there. But the story seems to be the outlook and how AI is contributing. What do you think?
Yeah, I think the expectations were a little bit high in that case from the AI contribution point of view. But if you look at results from Workday and other tech companies out there, we are still struggling to see discretionary IT spending bounce back. We have not seen any of that stuff. And given the size of a company Salesforce is, you're going to see the impact of that on bottom lines. If there are no massive seat growths out there, you're not going to see revenue accelerate. And I think that's the story which is, I think common to most of the software landscape, except the companies that only work on AI infrastructure marketing. If you leave them alone, the rest of the industry is struggling right now.
What do you make of the first numbers from Figma? Because in many ways, it was a company that pivoted well, embraced generative AI, was able to show how it's working for its bottom line. As a public company, we are seeing a tumble in the shares.
Yeah, I would say that my expectations were pretty bad or wrong in this case. I was looking for revenue to improve because of a price increase they have put in. But it seems like, they basically met the expectations that they gave. And to be very frank, in an IPO landscape, it doesn't work like that. The first few quarters, you really need to showcase, an improvement in fundamentals. This just shows that there is a lot they have to do in order to get, and I would say, match up to the valuation that they have achieved right now.
Anurag Rana, holding yourself accountable. We appreciate that. Bloomberg Intelligence, we always love the expertise. Let's get a broader look at the tech sector right now, because Carol Schleif is with us, BMO Private Wealth Chief Market Strategist. Carol, it's been a while. Great to have you on Bloomberg Tech. And more broadly, how are you thinking of the software story, the AI winners versus losers right now?
We really, first off, thanks for having me on. It's great to be back again. And it really is important. It takes... investors are very black and white. They want to see instantaneous results. But all of this stuff takes some time to filter through and figure out how we're going to deploy it. But the software and that moving away from, if you will, the picks and shovels of building out the infrastructure into the use cases and how that factors in, that is definitely a way that we see things playing out in the intermediate to longer term, because you're not going to be able to get away from AI. A lot of companies are trying to figure out how to deploy it, how to use it, how to train their employees in using it, because you've got those early adopters who are using it actively, and you've got the others that are not as willing to be on the bleeding edge, if you will, of the day-to-day use case.
What, therefore, is the likelihood that some of the older companies with big presence in the market, such as a Salesforce, can fend off new competition? How much are you having to build that in to an investor risk right now that we are seeing a totally new cohort come to a powerful place in generative AI?
You are, but you're also seeing those that old guard have the cash flow to be able to snap up some of those. It's almost like a whales and krill kind of scenario out there. And you look at, for example, in the build out of the infrastructure, you've got a lot of that going on too, where the largest companies are buying up the smaller companies in the competition. So that really smart, really useful competition, one of the ways they get leverage and into a lot of end users too is through the distribution channel of some of those larger companies. So there's a use case to be made, or an investment case to be made, for a whole lot of sizes in that software industry.
Carol, I really appreciate the command you've got over what's happening, right? Particularly in software. We've been talking about it all week. I mean, one of our guests this week said that September was the most hated month for investors. But basically, we're going back to like old-fashioned earnings talk. Did they meet or exceed high expectation, particularly in software sense? Not really. Did AI have a tangible contribution to top-line growth? Not really. Is that the way that you approach a week like this?
Well, I think a piece of it is investors have to understand what time frame they're using and where their expectations are, because we've looked at a lot of these companies, and you've got very active. When you step back from it and you look at the margins on these companies relative to most of the rest of the S&P, those margins are great margins. They're cash flowing businesses, and as we all know, once you put a software system into a company, it's really hard to make a decision to change that or move that. And so, from that perspective, I think investors have to ask themselves, on an absolute basis, are these companies generating the kinds of revenues that I want, even if they didn't beat what the wildest expectations that I was hoping for? Because the industry tends to run, or investors tend to run ahead of themselves, and the whisper number is always a little bit higher than where they're at. And yet the companies, the industry in general, are generating amazing returns.
Carol, this week we talked a lot about concentration risk, and the more sanguine of your peers in the market would say, well, we look at profit estimates for the Mag 7 in particular, but tech generally, so much better than the S&P 500 aggregate, but you have concentration risk. How are you thinking about that at the moment?
I think one of the ways that we deal with it is barbelling portfolios and really leaning into that diversification, because there is concentration risk. You've also got higher valuations overall, and you've got markets that are primed for perfection, if you will. So they don't leave, that doesn't leave much wiggle room other than when you get big pullbacks like we had in April. It's one of the reasons why I think the pullback was so short-lived back then, and the reset was quick, is people had been sitting on the sidelines looking for an opportunity to get in dead. So one of the ways that you deal with that is you school yourself to expect some level of volatility. Don't freak out when it first happens, and maybe own some other industries, some other segments, some other parts of the globe, and maybe some fixed income or so to ballast the portfolio and to allow it to be able to ride through those storms.
Diversification key, but just going back to the concentration risk and the area of hardware having been the most loved. Salesforce is down 30% basically year to date. We're looking at Broadcom up 30% year to date, and we got their earnings after the bell. Is hardware and picks and shovels still where it's at, Carol?
Well, I think a piece of it, we're not through with that build-out segment yet, but a piece of the questions you're starting to ask yourself is, particularly as it relates to data centers and some of the other things that are going on, it's great if you can put them up, if you can put aside the not in my backyard sorts of pushback you're getting in some of those. But then when you're getting told it's going to take 5 or 6 years to hook it to the grid, so there's lots of different ways to play the hardware and the build out and who's got capacity and able to do it. Right. But there's a whole other segment of bringing in some of the reshoring activities that are going on as well.
Carol, it's got to that time of the show where I ask you the impossible question. What happens next in the balance of 2025 for the technology sector? Your big predictions, please.
We do think that you'll see continued grind higher. I mean, markets have been climbing a wall of worry, technology as well, all year, and we think you'll see a continued sort of grudging climb higher. Many company managements have told us they're nauseously optimistic for this final quarter, and I would think we're in that camp too.
Carol Schleifer, BMO Private Wealth. It's great to have you back on the show, and we always appreciate a prediction. Thank you very much. Now, we have some breaking news crossing the Bloomberg terminal. Rhode Island and Connecticut have sued the Trump administration over the administration order blocking further construction of a nearly completed offshore wind farm, which was meant to provide power to the 2 New England states. You'll remember, Carol, August 22nd, the administration had issued that stop work order. We also had the companies involved have a parallel suit against the U.S. in order that the wind farm work can continue. But the breaking news right now is that Rhode Island and Connecticut, 2 of the New England states, participating in a suit against the administration, trying to get the judge to allow that work to move forward. What do we got next?
Future of energy is important to AI. We go back to AI, Ed. Coming up, Apple looking to go toe-to-toe with OpenAI, of course, a company it has a partnership with, but it's launching its own AI web search, integrating it in Siri. We'll dig into that next. This is Bloomberg Tech. Apple said to be launching its own AI web search tool integrated into Siri, basically rivaling the likes of OpenAI, of Perplexity. Bloomberg's Mark Gurman joins us now. It is such a thoroughly reported piece you put out yesterday. It moved the stock. What's interesting is who's going to be helping build the underlying LLM and generative AI within it. And it's not Perplexity, and it's seemingly not Anthropic either.
Yeah, that's right. We've known for some time that Apple's launching an overhauled version of Siri around March. This is going to include delayed features like the ability to tap into your personal data to fulfill queries. Obviously, it's surprising it couldn't do that till now after launching 15 years ago. But the feature that we didn't know was coming until yesterday is an AI web search tool, sort of an answer engine. Siri right now is able to answer questions, broad strokes of information it can provide, can control your phone, send messages, and what have you. What it doesn't do well is tap into the open web to get information and distill it down for you in the way that AI search engines today can do, things like Perplexity, things like ChatGPT. So now Apple will be launching their own answer engine. That's going to come in March as part of an update called iOS 26.4. And over time, I anticipate them to integrate it into Safari, into Spotlight, and other parts of its operating systems. Google search is very important to Apple. It makes them roughly 20 billion plus per year. But the industry is shifting. How many times are you going to Google search right now? Probably fewer than you used to. A lot of people are doing their searches from ChatGPT or Perplexity. Right. It's an increasing number of people. So this is important for Apple for its long-term future.
World Knowledge Answers is just one part. Your reporting shows us what the market has actually been asking for, which is when this revamped Siri comes as a package. So spring next year, I see basically three parts, right? A Siri redesign, a health AI subscription service, and then some conversational features on the home devices, which we've discussed on the show. What are we waiting for that's coming in March, Mark, in total?
So what's coming in March is this AI search product I mentioned, the ability to tap into personal data to fulfill queries, things like who did I meet with a month ago, what song did Ed text me last week, the ability to fulfill queries based on on-screen content. You're looking at a picture of someone, tell me more. And then you have voice-based navigation, so using your voice to control your phone, move around your operating system, telling Siri to like something on Instagram. Later in the year, you'll see the Health Plus subscription service, which is basically an AI agent for health. And then you're also going to see a visual redesign for Siri later next year. And then the year after is likely when you're going to see the conversational Siri tied to that new robotic home device, the tabletop robot, which is essentially a virtual person to have in your workspace to help you get things done throughout your day.
So my question is first, Ed, what song did you message Mark Gurman? Was it?
I believe it was Pink Pony Club. That's no surprise, any regular followers on social media. But I'm interested, when I look at how Siri works right now, or Apple Intelligence, it summarizes what's in my email. It often will be like, here's your Spotify playlist of the day. Spotify sends updates as well. What would you have sent, Mark Carroll?
What would I have sent? I did just see Oasis. So probably an Oasis song. But Mark, more broadly, the question that I'm also going to ask you is, therefore, I go back to the underlying technology here, the relationship between Google and Apple. We've just had such an update on it from Judge Mehta this week. That's going to be integral for what's going to be building the underlying technology for this product, right?
Yes, you asked me that earlier. I did not answer the question. So,
but you gave us a beautiful answer anyway. So.
No, go for it.
Yes. So Apple has talked to OpenAI, Anthropic, and Google most recently to partner with them to rebuild Siri as one of the components underlying the new Siri engine. And a lot of signs right now are pointing to them working with Gemini. Google has built a model for them. The two companies signed an agreement earlier this week, a formal evaluation agreement. This doesn't mean they have a commercial agreement. This means they've agreed for Apple to evaluate a model. They're fine-tuning it, and they're heavily considering it. They've also considered Anthropic very heavily, and they still are for different parts of Siri. The problem is that Anthropic wants north of $1.5 billion a year at a revenue number that's going to escalate annually for the next 3 years. And that is a pretty very big dollar amount to pay for technology like this in Apple's mind. They feel they have little leverage here, and Google is a longtime partner, and obviously that partnership's going to continue. So it all seems to fit. So we'll see what ends up happening, but I'm thinking Google as of now.
Bloomberg's Mark Gurman, who, as Karis said, very detailed report on what happens next with Siri. Thank you very much. Meanwhile, OpenAI rival DeepSeek is said to be developing an AI model with more advanced AI agent features. I want to get out to our AI editor, Bloomberg's Seth Figerman. A very interesting story that Bloomberg broke, because like DeepSeek, actually, despite the sort of volatility of April, which DeepSeek caused in markets, it moves slower than some of the other Chinese names working on models. But the whole point is that this is agentic AI. They want something that goes beyond the chatbot.
Yeah, that's right. I think we've all been a little bit surprised at how little we've heard from DeepSeek in the last 8 months since it upended the markets. We've seen a glut of products from Chinese and U.S. rivals. And there's a lot of speculation about what's going on behind the scenes there and other challenges it might be facing. But what we've heard and reported today is that its focus is really trying to make a splash in the agent market. And for viewers here, this has really been where the tech industry has shifted to in the last 6 months or so. OpenAI, Anthropic, Google, and others are all pushing out AI agent products. I think what DeepSeek is trying to do is basically build a new model that has agentic capabilities, embedded within it, so that it can field more complex, multi-step tasks on your behalf with minimal intervention. Now, again, a lot of companies are trying to do this, and we are seeing very mixed range of execution here. And it seems like DeepSeek probably wants to make sure they put out something that will move the needle in this potentially crowded market.
But the crowding really for DeepSeek is its popularity in China. At the moment, it is still the most popular chatbot tool. But as we say, Alibaba, Tencent, they've just had a rapid rate of innovations in their models. When do we anticipate R2 will come out?
Yeah, so again, we don't know if this one is R2, but this model is supposed to come out before the end of the year. What's interesting, though, is that Alibaba, Tencent, the ones you mentioned, haven't been as active, I think, in the agent marketplace. I mean, they're doing a lot of image and video generation technology, a lot of more sophisticated chatbots. Manus, which we and others have covered, which is originally from Chinese origin, but now trying to move into Singapore, they have made a bigger splash with agent products. So there might be a bigger market within China and globally if DeepSeek can do something competitive on the agent front. But it's hard to say right now how much it'll be different from what's out there.
Seth Figerman breaking it down on DeepSeek. We so appreciate it. Coming up, finance app Revolut is now offering shares at a whopping $75 billion valuation. We're going to discuss.
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Salesforce sell-off as lackluster top-line growth forecasts suggest AI isn't paying off just yet.
Plus, Apple plans to up its AI game with a web search for Siri as it leans towards Google's Gemini for its next-gen voice assistant.
And HPE weathers a profit squeeze as AI hits the server makers' margins despite demand.
But first, let's take a look at the broader markets. You're going to dig into the details of these earnings, Ed. I look at a context that it's up 0.3% on the NASDAQ. We are digesting pretty woeful labor data once more, but all eyes on the Fed to cut. 90% chance in the money markets that they will move as soon as this month. This, as we still are looking at what the Senate is discussing on the future of the Fed and who's actually sitting on it.
There's a lot going on this week, but software in particular, now earnings in that context, are driving markets lower in this case. So Salesforce is talking up its kind of historic growth rates, but the outlook for its top-line growth, particularly as it relates to AI, it's just not there yet. We're going to get into the analysis in just a second. Now, Figma, this is its first earnings post-IPO at the end of July. Big drop on the stock. Remember, it jumped 250% in its debut. Caro, you were there, you lived through it. It basically met estimates, but it just shows how high and lofty expectations of the market are right now. I want to dig into numbers, starting with Salesforce. Let's get out to Bloomberg Intelligence senior tech analyst Anurag Rana. Maybe you caught Benioff on the call. Maybe you caught him in interviews on other networks. He was talking up about, Salesforce growth rates, Anurag. They are better than anyone out there. But the story seems to be the outlook and how AI is contributing. What do you think?
Yeah, I think the expectations were a little bit high in that case from the AI contribution point of view. But if you look at results from Workday and other tech companies out there, we are still struggling to see discretionary IT spending bounce back. We have not seen any of that stuff. And given the size of a company Salesforce is, you're going to see the impact of that on bottom lines. If there are no massive seat growths out there, you're not going to see revenue accelerate. And I think that's the story which is, I think common to most of the software landscape, except the companies that only work on AI infrastructure marketing. If you leave them alone, the rest of the industry is struggling right now.
What do you make of the first numbers from Figma? Because in many ways, it was a company that pivoted well, embraced generative AI, was able to show how it's working for its bottom line. As a public company, we are seeing a tumble in the shares.
Yeah, I would say that my expectations were pretty bad or wrong in this case. I was looking for revenue to improve because of a price increase they have put in, but it seems like, they basically met the expectations that they gave. And to be very frank, in an IPO landscape, it doesn't work like that. The first few quarters, you really need to showcase, an improvement in fundamentals. This just shows that there is a lot they have to do in order to get, and I would say match up to the valuation that they have achieved right now.
Anurag Rana, holding yourself accountable. We appreciate that. Bloomberg Intelligence, we always love the expertise. Let's get a broader look at the tech sector right now, because Carol Schleif is with us, BMO Private Wealth Chief Market Strategist. Carol, it's been a while. Great to have you on Bloomberg Tech. And more broadly, how are you thinking of the software story, the AI winners versus losers right now?
We really, first off, thanks for having me on. It's great to be back again. And it really is important. It takes... investors are very black and white. They want to see instantaneous results, but all of this stuff takes some time to filter through and figure out how we're going to deploy it. But the software and that moving away from, if you will, the picks and shovels of building out the infrastructure into the use cases and how that factors in, that is definitely a way that we see things playing out in the intermediate to longer term, because you're not going to be able to get away from AI. A lot of companies are trying to figure out how to deploy it, how to use it, how to train their employees in using it, because you've got those early adopters who are using it actively, and you've got the others that are not as willing to be on the bleeding edge, if you will, of the day-to-day use case.
What, therefore, is the likelihood that some of the older companies with big presence in the market, such as a Salesforce, can fend off new competition? How much are you having to build that in to an investor risk right now that we are seeing a totally new cohort come to a powerful place in generative AI?
You are, but you're also seeing that old guard have the cash flow to be able to snap up some of those. It's almost like a whales and krill kind of scenario out there. And you look at, for example, in the build out of the infrastructure, you've got a lot of that going on too, where the largest companies are buying up the smaller companies in the competition. So that really smart, really useful competition, one of the ways they get leverage and into a lot of end users too is through the distribution channel of some of those larger companies. So there's a use case to be made, or an investment case to be made, for a whole lot of sizes in that software industry.
Carol, I really appreciate the command you've got over what's happening, right? Particularly in software. We've been talking about it all week. I mean, one of our guests this week said that September was the most hated month for investors. But basically, we're going back to like old-fashioned earnings talk. Did they meet or exceed high expectation, particularly in software sense? Not really. Did AI have a tangible contribution to top-line growth? Not really. Is that the way that you approach a week like this?
Well, I think a piece of it is investors have to understand what time frame they're using and where their expectations are, because we've looked at a lot of these companies, and you've got very active, when you step back from it and you look at the margins on these companies relative to most of the rest of the S&P, those margins are great margins, they're cash flowing businesses. And yes, as we all know, once you put a software system into a company, it's really hard to make a decision to change that or move that. And so from that perspective, I think investors have to ask themselves, on an absolute basis, are these companies generating the kinds of revenues that I want, even if they didn't beat what the wildest expectations that I was hoping for? Because the industry tends to run, or investors tend to run ahead of themselves, and the whisper number is always a little bit higher than where they're at. And yet the companies, the industry in general, yes, are generating amazing returns.
Carol, this week we talked a lot about concentration risk, and the more sanguine of your peers in the market would say, well, we look at profit estimates for the Mag 7 in particular, but tech generally, so much better than the S&P 500 aggregate, but you have concentration risk. How are you thinking about that at the moment?
I think One of the ways that we deal with it is barbelling portfolios and really leaning into that diversification, because there is concentration risk. You've also got higher valuations overall, and you've got markets that are primed for perfection, if you will. So they don't leave, that doesn't leave much wiggle room other than when you get big pullbacks like we had in April. It's one of the reasons why I think the pullback was so short-lived back then, and the reset was quick, is people who had been sitting on the sidelines looking for an opportunity to get in did. So one of the ways that you deal with that is you school yourself to expect some level of volatility. Don't freak out when it first happens, and maybe own some other industries, some other segments, some other parts of the globe, and maybe some fixed income or so to ballast the portfolio and to allow it to be able to ride through those storms.
Diversification key, but just going back to the concentration risk and the area of hardware having been the most loved. Salesforce is down 30% basically year to date. We're looking at Broadcom up 30% year to date, and we got their earnings after the bell. Is hardware and picks and shovels still where it's at, Carol?
Well, I think a piece of it, we're not through with that build-out segment yet, but a piece of the questions you're starting to ask yourself is, particularly as it relates to data centers and some of the other things that are going on, it's great if you can put them up, if you can put aside the not in my backyard sorts of pushback you're getting in some of those. But then when you're getting told it's going to take 5 or 6 years to hook it to the grid, so there's lots of different ways to play the hardware and the build out and who's got capacity and able to do it.
Right.
But there's a whole other segment of bringing in some of the reshoring activities that are going on as well.
Carol, it's got to that time of the show where I ask you the impossible question. What happens next in the balance of 2025 for the technology sector? Your big predictions, please.
We do think that you'll see continued grind higher. I mean, markets have been climbing a wall of worry, technology as well, all year, and we think you'll see a continued sort of grudging climb higher. Many company managements have told us they're nauseously optimistic for this final quarter, and I would think we're in that camp too.
Carol Schleifer, BMO Private Wealth. It's great to have you back on the show, and we always appreciate a prediction. Thank you very much. Now, we have some breaking news crossing the Bloomberg terminal. Rhode Island and Connecticut have sued the Trump administration over the administration order blocking further construction of a nearly completed offshore wind farm, which was meant to provide power to the 2 New England states. You'll remember, Carol, August 22nd, the administration had issued that stop work order. We also had the companies involved have a parallel suit against the U.S. in order that the wind farm work can continue. But the breaking news right now is that Rhode Island and Connecticut, 2 of the New England states, participating in a suit against the administration, trying to get the judge to allow that work to move forward. What do we got next?
Future of energy is important to AI. We go back to AI, Ed. Coming up, Apple looking to go toe-to-toe with OpenAI, of course, a company it has a partnership with, but it's launching its own AI web search, integrating it in Siri. We'll dig into that next. This is Bloomberg Tech. Apple said to be launching its own AI web search tool integrated into Siri, basically rivaling the likes of OpenAI, of Perplexity. Bloomberg's Mark Gurman joins us now. It is such a thoroughly reported piece you put out yesterday. It moved the stock. What's interesting is who's going to be helping build the underlying LLM and generative AI within it. And it's not Perplexity, and it's seemingly not Anthropic either.
Yeah, that's right. We've known for some time that Apple's launching an overhauled version of Siri around March. This is going to include delayed features like the ability to tap into your personal data to fulfill queries. Obviously, it's surprising it couldn't do that till now after launching 15 years ago. But the feature that we didn't know was coming until yesterday is an AI web search tool, sort of an answer engine. Siri right now is able to answer questions, broad strokes of information it can provide, can control your phone, send messages and what have you. What it doesn't do well is tap into the open web to get information and distill it down for you in the way that AI search engines today can do, things like Perplexity, things like ChatGPT. So now Apple will be launching their own answer engine. That's going to come in March as part of an update called iOS 26.4. And over time, I anticipate them to integrate it into Safari, into Spotlight, and other parts of its operating systems. Google search is very important to Apple. It makes them roughly 20 billion plus per year. But the industry is shifting. How many times are you going to Google search right now? Probably fewer than you used to. But a lot of people are doing their searches from ChatGPT or Perplexity.
Right.
It's an increasing number of people. So this is important for Apple for its long-term future.
World Knowledge Answers is just one part. Your reporting shows us what the market has actually been asking for, which is when this revamped Siri comes as a package. So spring next year, I see basically three parts, right? A Siri redesign, a health AI subscription service, and then some conversational features on the home devices, which we've discussed on the show. What are we waiting for that's coming in March, Mark, in total?
So what's coming in March is this AI search product I mentioned, the ability to tap into personal data to fulfill queries, things like who did I meet with a month ago, what song did Ed text me last week, the ability to fulfill queries based on on-screen content. You're looking at a picture of someone, tell me more. And then you have voice-based navigation, so using your voice to control your phone, move around your operating system, telling Siri to like something on Instagram. Later in the year, you'll see the Health Plus subscription service, which is basically an AI agent for health. And then you're also going to see a visual redesign for Siri later next year. And then the year after is likely when you're going to see the conversational Siri tied to that new robotic home device, the tabletop robot, which is essentially a virtual person to have in your workspace to help you get things done throughout your day.
So my question is first, Ed, what song did you message Mark Gurman? Was it?
I believe it was Pink Pony Club. That's no surprise, any regular followers on social media. But I'm interested, when I look at how Siri works right now, or Apple Intelligence, it summarizes what's in my email. It often will be like, here's your Spotify playlist of the day. Spotify sends updates as well. What would you have sent, Mark Carroll?
What would I have sent? I did just see Oasis. So probably an Oasis song. But Mark, more broadly, the question that I'm also going to ask you is, therefore, I go back to the underlying technology here, the relationship between Google and Apple. We've just had such an update on it from Judge Mehta this week. That's going to be integral for what's going to be building the underlying technology for this product, right?
Yes, you asked me that earlier. I did not answer the question. So,
but you gave us a beautiful answer anyway. So.
No, go for it.
Yes. So Apple has talked to OpenAI, Anthropic, and Google most recently to partner with them to rebuild Siri as one of the components underlying the new Siri engine. And a lot of signs right now are pointing to them working with Gemini. Google has built a model for them. The two companies signed an agreement earlier this week, a formal evaluation agreement. This doesn't mean they have a commercial agreement. This means they've agreed for Apple to evaluate a model. They're fine-tuning it, and they're heavily considering it. They've also considered Anthropic very heavily, and they still are for different parts of Siri. The problem is that Anthropic wants north of $1.5 billion a year at a revenue number that's going to escalate annually for the next 3 years. And that is a pretty very big dollar amount to pay for technology like this in Apple's mind. They feel they have little leverage here, and Google is a longtime partner, and obviously that partnership's going to continue. So it all seems to fit. So we'll see what ends up happening, but I'm thinking Google as of now.
Bloomberg's Mark Gurman, who, as Carrie said, very detailed report on what happens next with Siri. Thank you very much. Meanwhile, OpenAI rival DeepSeek is said to be developing an AI model with more advanced AI agent features. I want to get out to our AI editor, Bloomberg's Seth Figerman. A very interesting story that Bloomberg broke, because DeepSeek actually, despite the sort of volatility of April, which DeepSeek caused in markets, it moves slower than some of the other Chinese names working on models. But the whole point is that this is agentic AI. They want something that goes beyond the chatbot.
Yeah, that's right. I think we've all been a little bit surprised at how little we've heard from DeepSeek in the last 8 months since it upended the markets. We've seen a glut of products from Chinese and US rivals. And there's a lot of speculation about what's going on behind the scenes there and other challenges it might be facing. But what we've heard and reported today is that its focus is really trying to make a splash in the agent market. And for viewers here, this has really been where the tech industry has shifted to in the last 6 months or so. OpenAI, Anthropic, Google, and others are all pushing out AI agent products. I think what DeepSeek is trying to do is basically build a new model that has agentic capabilities, embedded within it, so that it can field more complex, multi-step tasks on your behalf with minimal intervention. Now, again, a lot of companies are trying to do this, and we are seeing very mixed range of execution here. And it seems like DeepSeek probably wants to make sure they put out something that will move the needle in this potentially crowded market.
But the crowding really for DeepSeek is its popularity in China. At the moment, it is still the most popular chatbot tool. But as we say, Alibaba, Tencent, they've just had a rapid rate of innovations in their models. When do we anticipate R2 will come out?
Yeah, so again, we don't know if this one is R2, but this model is supposed to come out before the end of the year. What's interesting, though, is that Alibaba, Tencent, the ones you mentioned, haven't been as active, I think, in the agent marketplace. I mean, they're doing a lot of image and video generation technology, a lot of more sophisticated chatbots. Manus, which we and others have covered, which is originally from Chinese origin, but now trying to move into Singapore, they have made a bigger splash with agent products. So there might be a bigger market within China and globally if DeepSeek can do something competitive on the agent front. But it's hard to say right now how much it'll be different from what's out there.
Seth Fiegelman breaking it down on DeepSeek. We so appreciate it. Coming up, finance app Revolut is now offering shares at a whopping $75 billion valuation. We're going to discuss how the firm seems to be pushing back going public to remain a private company. Meanwhile, let's just check in on some other Chinese names. BYD off by 4.4%. There's a Reuters report out there saying that the EV maker is scaling back how many cars it ultimately wants to be putting out to the market this year. The market had already front-run it. Maybe 4.5 million is where already we'd anticipated. We're off by 4% on the news after the earnings gave a shock drop in profit. This is Bloomberg Technology. It is time now for Talking Tech, and first up, Rednote saw its valuation surge 19% in just 3 months, hitting $31 billion. Now, the social media firm emerged this year as a real viable competitor to TikTok, which faces threats of a ban in the United States, remember. Some Rednote investors anticipate an imminent IPO. Plus, SK Hynix is set to pay $2.7 billion in bonuses to quell labor tensions. Now, the company's labor union has approved a landmark agreement allocating 10% of the company's annual profit to a bonus pool of its 33,625 employees. For 2025 alone, employees could receive nearly $80,000 in bonus. And NVIDIA's venture capital arm is set to invest in Honeywell's Quantinuum for the first time. NVIDIA is the latest big-name backer behind the quantum computing company, with the latest investment set to value Quantinuum at $10 billion. Ed.
All right, this week, British finance app Revolut offered a secondary share sale with a $75 billion valuation. We covered it on the show. Bloomberg's learned that Revolut is putting in extra work to remain private while retaining talent and appease some of its VC backers. Let's get out to Bloomberg's Tom Metcalf, who's been following the company. So this is like some financial engineering, like different valuations on different transactions. But there is one big point here, which is that Revolut wants to stay private. Why?
Yeah. Exactly that. It's the age-old story of, you get a little bit more flexibility as a private company, and if you can pull off quite a tricky task of keeping those investors happy, your employees happy as well, then you're able to, I think, do get a competitive advantage against any public peers. There's very few sort of startups that can do this. They always grab the attention, but it's that blended valuation that's really interesting. There is a little bit of kind of give and take here, like on the primary, they're giving out a lower valuation, employees getting a pretty decent one, and then they actually are buying back some shares from a very select class of investors at a different valuation as well.
And a $45 billion valuation, but that's probably a lot of upside if you've been a very early investor. But more broadly, I mean, you cover the billionaires here, right? The CEO really does seem to be up there in terms of his own valuation as a billionaire now.
Yeah, exactly. I mean, I remember, it's been years now since I've been tracking these folk. And, when Stronsky first came out, you've seen Revolut go through a whole range of valuations. But unlike Klarna, which is sort of the other European startup I always kind of compare it with those paper valuations. It should be clear they're on paper, so until that crystallizes, it's a long way off, like kind of money in the bank, I suppose. But whereas Klarna had a very much a roller coaster ride, is now just about to IPO. Revolut always seemed to be in a position where it could pick and choose when it could go out for new money, so its valuation has very much been steady, or in recent years or even months has jumped. So it was 33 billion, then 45, now it's hit 65 and now 75, but that's on a secondary valuation, of course.
Nick Stronsky, 201st richest person if you're basing it on that $75 billion valuation. Bloomberg's Tom Metcalf, brilliant to have you. Thank you. Coming up, we're going to be speaking with the HPE CEO, Antonio Neri. Joining us on earnings, we're going to be digging into that server margin in particular from New York and San Francisco. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's get straight to earnings now, because shares of HPE, they are trading higher throughout this morning. The company reporting fiscal third quarter earnings that did show operating margin in the server unit had narrowed, but the CEO, Antonio Neri, on the call telling investors, look, it's going to return to roughly 10% by the end of the current period. Well, now we've got him here to explain it a little bit more. HPE CEO Antonio Neri. We're going to get into how you're building out this business, how Juniper adds to the networking side. But for now, the AI systems, the server unit, how is profitability to improve?
Well, good morning, Caroline. Thanks for having me. We are very pleased with our quarter. It turned out to be very solid with record-breaking performance on revenue, and we expanded profitability sequentially. And to your question around the server segment, we deliver what we said we will do, but most importantly, our traditional server business returned to historical level. And so when I think about Q4, we're going to see a return to approximately 10% for the quarter because of that momentum in traditional servers, which, by the way, grew double digits year over year, and the balance of AI mix between sovereign and enterprise, which now represent more than 50% of our orders compared to the service providers.
So the AI server bit, is that set to improve? How more broadly is the AI systems profitability improving as we see this monumental build-out of infrastructure?
Well, as I think about the AI servers, I think it's important, Carol, to think about different customer types and how we participate in each of the segments. So we think about the service providers and the hyperscalers and the model builders, where a lot of the capital expenses are taking place, to your point. We are now going to lead with networking for AI. We are extremely pleased. We closed the Juniper transaction. Juniper is already a reference in many of those build-outs. And that's how we're going to lead in that particular segment of the market. And we're going to sell the server compute platforms with our partner, where it makes sense from a profitability perspective. But what we saw in the last couple of quarters, in particular this quarter, sovereign and neoclouds and enterprise now represent more than 60% of the market. There we participate in a slightly different approach, which the margin profile is different. We lead with a rack scale integrated architecture for the sovereign space, and we lead with an integrated solution for enterprise. Enterprise grew for the 7th consecutive quarter, and we doubled the number of logos. And then in sovereign, we grew more than 250%, and we won some marquee deals in the Middle East.
Antonio, that might be the answer, actually. I've studied the traditional server business and the storage business, and you're doing better than your peers, Dell, NetApp. But why are the dynamics better for you when you have these analogous businesses with those other names I mentioned?
Is multiple things. First, in the enterprise traditional server, we see a refresh cycle taking place for edge infrastructure with more richly configured servers. And we have two phenomenal platforms, which is HP ProLiant Gen 11 and Gen 12. We did a fantastic job in really hitting the sweet spot of the market with better performance per core, lower energy consumption, better security, quantum proof for that matter, and true workload optimization. And so now, as we go to the Gen 12, that AUP continues to grow, and the ability to attach services is much higher. As I go to the storage business, we really transformed the entire industry, in my mind, by deploying a consistent architecture, whether it's structured data, block storage, or whether it's unstructured data, which you need for AI, and that's what we call the object data with file ingestion. So the customer can do one investment with a peace of mind as they grow their data needs for AI. So I think that's what's resonating in the market, but ultimately we have a fantastic go-to-market. We play in 172 countries, and that reach together with our partners is a major differentiation, in addition to the fact that GreenLake provides true AI-driven lifecycle management and observability.
Those are the things specific to you. Antonio, would you give me an outlook for enterprise IT spending? And because we have a lot of macro uncertainty right now, and you must see in the pipeline that how that uncertainty is really manifesting.
I will say, based on our pipeline, first of all, is solid across the three segments we participate: network and server and hybrid cloud. It is uniform across the three geos. There was another question in another interview I did, how North America versus others are doing. North America did very, very well for us this quarter. And so I think the demand will continue to be there. Every enterprise has to modernize and deploy AI. We as a company are deploying AI very extensively, and we see the productivity improvements across many functions and many businesses. So that will continue. But at the same time, there is a way to modernize the legacy by freeing up space, power, and cooling so you can deploy this new technology. So we are very confident about the outlook. And with Juniper, that outlook becomes even stronger because now we have a complete portfolio networking that makes us unique as we want to build the best networking business in a modern, secure, cloud-native, and AI-driven portfolio.
And you're expecting to cut costs. I think we're seeing $600 million in cost savings are expected by that combination, Antonio. Cost savings are necessary for many businesses right now as you think about some of the pressure from tariffs. Your bird's eye perspective on how much that's implicating your business right now.
You have to have a mindset of continuously transform the company. That's a fact. And, the future belongs to the fast, I said all the time. But at least $600 million in synergies is related just to the Juniper transaction. And I reiterated that yesterday. And then there is an incremental $350 million through three key strategic levers: continue to optimize our portfolio, continue to optimize our workforce, and aggressively deploy this set of technologies. And at the core is not just a cost takeout, is a way to improve experiences and become more efficient and agile in this market, which you have to react in the moment. So we are very encouraged about what we're seeing, and Juniper actually gave us the opportunity to rethink some of the processes we have had for a long time here.
Antonio, I ask you this every quarter. How's the relationship and partnership with NVIDIA? But as Jensen Huang would see it, right, for the supply chain and the partners, they give great visibility to future iterations of product, right? They commit to the annual cadence of new GPU. They're increasingly involved in the networking through NVLink. Is anything changing for you because of the way that NVIDIA operates generationally, technology to technology every year?
We have a fantastic, strong partnership at the company level and at the personal level. Jensen is available in the moment. If I need something, he picks the phone and we chat and we solve it. But I will say the following. I think from a collaboration perspective, from a co-engineering perspective, the proof of that is our AI Factory for Enterprise with our private cloud AI. We actually took a very different approach together with NVIDIA. We integrated the entire NVIDIA AI suite of software inside our GreenLake cloud. We took a software down into infrastructure, and together we provide an integrated solution for our enterprise customers. That's a testament how you co-engineer, despite the fact a lot of the value is on the GPU, but reality is the software and the experience that you deliver. On the other hand, now with networking, we have another set of opportunities because above the NVLink and the Spectrum X you referred to, you need a full data center architecture. NVIDIA does not participate into that. Our major competitors obviously are Cisco and Arista, but Juniper has become the reference for many of these large AI deployments. But I do believe together with NVIDIA, we can do a better job in the way we deploy that CapEx, and we run that infrastructure from an OpEx perspective using AI technologies, for that matter, in full managed network. So we are very excited about that. And look, in the last quarter, we announced new innovation together with NVIDIA, the RTX 6000 Pro, the latest Ultra, Blackwell. We are committed to be time to market with Jensen and team.
I'm interested by the adoption of generative AI by the companies that are helping it become a reality. Of course, it benefits your share price, which is near a record high, Antonio. But how is it benefiting your employees? Or indeed, how are the pilots running? Because there's been a lot of questions about whether there's been efficacy there since the MIT report.
Yeah, I think it's fair to say, Caroline, we went from generative AI to agentic AI. And I think about agentic AI as the next evolution for what really enterprise needed. And my view is that agentic AI will transform business processes by simplifying them, automating them, and then bring intelligence to it. In our company, we are using agentic AI aggressively in our offers. So GreenLake Intelligence, which we announced in June, is one of the most comprehensive clouds that includes agentic AI and observability in the way they deploy and manage infrastructure and so forth. On the other hand, as a company, we are deploying agentic AI across finance. Our CFO is incredibly aggressive on this. So she's on the leading edge on this. Our marketing team uses for demand generation and brand campaigns and targeting segments where it makes sense. And our services team is used to provide better support experiences. In our supply chain, we use it for forecasting and planning. And there is many other examples of that. And so I think this generative AI now became agentic AI. In the future, of course, will be the robotics part. But the productivity level we're seeing is pretty significant. And we are not proof of concept. We have deployed more than 60 use cases across the company, and we have more than 200 in testing as we speak. Some will fail, Caroline, and that's fine. And the mentality there needs to be fail fast and improve and focus on our return on invested capital.
Antonio, you've been CEO since the start of 2018. Where does HPE sit today relative to your big vision for what HPE is, can, or should be against your peers?
When I became CEO, Ed, I had the vision to be an edge-centric, cloud-enabled, and data-driven company. We invested at the edge, was the Aruba acquisition, and we delivered tremendous value for our shareholders from $750 million revenue all the way to over $5 billion. And obviously now the next move was the acquisition of Juniper to make this company a networking-centric company, because I believe the next AI era here is the convergence of networking, cloud, and then obviously the business process that we all run as an enterprise. And that to me is the core foundation that have been envisioned for our company going forward. And on that core foundation, we deliver the best cloud and AI experiences. So it's continued to be shaped. I'm very pleased with the progress. But let's not forget, it's not just the vision itself. It's how you execute with a culture and a set of values that makes us unique. And HP has been recognized also along the way as one of the best places to come and work by many surveys and magazines and institutions. So my view is that we are shaping that future, but ultimately it's about delivering shareholder value. And we are going to be positioned for the next 3 years to accelerate that value, as you see today, because our stock price still undervalued in terms of multiples. Our goal is to deliver that value, accelerate it for our shareholders, and be relevant to our customers in this new environment we live in.
I should have just asked you if your stock price was undervalued. Antonio Neri, President and CEO of HPE. We'll leave it there, but a really robust conversation. Thank you very much. Now, coming up, tech leaders are set to gather at President Trump's brand new Rose Garden for a discussion about AI. We're going to have more on that next. This is Bloomberg Tech.
Trump and the First Lady, well, they're set to host a group of tech leaders at the newly renovated Rose Garden. Those joining include Mark Zuckerberg, Tim Cook, Satya Nadella, for an event on AI education. Bloomberg's Catherine Lucy joins us now. This really is a powerful Rose Garden meeting.
Yeah, it's quite a lineup, right? A lot of bold-faced names are expected, both for a event with as you said, with the First Lady around AI and children, but also for a reception the president is hosting on the newly repaved Rose Garden, which he has made clear he wants to use more as a space to host gatherings at the White House.
Catherine, I went to DC for the winning the AI race speech the president made. So while this is, it's a nice thing with the CEOs go, at the heart of it, what is this administration's attitude to AI? I feel like there has been a lot of traffic of leaders from California, Silicon Valley going to the White House to discuss that issue.
Yeah, the president and his administration have made very clear they are interested in investing in AI. They have put out a big action plan around AI. They have had a lot of tech CEOs in, not just today, obviously, but throughout this year, as they look for ways to invest in manufacturing, to invest in domestic production to support tech centers. They've also been closely aligned with chip manufacturers. So there's been a lot of activity in this space throughout the year.
Bloomberg's Catherine Lucy with the reporting. Thank you very much. To stick with recent news from the Trump administration, the president has torn up a Biden-era compromise that allowed some of the world's biggest chip makers to maintain operations in China. I want to get out to Bloomberg's senior editor, Mike Shepard. We're talking about validated end-user authorizations, or VEUs, and there's been this pipeline of breaking news announcements around it. There's a little bit of pressure on the chip stocks. Why are we focused on what the president's doing in this domain?
Well, this ends this so-called blanket waiver that had allowed the companies Samsung, SK Hynix, and TSMC to avoid becoming collateral damage, Ed, in the U.S. effort to rein in China's artificial intelligence ambitions. And that effort has included imposing export restrictions not only on U.S. companies, but also on businesses in Europe and elsewhere that supplied those makers with facilities in China. Samsung and SK Hynix are South Korean companies, and they do have facilities in China. And even though they are not Chinese flagged, they were nonetheless targeted by potentially these export restrictions. So the waivers were designed to spare them from feeling the brunt of it. And it would allow them to ship in semiconductor manufacturing equipment, materials, chemicals, and things needed to keep those plants running. And it was really critical for Samsung and SK Hynix to have that ability to not have to go to the U.S. government for permission every single time they needed to make a shipment. It allowed them to keep those facilities running, and it has become a complication for them and for their suppliers too, Kara.
I mean, what a labor impact it's going to have. I mean, we see the U.S. government trying to brush it off. It's going to be easy to facilitate. But remind us of why the current administration was so worried about this particular loophole, as they call it.
Well, Kara, I mentioned data leakage, and that, of course, the idea that tech from these factories could somehow leak into the Chinese market and that China would be able to somehow copy or mimic or use this technology in some fashion or these materials in some fashion, learning the know-how. But there is also another factor. We're seeing more than just South Korea and Taiwan getting caught up in the tug of war between the U.S. and China. This is also a tug of war with allies, with South Korea and Taiwan and the U.S. over competition, over trade. The Commerce Department made clear that, look, they see this as a question of leveling the playing field, not just with China, but with companies from South Korea and Taiwan. They want to make sure that advantages given through these waivers are also not unfairly putting U.S. companies in an unfair position themselves. So this is why the waivers have ended, and it's going to set up 4 months of intense negotiations for these companies to figure out how to proceed.
Bloomberg's Mike Shepard. We thank you from Washington. Now, coming up, French AI firm Mistral is solidifying its position as one of Europe's most valuable tech startups. We talk about the funding that's going on now. This is Bloomberg Tech. French AI startup Mistral is in talks to raise a new investment that will value the company at $14 billion. Bloomberg's Kate Clark joins us now with the story. It's a higher valuation. This is really the French startup, the European version of OpenAI.
Exactly.
Has it got any niche at all to compete against the rest?
It's developing open source models, so that's its niche, but it's also a European company, as you said. So perhaps people in Europe would prefer to use a European homegrown AI company as opposed to ChatGPT or Anthropic's Claude.
It's interesting where the capital's coming from. It's also, based on the news flow of this week, $14 billion is modest, right, Kate, relative to Anthropic?
That's exactly right. I was thinking, wow, this seems cheap compared to Anthropic's $183 billion valuation and OpenAI's $500 billion valuation.
Is there any crossover in some of where the capital's coming from at the moment? Because we all focused on the fact that Anthropic kind of went to the Middle East when many thought they wouldn't.
Exactly, and we don't know who's leading this Mistral round. I have been told it is not likely to be a Middle East investor, but we'll see, and we're doing that reporting to find out. But it does have several U.S. venture capital firms that are backers of Mistral. Andreessen Horowitz is one of the major investors, which is also a firm that is invested in other U.S. LLMs.
Very quick, Kate, just summarize demand. I'm seeing a lot of news flow, deal flow, primaries, secondaries. The appetite's still there for these AI startups.
There is an incredible amount of appetite for these AI startups. Words cannot really even describe how much appetite there is for an OpenAI and Anthropic, even a Mistral. Investors are extremely excited to put their money into these large language models and into the application layer AI companies.
Bloomberg's Kate Clark, great reporting as always. And yeah, there's a lot going on. Caro.
That does it for this edition of Bloomberg Tech, where there is insatiable demand for content, whether it be on OpenAI or Mistral and many others.
Yeah, hardware or software, we got it all. So check out the podcast. You know where to find it on the Bloomberg terminal, as well as online on Apple, Spotify, and iHeart. From San Francisco, New York City, this is Bloomberg.
almost 10% for the year, down 9.5% for the greenback. So we continue to talk about weakness in the USD. And then Brent, all eyes on this OPEC Plus, a group of OPEC Plus. The voluntary cutters are going to be meeting, a virtual meeting this weekend. There is talk potentially about this other clip of 1.66 million barrels per day that they've been taken off the market. Maybe they'll start talking about bringing it back, but of course, fundamentals will dictate where we go from here. And many in the analyst community are expecting to see a supply glut on the oil side in the coming months. So keep an eye on the OPEC Plus decision this weekend. Okay, let's also check in on how markets in Asia are faring. Annabelle Jewelers is in Hong Kong. Annabelle.
Thanks, Jemani. I mean, I really think Asian markets are reflecting already those themes you were talking about. It's all about the Fed, what the Fed does, but the US jobs report coming up later today. So just talking through some of the dynamics, I mean, you can see here sovereign bonds, for instance, you're seeing that general pullback in yields. It echoes what we had with the 2-year Treasury that, again, retreated overnight down to its lowest level in around a year. You saw dollar weakness, for instance. That's playing out because you're seeing a lot of Asian strength in the currencies today. And also what we're seeing in terms of stocks, because Taiwan dollar is up, we're actually seeing more inflows coming into Taiwanese equities. So that benchmark has been one of the gainers in the session. You can see here futures, for instance, up 1.1%. Japan also one of the standouts. We had President Trump signing an executive order to bring that tariff deal or that trade deal into effect, and watching China very closely today, given you've got that maybe day 2 reaction. We had the Bloomberg scoop yesterday. Lots of questions around regulators. Would they be looking to step in to try and cool down that rally? We haven't really had any concrete steps just yet. Maybe there's been sort of a self-correction in the market, but still we're high for a first session, reversing some of the earlier losses from yesterday. It is interesting to note, though, as we do await these jobs figures, just how much volume we're seeing. Because if you pull up the AVAT function, for instance, you can see that we're off the 20-day moving average. And so that just tells you, I mean, maybe there's a little bit of caution in the market. Investors really want to see what these jobs figures tell us in order to know what the Fed is going to be doing next as well.
Yeah, and it's almost one of those cases where as U.S. stock markets continue to make record highs, liquidity volumes are drying up. There's less participation in those moves. So we're going to talk about that and more. Annabelle Jewelers in Hong Kong, thank you so much. Well, bond and currency traders are bracing for this crucial jobs report that is due in just a few hours. The data is expected to shape market expectations for Fed policy. Joining us now is Gareth Nicholson, Chief Investment Officer and Head of Managed Investments at Nomura International Wealth Management. Good to have you with us, Gareth. Let's talk about today's print. I feel as though the market whisper is probably a low number. Expectations are around 75,000, but given last month's shock, we're probably all biased towards seeing a weaker number today. What do you think the market reaction would be if we get a slightly lower print than that 75,000?
Lower than 75? Wow. Okay. I think you're right. Like, normally what we're looking for is the change. Is it an increase or a decrease from the previous month? But you're right. Now it's about what the absolute number is. If we're less than 100,000, that would be the fourth print in a row. That's very telling. I think that would almost guarantee, from a market's perspective, a rate cut. If we're less than the 75, like you're talking about, I think that starts moving the question into, is this an insurance cut or is this a growth scare and the Fed is behind?
Okay, so a 2-week number would actually constitute a growth scare.
Yes.
It would constitute a change in narrative, do you think?
And then equity's going to start thinking, wait, maybe our price to earnings isn't pricing in this growth scare. We might get a bit more of a sell-off. So the sweet spot is between 75 and 100, we believe. Anything less than that, we're going to start worrying about, is the Fed behind? How far are they behind? Are they going to have to start cutting quicker? What's going to happen to the market? Are we thinking recession? And then the market, we run ahead a little bit too quickly. So I think the absolute number today is going to be very interesting.
Okay, so all of that is going to impact the front end of the curve and what's priced in. 10-year yields plus, you know, that's all been in focus earlier this week. And a couple of days ago, everyone was talking about the global big fixed income bond route. And now we're sitting at lower levels than when we started the week. 10-year Treasury is actually at 4.15, another big rally yesterday. What's your view on market direction from here in the 10-year part of the curve?
Well, long bonds. I think long bonds, like you said, 10-year and above is going to be the most interesting for traders. That's going to get the most bang for its buck. But really, I think it's going to come down to credibility. So in the US, there's credibility around the Fed, around what the president is interacting. There is new interviews going on for potential Fed chair. In France, you've got the vote of confidence coming in next week, which is also going to put pressure on the long end. Japan 30 years bonds are at the highest level we've seen in multiple decades. And I think this is all coming down to Does the market believe that central banks can control this level of debt, can control this supply that they need to keep the wheel turning? And there's questions there. So steepening of the curve is our base case.
Yeah.
That's going to put pressure on many different parts of government to fund the future. And it's quite nerve-wracking because that is normally seen as a foundation for markets, and it is shaking a little bit.
Yeah. How much of a systemic impact do you think the French budget issue could have? The confidence vote is coming up next week, obviously, and the government there is expected to collapse once again, raises lots of questions about who the next PM is going to be, possibly elections. You know, all of that is very domestic French story. But there has been an impact and a visible footprint on the bond market. Is that likely to affect other European bond markets as well, or is it going to be rather contained to French spreads?
The way we're thinking about it is when we looked at what happened in the UK around
the mini budget?
Exactly.
Yeah.
That was a local issue that kind of ran away from itself, and we saw a lot of pressure being put out. Now you've got the second biggest economy in Europe, potential conflict there. You already started seeing spreads between France and Greece being highlighted. That's something you wouldn't have thought of. So I think it's going to put a lot of pressure on that space. And we know that Europe needs to do a lot of funding. They've got defense funding to do. They've got a lot of infrastructure funding to do. So they need access to funds. And if the long end is going up, that's going to make it a lot harder, particularly in the second biggest economy. So also very important to keep an eye on that and make sure that doesn't run away.
Let me bring it back to equities and something that my colleague Annabelle was pointing out, and the fact that with the Asia Pacific MSCI, and I think it's the same theme with the S&P, even though we get higher and higher and we're ticking higher, the volumes accompanying those sequential highs and record highs, and when it comes to the S&P, have been thinning out. And I just wonder whether, from your perspective, the clients that you speak to are losing some of their long-term conviction vis-a-vis U.S. equities, or whether they feel like they're positioned enough and don't need to chase this rally any further.
I think a lot of our clients are overweight U.S. They have been for a long time. It's been a great trade. As you said, breadth is narrowing in where the performance is coming, volume is going down. We're also seeing, I mean, I don't honestly believe the NVIDIA earnings were bad by any means.
No.
I mean, they were pretty solid. But when you've got a PE ratio like that, you need amazing to see the same sort of level. So when you're getting to these kind of price to earnings, you need very, very strong numbers to come through. So top performing AI that can monetize, some of the defensive names, that barbell, we still see value. But there is a lot in between that needs rate cuts for insurance, not for growth scare. They need a few tailwinds to keep that momentum going. Our base case is it's still going to grind up higher equities for most of this year. But next year, it's going to be a lot harder to keep the momentum.
So I'm sure there's plenty of interest from your clients to invest in the AI world, right? And if you had invested in NVIDIA early on, well done you. But now, as you say, there's valuations, things are looking extremely expensive. You have to be a bit more discerning about which of these AI models, applications are actually going to be successful. How do you screen for them, and how can you ascertain at this point in time which ones are going to be the winners in the next few months or years?
Yeah, well, exactly. That is one of the hardest questions. For one, your earlier point, investors made so much money in NVIDIA in the stock, so they don't mind a bit of a drawback. Buying the dip is still going to be an environment that we're going to see. When you've just done so well for so long, it's going to need a serious scare for people to change their conviction. But any new money, people are saying, where is the next angle? Where is the next interest that's coming through? We're seeing interesting things around adoption of AI into robotics, into healthcare, even into energy efficiency that's playing out quite nicely. A lot of that is also maybe not focused purely on the US, but starting to move into China, into Japan. Those are areas that we're starting to see new money moving out. Or if you've got maturing money out of credit or the like, that money is not really staying in the US. We're starting to see the rotation.
Yeah, ties in nicely to a Bloomberg scoop we're going to cover later on the show, which is that DeepSeek are looking to develop their own AI agent. So again, you know, the focus could be shifting east. Gareth, really good to chat to you. Gareth Nicholson, Nomura International Wealth Management CIO and Head of Managed Investments. Now for a look at some of the other stories we're following. President Trump's pick for the Federal Reserve Board of Governors has pushed back against Democratic concerns that he would do Trump's bidding at the central bank. At his confirmation hearing before the Senate, Stephen Miron affirmed his commitment to Fed independence and pledged to make decisions based on his own analysis. But there were concerns about Miron's decision to keep his White House job while at the Fed.
I have received advice from counsel that what is required is an unpaid leave of absence from the Council of Economic Advisors. And so considering the term for which I'm being nominated is a little bit more than 4 months, that is what I will be taking. As long as that is the advice of counsel, I'll follow the law.
Well, your independence has already been seriously compromised by your statement. You are going to be technically an employee of the President of the United States, but an independent member of the board of the Federal Reserve? That's ridiculous.
Sources say President Trump will rename the Department of Defense to the Department of War. It's a moniker that has not been used since the 1940s, and Trump is expected to sign an executive order on this today. Now, the changes include renaming the Pentagon's briefing room to the Pentagon War Annex and modifying the department's website and signage. Bloomberg has learned the U.S. Justice Department has opened a criminal investigation into whether Federal Reserve Governor Lisa Cook committed mortgage fraud. Sources say federal prosecutors have issued subpoenas seeking information related to the allegations. Last month, Trump moved to fire Cook before she sued the administration to stay on the job and maintained she never committed mortgage fraud. Still ahead, the oil market remains on edge as investors look ahead to an OPEC Plus meeting this weekend. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersace in Dubai. Well, oil fell for a third day, heading for a weekly decline ahead of an OPEC Plus meeting that may see the group sign off on another supply hike. Brent crude futures have retreated by 11% this year due to concerns about a global glut.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with trade this morning and the latest announcement from President Donald Trump. As heard live on Bloomberg Radio, the president says tariffs on semiconductor imports are coming soon.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff.
President Trump says the levies could spare companies like Apple, which have pledged to boost investments in the United States. The president previously suggested the tariff rate on chips could be well above 100%, reaching potentially 200 or 300%.
Well, Nathan, President Trump was speaking at a White House dinner attended by some of the world's biggest tech leaders. The guest list ranged from Apple's Tim Cook, OpenAI's Sam Altman, and Google's Sundar Pichai. And sitting beside the president was Meta's Mark Zuckerberg. He was pressed by the president on the company's U.S. investments.
How much are you spending, would you say, over the next few years?
Oh, gosh. I think it's probably going to be something like, at least $600 billion through 28 in the U.S. Yeah.
It's a lot.
Meta's Mark Zuckerberg speaking at the White House. Earlier Thursday, many of the same executives joined First Lady Melania Trump for a discussion on AI.
And we have a major new development potentially in the AI space this morning, Karen. We've learned that OpenAI is partnering with Broadcom to design and produce artificial intelligence chips in what would be a direct challenge to NVIDIA. Bloomberg News is reporting the first accelerator chips will begin shipping next year. Broadcom CEO told investors on his latest earnings call that the company's AI outlook will improve significantly next year, with expected revenue from semiconductors to reach more than $6 billion in the fourth quarter.
Nathan, let's turn to the economy now and today's critical jobs report, which could cement a rate cut at this month's Fed meeting. Markets are currently pricing in a quarter-point cut in September. And speaking at a fireside chat yesterday, Chicago Fed President Austin Goolsbee said the number will be important, but stressed he's looking at a broad range of data points.
I'm one of the data dogs, so you're never going to hear me say throw away a number and pay no attention to it. But I'm just going to index on that number tomorrow morning a little bit less than we normally would.
Chicago Fed President Austin Goolsbee says if the job market shows further deterioration, it could be a sign to loosen monetary policy. The August jobs report drops at 8:30 Wall Street time. Please stick with Bloomberg for live coverage of the data on Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio and the Bloomberg Podcast page on YouTube.
Well, Karen, Goolsbee's not the only Fed speaker talking about rate cuts. New York Fed President John Williams says the central bank is facing a delicate balancing act when it comes to policy.
We need to keep the labor market in balance to ensure that the effects of tariffs do not spill over into a longer-lasting broad increase in inflation. On the other hand, maintaining a stance of too restrictive policy for too long could increase risks to our maximum employment mandate.
New York Fed President John Williams says the impact of tariffs on inflation has been less than originally feared. He says the labor market is undergoing gradual cooling consistent with a slowdown in the economy.
And we turn now to New York City's mayoral race. The New York Times is reporting, Nathan, that Mayor Eric Adams told confidants that he's weighing job opportunities that would prompt him to abandon his reelection bid. Reports indicate Adams had been in talks with advisors to President Trump about a potential job if he quits the race, which he's denied. President Trump weighed in on the race at the White House last night.
I would like to see two people drop out and have it be one-on-one, and I think that's a race that could be won.
The president emphasized he'd prefer not to have a communist mayor of New York City, referring to current Democratic frontrunner Zohran Mamdani. For full transparency, Michael Bloomberg, founder and majority owner of Bloomberg LP, the parent company of Bloomberg Radio, has endorsed Andrew Cuomo in the mayor's race.
On Capitol Hill, Karen, there were plenty of fireworks at multiple hearings, one involving President Trump's Fed pick, Stephen Myron. The president selected as chair of the White House Council of Economic Advisors to fill Adriana Kugler's seat on the Fed board. Democrats raised concern that because Myron says he wants to keep his White House job while serving at the Fed, that could compromise central bank independence. Myron addressed those concerns during Bloomberg's live coverage of the hearing.
The president nominated me because I have policy views that I suppose that he liked. If I'm confirmed to this role, I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data, my own personal analysis of the effects of economic policies upon the economy, and act based on my judgment of the best economic policy possible.
Stephen Myron says he spent much of his career studying monetary policy. Last year, he wrote a paper detailing numerous proposals to overhaul the Fed.
Meanwhile, Nathan, Health and Human Services Secretary Robert F. Kennedy Jr. was criticized by Democrats and some Republicans at his hearing. Senators challenged Kennedy's changes to federal health agencies, including overhauling a key vaccine advisory panel and slashing U.S. support for global immunization efforts. He had a heated exchange about COVID with Democratic Senator Mark Warner of Virginia.
There was so much data chaos coming out of the CDC, and there were so many perverse incentives. And these are model
you don't know the answer of how many Americans died from COVID. This is the Secretary of Health and Human Services.
Senator Mark Warner addressed the hearing with Bloomberg afterwards.
This guy promised that he was going to follow science, not, across the board fire experts. He's on it feels like a purge against any of the respected scientists.
Virginia Senator Mark Warner was speaking on Bloomberg's Balance of Power. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. First game of the NFL season had a lightning delay in the third quarter. The Cowboys and Eagles scored a lot of points before the delay, none afterwards. The Eagles won it 24-20. At the U.S. Open, women's singles semifinals, and Aryna Sabalenka and Amanda Anisimova both won, both lost the first set, won the next two they'll play in Saturday's final. The men's semifinals are today. Caitlin Clark, due to the groin injury, will miss the rest of the WNBA season. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
Are you looking for a new podcast about stuff related to money?
Well, today's your lucky day.
I'm Matt Levine.
And I'm Katie Greifeld.
And we are the hosts of Money Stuff, the podcast. Every Friday, we dive into the top stories about Wall Street, finance, and other stuff.
We have fun, we get weird, and we want you to join us.
You can listen to Money Stuff, the podcast on Apple Podcasts, Spotify, or wherever you get your podcasts.
कहीं सीलन की बूंदें आपके घर में भी संगीत बनके ना गूंजे, इसीलिए घर बनाएं ACC गोल्ड वाटर शील्ड सीमेंट के साथ।
And Tim, how much money will Apple be investing in the United States? Because I know it's a very lot, and it's, you were elsewhere, and now you're really coming home in a big way. How much money will you be investing?
$600 billion.
$600 billion. All right. It's a lot of jobs.
We're very proud to do it.
That's great. Thank you very much.
Thank you.
Appreciate it.
Thank you, sir.
Hearing there from the U.S. president hosting tech executives at the White House. And of course, we've been hearing that mutual praise being lapped upon each other from these tech executives. They're also talking about how Trump has provided a lot of support for the AI sector. China never far from their minds. Trump said that the U.S. is leading China by a lot in that regard. We also heard how the BLS data, when asked a question, the U.S. president said that the real numbers will be in a year from now. Let's bring in Bloomberg White House reporter Laura Dezensky. Lauren, we're hearing a very positive tone from everybody at the table, and it's mutual from Trump towards the tech executives as well. What was your key takeaway from all this?
Yeah, this is such a classic Trump event. It's an opportunity for CEOs, American bred, these are classic American companies. It's a chance for Trump to get all of them in a room in front of cameras and have them talk about how great Trump is and how significant their investments are. And it goes both ways, too. Trump is saying that, he's very proud of Google. He's seated next to Meta's Mark Zuckerberg. It's really just, it almost kind of reminds me of The Apprentice a little bit, where it's all of these people who are working for and on behalf of Trump and investing in the U.S. And, Trump also has the opportunity to give them a little bit of red meat and a little bit of something that these CEOs are looking for as well. Proximity to the president helps and is a good thing for these CEOs. When you're on the president's good side, he's much less likely to tank your stock with some errant Truth Social post. We had him discussing the significant investments from these companies and really praising these CEOs in very personal terms. Again, saying that he's proud of someone, that's not very formal speech. And again, it just goes back to being such classic Trump. It's also worth noting that he talked about Chip's tariffs. Our man in the room, Josh Wingrove, asked, what what's happening next with tariffs on semiconductors and chips. And obviously the industry is really waiting for any details there. We didn't get a whole lot necessarily. Essentially, the president is saying that it will be fairly substantial, but not that high. So it's up to, insiders to figure out what exactly that means. But it's a little bit of reiteration as well. It's Trump saying that if these industries or if these companies plan to come here, they won't be subject to the tariff. If they're building here, if they plan to build, no tariff. He also mentioned that Tim Cook will be in pretty good shape, which is classic Trump in that, what does that mean? The specifics are obviously a little unclear, and we'll have to see what happens there. And I know our Bloomberg reporters will be all over the next steps.
ओके गाइस, इंडियन मार्केट तो हो गया क्लोज। कॉमोडिटी मार्केट फ्राइडे है, पूरा फ्राइडे ही बना रहा है, कुछ मोमेंटम ही नहीं है। मोस्टली मुझे लग रहा है न्यूज़ का ही वेट है शाम को। अनएम्प्लॉयमेंट क्लेम्स का जो डेटा आने वाला है दैट इज़ मोस्ट इम्पॉर्टेंट। अभी तक नहीं तो मोमेंटम कर ही देता है ये। लेट्स सी थोड़ा बहुत अगर मोमेंटम अब आता है तो ऐसे कम्प्लीटली साइडवेज। LOI है आपका लेवल ऑफ इंटरेस्ट। ठीक है, बैंक निफ्टी को देखोगे दोनों ही मॉर्निंग पे न्यूज आई, अच्छा फॉल किया, लोअर एंड पे बॉटम बनाया, दोनों ही फ्यूचर ने 15 मिनट में रिकवर किया। तो जहां ओपन हुआ था वहीं क्लोज हो गया, फ्लैट ही क्लोज हुआ है। कोई बहुत ज़्यादा पॉजिटिव या नेगेटिव क्लोज नहीं हुआ है, ना निफ्टी ना बैंक निफ्टी। निफ्टी थोड़ा सा फिर भी, बैंक निफ्टी ऑलमोस्ट न्यूट्रल है। तो सुबह सुबह जो न्यूज आ रही थी उसका इम्पैक्ट है। अब देखना पड़ेगा, आज बड़ा इंपॉर्टेंट डे है, क्योंकि अगर आज कल और परसों, क्योंकि कल और परसों तो मार्केट वैसे भी क्लोज है, अगर आज कल या परसों में US के प्रेसिडेंट ने इंडियन आईटी सेक्टर्स या आईटी कंपनीज पे लगा दिया कुछ टैरिफ वगैरह, तो परसों फिर से एक बहुत बड़ा गैप डाउन होगा। सो नीड टू सी क्या मॉर्निंग पे मंडे के दिन ओपन रहता है। मुझे लग रहा है शायद आज का डेटा का वेट करेंगे सभी लोग शाम को, विच इज़ वेरी इंपॉर्टेंट फॉर टुडे, या अनएम्प्लॉयमेंट क्लेम्स और एम्प्लॉयमेंट चेंज दोनों ही इंपॉर्टेंट है। क्रूड भी साइडवेज है, नेचुरल गैस भी साइडवेज है। लाइक भी करते रहो गाइस, अननेसेसरी रिस्क मत लेना, ठीक है? मोमेंटम आएगा तभी ट्रेड करना, नहीं तो ऐसा लेट ही हिट होंगे और कुछ नहीं। क्रूड ऑयल देखोगे रेंज के अंदर ही है, कल भी रेंज के अंदर ही क्लोज हो गया था, आज भी रेंज के अंदर ही है ना, ऊपर निकल रहा है ब्रेकआउट करके ना नीचे, तो रेंज ब्रेक नहीं हो रही है। जब तक रेंज ब्रेक नहीं होगी लेना बहुत रिस्की है कुछ भी बाई या सेल करना। बाकी कैंडल को देख के पता चल रहा होगा कि आपको मोमेंटम ही नहीं हो रहा है। नीचे एक सपोर्ट है, वहां पर भी नहीं आ रहा है एग्जैक्टली क्रूड, और नेचुरल गैस भी ऊपर के रेजिस्टेंस पे पता नहीं क्या करने की सोच रहा है, ब्रेकआउट ही नहीं हो रहा है ऊपर के रेजिस्टेंस का भी, स्टिल होल्डिंग दैट रेजिस्टेंस एरिया। ये 8th टाइम है आज, ये कल आया था 8th टाइम, सॉरी दिस इज 9th टाइम इस लेवल को हिट कर रहा है 15 मिनट टाइम फ्रेम पे, ये 9th टाइम है। कि जब भी ब्रेक करेगा मुझे लग रहा है काफ़ी बड़ा ब्रेक कर सकता है क्रूड ऑयल, अगर इसी तरह से साइडवेज रहा इसी लेवल पे, ब्रेक मतलब किसी भी साइड पे, अपर साइड पे या फिर इवन लोअर साइड पे। ठीक है, देखते हैं आता है या नहीं आता है, क्या करता है। नीचे 5530 के आसपास देखेंगे, अगर नीचे ही गिरता है तो। नहीं तो साइडवेज रहा तो वी विल लेट इट गो। बाकी देखो, नीचे आना तो है, इसको इतना कंफर्म मैं कह सकता हूँ, नीचे एक बार आना पक्का है। कोई न्यूज़ नहीं आती है तो डेफिनेटली नीचे आना चाहिए। आ ही गया है तो थोड़ा नीचे और आ ही जाए। ये टेस्ट तो नहीं किया इसने यार। ठीक है, रिस्क लेते हैं यहाँ पर, और क्या कर सकते हैं इसमें, कुछ फ़ायदेमंद कुछ है नहीं करने लायक अदरवाइज। स्मॉल रिस्क, नॉट मच, क्योंकि रेंज के अंदर फंसा है। नीचे सपोर्ट बहुत स्ट्रांग है, ब्रेक हो नहीं रहा, और नीचे ऊपर रेजिस्टेंस ब्रेक हो नहीं रहा है। तो एक छोटा सा सेलिंग का ट्रेड का, ऑलरेडी सेलिंग में है तो ट्रेल कर लो। एक सेकेंड। ओवरऑल साइडवेज ही है क्रूड, ध्यान रखना। ओवरऑल इट इज साइडवेज। रेंज के अंदर है, लेट्स सी, रेंज कहीं तो ब्रेक करेगा जरूर, नीचे या ऊपर। आई एम एक्सपेक्टिंग कि नीचे की ओर आ जाए थोड़ा, फिर सपोर्ट लेके ऊपर जाए, साइड भी ब्रेक कर दे तो एक थोड़े बड़े टारगेट के साथ। कोई न्यूज़ ना आए। याद रखना ऊपर ब्रेक करा तो भी बड़ा मोमेंटम, नीचे ब्रेक करता है तो भी बड़ा मोमेंटम ऊपर हमारे पास, क्योंकि फिर नेक्स्ट रेजिस्टेंस काफ़ी दूर है। जो कल एक्सपेक्ट कर रहे थे आएगा ना, ऊपर में आया ना नीचे एग्जैक्ट लेवल पे। ठीक है, नेचुरल गैस के लेवल को भी थोड़ा सा ब्रॉड कर देते हैं अब, क्योंकि ये भी लग रहा है शायद कहीं ना कहीं बड़ा मूव करने वाला है। ऊपर के लेवल भी टेस्ट हैं, नीचे के लेवल भी टेस्ट हैं। एक बार नेक्स्ट वीक का भी देख लेते हैं, नेक्स्ट वीक क्या क्या डेटा आने वाले हैं। ये वीक तो निकल चुका है ऑलरेडी, आज लास्ट डे है, 6th 7th मार्केट क्लोज। ओके, ओपेक जेएमएमसी की मीटिंग है नेक्स्ट वीक, वेरी इंपॉर्टेंट। संडे को मीटिंग है क्या ये? संडे को मीटिंग है यार ओपेक जेएमएमसी की। तो यहाँ से भी कुछ आउटकम आएगा संडे को ही हमारे मार्केट में, तो इम्पैक्ट मंडे को दिखने के लिए मिलेगा क्रूड ऑयल में। मंडे को कोई डेटा नहीं है, ट्यूसडे को भी कोई डेटा नहीं है, वेनेसडे को कोर पीपीआई का डेटा, क्रूड ऑयल की इन्वेंट्री। थर्सडे को ओके, थर्सडे को यूएस का काफ़ी इंपॉर्टेंट डेटा आने वाला है, यूएस का इन्फ्लेशन का डेटा है, सीपीआई और कोर सीपीआई, यूएस इन्फ्लेशन जिसे हम बोलते हैं, नेचुरल गैस इन्वेंट्री एंड कंज्यूमर सेंटिमेंट, इंपॉर्टेंट डेटा फॉर नेक्स्ट वीक। IDBI Bank is going to be private this year. देखो क्रूड ऑयल नीचे आ गया है। क्रूड ऑयल में यहाँ पर एक बाइंग का प्लान रहेगा। यहाँ से एक छोटा सा बाइंग का ट्रेड, ज़्यादा बड़ा ट्रेड नहीं रहेगा, छोटा सा ही रहेगा। कैंडल का ध्यान रखना, बस ओपन इक्वल टू हाई ना बने। Tesla offers unprecedented $1 trillion pay package to Musk. The long-awaited proposal sets a series of ambitious benchmarks Musk must meet to earn the full payout. Wow. $1 trillion pay package to Musk. Tesla inclusive proposed a new compensation agreement for Chief Executive Officer Elon Musk, potentially worth around $1 trillion, a massive package without precedent in corporate America. The long-awaited proposal designed to incentivize Musk to lead Tesla for years to come sets a series of ambitious benchmarks he must meet to earn the full payout, including expanding Tesla robotaxi business and growing the company's market value to at least 8.5 trillion from around 1 trillion today. The plan spans 10 years. The additional shares Musk could receive would push his stake in the electric vehicle maker to at least 25%, according to the terms details in Tesla proxy filing Friday. Musk has publicly stated he wants a stake of that size. The plan dangle a financial windfall and expanded control of the company to Musk, already the world's richest person after his 2018 package values in excess of 50 billion was struck down by a Delaware court while Tesla appeals the decision. The board is seeking other ways to compensate its CEO, including within internal stock award in early August valued about 30 billion. The incentives in the new plan aims to keep Musk focused on Tesla while it pursues growth in newer markets including robotaxis and artificial intelligence. Tesla share rose 2% on Friday New York Stock Exchange. I think one of the biggest package to any CEO, almost $1 trillion हो जाएगी worth of Elon Musk. Wow, $1 trillion. भी करते रहो guys, come on.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin this morning with the latest on trade and an announcement from President Trump heard live on Bloomberg Radio last night. The president says tariffs on semiconductor imports are coming soon.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff.
President Trump says the levies could spare companies like Apple, which have pledged to boost investment in the United States. The president previously suggested the rate on semiconductors could be well above 100%, reaching potentially 200, even 300%.
Well, Nathan, President Trump was speaking at a White House dinner attended by some of the world's biggest tech leaders. The guest list ranged from Apple's Tim Cook, OpenAI's Sam Altman, and Google's Sundar Pichai. And sitting beside the president was Meta's Mark Zuckerberg. He was pressed by the president on the company's U.S. investments.
How much are you spending, would you say, over the next few years?
Oh, gosh. I think it's probably going to be something like, at least $600 billion through 28 in the U.S. Yeah.
It's a lot.
Meta's Mark Zuckerberg speaking at the White House. And earlier Thursday, many of the same executives joined First Lady Melania Trump for a discussion on AI.
And we're following a major development on AI this morning, Karen. OpenAI is partnering with Broadcom to design and produce artificial intelligence chips in what would be a direct challenge to NVIDIA's market dominance. Bloomberg News has learned the first accelerator chips would begin shipping next year. Broadcom CEO Hock Tan told investors on the company's latest earnings call that the AI outlook will improve significantly next year, with expected revenue from semiconductors to reach more than $6 billion in the fourth quarter.
Nathan, let's turn to the economy and today's critical jobs report, which could cement a rate cut at this month's Fed meeting. Markets are currently pricing in a quarter-point cut in September. Speaking at a fireside chat yesterday, Chicago Fed President Austin Goolsbee said the number will be important, but stressed that he's looking at a broad range of data points.
I'm one of the data dogs, so you're never going to hear me say throw away a number and pay no attention to it. But I'm just going to index on that number tomorrow morning a little bit less than we normally would.
Chicago Fed President Austin Goolsbee says if the job market shows further deterioration, it could be a sign to loosen monetary policy. The August jobs report drops at 8:30 Wall Street time. Please stick with Bloomberg for live coverage on Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio and the Bloomberg podcast page on YouTube.
Well, Chicago's Austin Goolsbee isn't the only Fed speaker discussing rates, Karen. New York Fed President John Williams says the central bank is facing a delicate balancing act when it comes to interest reductions.
We need to keep the labor market in balance to ensure that the effects of tariffs do not spill over into a longer lasting broad increase in inflation. On the other hand, maintaining a stance of too restrictive policy for too long could increase risks to our maximum employment mandate.
New York Fed President John Williams says the impact of tariffs on inflation has been less than originally feared. He says the labor market is undergoing gradual cooling consistent with a slowdown in the economy.
Nathan, let's turn now to New York City and the latest on this fall's mayoral race. The New York Times reports that Mayor Eric Adams told confidants he's weighing job opportunities that would prompt him to abandon his reelection bid. Reports indicate Adams had been in talks with advisors to President Trump about a potential job if he quits the race, which he's denied. President Trump weighed in on the race at the White House last night.
I would like to see two people drop out. and have it be one-on-one. And I think that's a race that could be won.
And the president emphasized he'd prefer not to have a communist mayor of New York City, referring to current Democratic frontrunner Zohran Mamdani. For full transparency, Michael Bloomberg, founder and majority owner of Bloomberg LP, the parent company of Bloomberg Radio, has endorsed Andrew Cuomo in the mayor's race.
Turning now to President Trump's efforts to oust Fed Governor Lisa Cook. Karen, the Justice Department has opened a criminal investigation into whether Cook committed mortgage fraud. Sources tell Bloomberg News federal prosecutors have issued subpoenas seeking information related to allegations that Cook misrepresented information on mortgage applications. Last month, President Trump said he was removing Cook after Federal Housing Finance Agency Director Bill Pulte accused her of mortgage fraud. Cook is suing to stay in her job. Her lawyer denies the charge and says the president lacks valid grounds to remove her. And in a filing late last night, Cook also said a court ruling in favor of Harvard University backs her argument that President Trump's attempt to fire her is a pretext.
At the same time, Nathan, President Trump is asking the Supreme Court to let him fire FTC Commissioner Rebecca Kelly Slaughter, testing a 1935 Supreme Court ruling that said Congress could insulate high-ranking officials from being fired. The filing follows a federal appeals court decision reinstating Slaughter, who is challenging Trump's attempt to oust her. Trump sought to remove Slaughter from her position in March. She sued, arguing that her ouster flouted the FTC Act, which says a president can remove commissioners only for cause. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The first game of the NFL season included a lightning delay of more than an hour in Philadelphia. The Eagles and Cowboys had a lot of scoring before the delay that came in the third quarter, none afterwards. Philadelphia beat Dallas 24-20. Arina Sabalenka and Amanda Anisimova both lost the first set, won the next two. Semifinal winners at the U.S. Open. The men's semifinals are today. Caitlin Clark, due to her injury, will miss the rest of the WNBA season. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity futures.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
We heard from Sitharaman, the finance minister. She says it is very positive for GDP, but how much can you counter that 50% tariffs from the U.S.?
Well, I think you have to consider a few things. First of all, how long will this 50% tariff be in place for? Is it here for the short term? Is it here for the medium term or beyond? Once we see the Russia-Ukraine situation resolved, which we're probably closer to the end than the beginning, then I think the pressure on India with respect to what President Trump feels about oil imports from Russia, that pressure eases. So I think you have to ask yourself about whether the tariffs are here for for a very long time or not. In terms of the tax cuts, I think it's very positive. If you look at something fairly simple, just like price elasticity of demand in India compared to, say, the US or China, it's much higher in India, given the profile of the average consumer, lower income, and so on. The last time taxes were adjusted back in 2019, you did see a meaningful improvement in demand, especially for consumer discretionary items. I would argue there will be an improvement, there will be a significant improvement. And on the point on the fiscal situation, if you look back in 2019, again, when they did it last, net, it was positive for the fiscal position because the increase in demand more than offset the reduction in taxes. So I think all of that is positive. And when you look at the inflation picture in India, it has been fairly well behaved. You have a new chairman of the Reserve Bank who is fairly dovish. He's been easing monetary policy. So when you put that together, an easing monetary policy picture, decent inflation numbers, tax cuts, a market where sentiment is pretty poor, expectations are low given what's happened with tariffs, I think this is a positive catalyst for the market. For
positive, but does it fundamentally change the view of the Indian market? Does it make it so much more attractive that foreign investors are going to be flocking in?
I think you have to split the short term and the long term. I think in the short term, some people who don't fully appreciate what's going on in India are focused on the on the tariff increases. But if you look at the long-term dynamics of India, the secular growth, the demographics, the talent, none of those stories have changed. And I think when you look at the performance of the Indian market over the long term, these corrections in time have proven to be buying opportunities. So I would argue those fundamental secular drivers haven't changed. In the short term, you might still see some noise thanks to tariffs, thanks to the uncertainty brought about by tariff policy out of Washington. But in the medium to longer term, we're still very constructive on India.
So buy India and buy consumption plays. After all, consumption is 60% of GDP.
Well, I think consumption will be a short-term beneficiary from the policy changes, but if you look broadly across the market, the number of other sectors that have been beaten up because of the tariff situation, and I think you have to be very stock-specific. The thing about the tariff situation is that companies that have pricing power, companies that are in a very secure part of supply chains, of value chains, those are the ones that will benefit. And I think you have to be very stock specific in India. Consumer is an area, there's some other areas as well.
What is the biggest risk right now for India? I mean, we talk about that 50% tariffs and you question how long that would be, and the signs are not really positive right now.
Yeah, well, I think we need to focus on what the agenda is out of Washington. Now, the most important thing on the agenda for President Trump is the trade deal with China. He's focused on that. The Chinese are focused on that. They don't want anything to get in the way of that because of how important that economic relationship is. Once he gets that out of the way, I believe the next one will be Russia-Ukraine. That issue needs to be resolved. We're close to the end and the beginning. The Europeans haven't come to the table yet. They need to. Once that pressure comes off, and it will have to come off before 2026 meaningfully begins, because at that point President Trump will be focused on the midterm elections, which are very, very important for him, especially now. I think then the focus comes on what else he can do. So once that pressure is off with respect to Russia, I think you could see some avenues where India and US find a way of coming back to the table. Right now that looks a long way away, but bear in mind the approach out of DC has been fairly transactional based on the issue of the day in the eyes of the Trump administration. So I think we shouldn't rule that out.
The other issue that investors are focusing on in India is actually Jane Street. Now it says it's pushing back on the manipulation violation which SEBI has imposed on it. How are you as an investor looking at that situation? What are the implications broadly?
Sure. I think regulatory situations in any jurisdiction are tricky, and I'm not not privy to the specifics of Jane Street and SEBI, but I'm sure they will work it out over time. But I think SEBI has always been focused on what ensures a long-term, liquid, efficient market, and what works for all segments of Indian society in terms of investors in the market. So I think they'll be very focused on that. The only thing I would say is I don't think this will be resolved in a very short period of time.
But this is a high-stakes legal battle in a way, right?
Yes.
And it could set the precedent for the future for foreign investors in India.
It's difficult to speculate, but I think wherever you look in the world, there have been regulatory situations which have looked very tricky at a particular point in time, but over time they all get resolved.
And for the broader market, it is about the Fed, how much it will cut, what it will do, and what's crucial actually is that data coming out on Friday. If the data comes in weak, might 50 be a possibility? Might 50 be on the cards in September?
Who knows? 25 or 50, I think it doesn't really make a huge amount of difference. I think in the short term...
it's the optics, isn't it?
Well,
if he does a 50.
Perhaps, but non-farm payrolls are a very volatile data series. We're coming at the end of the summer in the US, which has been a very active summer. The weather's played a big part in things, so it's very difficult to predict what the short-term numbers are going to be. Having said that, I do believe that over the next 6 to 9 months, Chairman Powell will be thinking about the legacy he leaves behind for his term at the Fed. There will be likely a dovish new Fed chairman that will come in. Currently, markets are expecting something in the region of 150 basis points
by the end of next year.
Between now and the end of next year. I would argue that's excessive. I think if you look at interest rate forecasts over the last few years, they have been pretty inaccurate in terms of predicting a easing monetary policy cycle, and I think the same will happen this time. I think we're going to see easing. I would be very surprised if we see 150 basis points by this time next year. If you look at what's happening around the world, the impact of tariffs, if you look at the comments from Secretary Bessent on how much the US is pulling in from tariffs, it's annualizing at about $330 billion. That's a big number. If you look at, say, personal consumption expenditure in the US, just the change year on year is about $1.5 trillion last year, ballpark. So 333 billion is a big number. That number has to come from somewhere. So the two things I think we should be looking out for are inflation numbers, perhaps spiking, reflecting those tariffs, and that could be cause for concern for the market short term, and also just the overall demand picture. We've seen evidence that demand has been pulled forward earlier in the year, given tariffs. So companies, consumers have been pulling forward demand so that they don't have to pay out for tariffs. So it is logical that you will see some follow-up from that in terms of slowdown. So I think those are a couple of things to look out for, which could spook markets in the short term.
Neutral, 3%. How quickly might we get there?
I think it'll take longer than people expect currently.
How much longer?
I don't
What's
think we get there before the end of next year, as the markets are expecting.
So given that the markets are pricing in deeper rate cuts than what you're suggesting, is there too much optimism in the stock market right now? I mean, take a look at where we are. We're constantly testing new highs.
Well, again, there's the headline and there's what's happening underneath. Now, if you look at the headline, the markets are up significantly. If you look at the performance of markets since Liberation Day, 5 stocks account for 3/4 of the S&P 500. The S&P 500 is looking at double-digit returns year to date, but the median stock is probably low single digits. So there's a real bifurcation in the market between the AI winners in this AI arms race, because the marginal returns from AI investment are still supernormal right now, and the market's giving those companies a lot of credit for the investment they're making. And then there's the rest of the market where there's uncertainty, where the tariffs are having an impact, where there is evidence of a slowdown. If you look at some of the logistics companies, they are talking about a slowdown. If you talk to the advertising companies, the traditional advertising companies, there is evidence of a slowdown. So you do have this bifurcated economy, bifurcated market. Headlines suggest a very healthy S&P 500, but that again in 2025, as it was last year, is concentrated in a small number of companies. So I think there's scope for disappointment in that space.
So what? We could see a correction of what, 10%, 20%? Some has suggested that could be the case.
I think a 10% correction is not unreasonable to expect, given how strong this market has been and the amount of profits there are out there to take. But I would say that any correction will probably be short-lived, because you have got such a large segment of the market that has lagged, and their valuations are not as demanding as the very large companies. So there is not a lot of optimism there. There's very low expectation. There's enough scope for rotation into those companies.
To your point, the concentration risks are there. How do you play? How best? And what are some of the major changes you make to your portfolio that you're willing to share?
Well, we take a long-term view. I think the AI story is undeniably one of the biggest stories in our lifetime, and that's going to change the way all businesses operate. It's happening already. So I think you have to be in that story. Now, where you position yourself is important, and I think the semiconductor companies, including those in Asia, are real beneficiaries of that. Some of the hyperscalers are executing extremely well. So I think you have to be very careful, but you have to be positioned within that. Now, outside of that area, I think you also have to look at some of the places that have lagged. Some of the areas that have lagged, say in the US, have been areas like healthcare, some of the consumer discretionary areas. So valuations have begun to look a lot more attractive then. We're looking at some of those areas to take away some of the steam away from the bigger stocks in the market.
Munraj, China, it has been a red-hot market, and today we hear that the Chinese government is possibly looking at speculative investments. Your take on where the market's headed?
Yeah, I would come back to the big picture again. The most important focus for Beijing right now, as it is for Washington, I would argue, is this trade deal between China and the US. And the Chinese leadership does not want to see anything distract or get away from that. So any signal to the US that the Chinese market is looking through that risk, is interpreting the outcome overly positively, I think is something they would like to avoid. And when you come back to President Xi Jinping's agenda, and has been the case since he's stepped up into his role, common prosperity hasn't gone away. Common prosperity is about alignment. It's about ensuring that different parts of the Chinese population benefit from growth, benefit from the opportunities in the same way. Domestic demand hasn't really picked up in China this year, despite some of the improvements, some of the reforms.
And property sector hasn't either.
It hasn't. So again, that rally has been driven by very cheap valuations, some expectation that we're past the bottom in China, which is probably fair, but they want to take the steam out of the market. So I think it's something we have to watch closely.
But the AI plays in China are attractive, no?
Well, I think China's one of the biggest beneficiaries from AI, and they have some of the most interesting companies and interesting technologies. Not enough attention is being paid there by global investors right now, and I think that will continue to be interesting for years to come. So it is an area we like a lot.
the why. How were they able to pull in such a big windfall?
So just like the big banks, trading has been up year over year. Ever since the Trump administration came in, we've seen record volumes. There's a ton of volatility, and the banks that are handling trading and these non-bank liquidity providers, these trading firms like Jane Street, like Citadel Securities, they're benefiting from this volatility. They're the ones that are standing in the middle, helping facilitate buying and selling across asset classes. And this is not just in the U.S., but globally. We've just seen record volumes. So the numbers that these non-bank liquidity providers, the Jane Streets of the world, they have put out recently, they are able to take, in Jane Street's situation, very big bets. They're putting up a lot of money in order to really facilitate the trading on behalf of clients, step in the middle of trades. And what they're able to produce, we're seeing $10 billion in a 3-month period. That is 1 quarter. That has surpassed JP Morgan for the first time. So it's really, in many ways, a shift of who the big players are in the trading landscape. It's not just the core 3 Wall Street banks that we normally will talk about in this space.
What is causing that shift, and just how big of a threat is it that you can have JP Morgan, the biggest bank, fall behind on trading to some of these non-banking entities?
So this has been a gradual shift over time. Really, you can go back to the financial crisis. The banks are under regulatory scrutiny. They have to hold capital. Their own balance sheet is restricted. Firms like Jane Street, Citadel Securities, they have their own capital that is not under the same regulatory scrutiny. So that is one core difference. The other difference being the banks, they're investing in their people, they're investing in technology, they want to keep up. But these Jane Streets and Citadel Securities, the Hudson River Tradings of the world, they can invest more so because, again, they're not restricted by the amount of capital that they're not only putting to work in trading, but they're able to invest and develop their algorithms and also poach to get the best people to develop that technology behind the scenes.
Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Mann with Annabelle Jewelers.
Our top stories: Asian equities rise after stocks and bonds rally on Wall Street as investors await Friday's U.S. jobs report. Traders almost fully pricing in a Fed rate cut this month.
Chinese stocks remain in focus with corporate earnings pointing to a fragile rally as authorities move to slow the gains. We're speaking to CLSA and B of A about their outlooks this morning.
Plus, our scoop on how China's DeepSeek is working on an AI model with more advanced features to compete with U.S. rivals. Well, coming into the morning session, I think you can see here there's really a fair bit of positivity across the screen. Strong session on Wall Street overnight. We were just talking about how you had those moves in stocks and bonds, but it is that anticipation of what we see for the jobs report coming up. We'll get more on that, of course, the movement that we've seen, yields pulling back at the short end of the curve. But generally what you've got for equities today is that movement to the upside, watching the Nikkei in particular because it has been leading in the session so far. President Trump, as we were just saying there, has signed that executive order to implement the Japan trade or tariff deal as well. Taiwan also moving a little bit to the upside here. Again, maybe it's more of that movement back into tech. Actually, speaking of tech, we had President Trump, for instance, just in the last hour or so, hosting a range of different big tech CEOs at the White House, but certainly making that point that the U.S., he says, is leading in AI. What's interesting, of course, is DeepSeek. We had that scoop that they're looking to release an agentic AI model. But let's take a look, as I said, at what's happening in the bond space, because it has been that move back down in yields a little bit. We've got the 2-year yield here sitting around its lowest point in a year. It's that expectation. We get that jobs report coming up. But so far, what we've had in private payrolls data, what we've had in the JOLTS data as well, really tells us that that Fed rate cut is pretty much fully priced in right now. It's only going to be perhaps a really hot inflation print later this month that could test that case as well. So that's what we're seeing here for yields, again, mostly retreating at the front end. Shifting now to the outlook for Chinese markets, we are looking to a little bit upside at the open. As I said, that scoop we had on DeepSeek preparing an agentic AI tool. It's going to be an interesting one, I think, for markets. We might see some movement, given that we've had so much optimism around, R1, of course, for DeepSeek in January, but just any sort of updates we get from DeepSeek can be enough to sort of spark a rally in equities. But at the same time, what does this also mean for the likes of Alibaba?
Yeah, certainly that the AI race continues to heat up. And I think any sort of update from DeepSeek is something that is quite sensitive to the market right now. We saw that with that update just a few weeks ago. So certainly we'll see what this agent and what it can actually mean in terms of AI capabilities and the like. So certainly that's one potential catalyst here today amidst this sort of stock sell-off that we saw yesterday, where we basically saw 1% to 2% losses there when it comes to Hang Seng as well as in onshore markets here. So we'll see if we see day two of that after what our scoop had mentioned there, that regulators are looking for some cooling measures to kind of slow down this rally. There's a CGB sale here today. We talk about tech stocks, given what we're seeing overall in the region and the U.S. We might see a different story today, just given that China has been heading the opposite direction from the rest of the world as of yesterday. Camericon, that's the one to watch as well. It was a 14, I believe, % drop yesterday. That was the most in nearly 8 months as well. So that's still that wariness over the recent surge in tech stocks. That certainly is still a key focus here. And we're still watching oil today, of course, as we get into that OPEC meeting this weekend as well. But yeah, it brings a lot of discussion here on where do we stand now in this whole liquidity-driven rally.
Yeah, exactly. I think what's been sort of the most interesting thing is that you've continued to see that divergence, optimism around stocks, but question marks or concerns around the U.S. economy, and also what kind of theme would develop out of earnings, and would that be enough to justify another leg higher? But actually, when you take a look at what we've seen so far, it's combined losses actually for earnings in the latest period as well. I think you're looking at non-financial quarters, for instance. That's a combined loss. Overall, some gains, but muted when you look from the quarter prior.
Yeah, the China second quarter has been quite telling so far, right? You're not seeing maybe the justification for this rally. As you mentioned, the non-financials have underperformed because of stubborn deflation and the like. But when you look at financials, you look at AI-related themes, those still remain those rare bright spots. And it's a lot of why investors are saying, I still have reason to stay in this market because of all the different themes out there. I don't have to really focus too much on the macro right now.
Yeah, let's get more on this story now. Bring in Sean Cochran. He's head of research at CLSA. And Sean, thanks for joining us in the studio. And I think we can let you lead the conversation here. What's sort of standing out to you right now? And what are you noticing the most in markets today?
Well, the conversation you're just having is really it, which is there's this real conundrum, which is if we look at the macro, we've got the US as this big leading economy that's just generally slowing down. But the recession that people thought might come years ago, including myself, never came. And so the market has just kept moving forward. So the question is, what's really driving the US leadership, and how does that relate to China? If we think about the US leadership, we've got an environment where it's really some dominant stocks that's dragged the market higher, and it's a dominant theme, which is that with the rise of AI, you get this enormous capex boom, which is a huge part of GDP growth. It's the most volatile part of GDP, and it just sustains that underpinning where the economy is, in aggregate, actually okay, but large parts of the economy are not enjoying the benefits of that rise, and so you get this sort of bifurcation of the performance and the confusion. Just why is the market up yet the macro is mixed? So that gives you the American side of the equation. And the Chinese side is similar in that if we look at where China started, I was here some time ago where we talked about we were quite bullish on China, not because the market was doing well, it had just become so cheap. So we have to remember part of China's excellent performance over the last 12 months is really because it was a very cheap market, and when markets become that cheap, so little expectation in prices, then of course flow will move in that direction. So that's helped China, but equally the DeepSeek moment opened the world's mind to could China play a fundamental role in this new AI theme.
Regulators are trying to at least slow the rally, as we've been reporting as well. Do you think it's going to work, or do you think this actually sparks some sort of deeper correction? Yeah, look, if we look at the state of the rally, our technician is fundamentally bullish on China, feels that it has broken out, and we had these cheap sort of valuations to start it, which means we are not yet into expensive territory such that you would have to worry. The market has been very much about some liquidity support. As you've mentioned earlier, there's not strong, pervasive fundamentals across the entire economy doing exceptionally well. It's about the steady improvement and the removal of the concern that China was going to have a meaningful slowdown. Now, if we combine it with this AI improvement, then you get this concentration of performance where people get quite positive about the tech sector, less negative about everything else, and it can drag the whole market up.
We've got this chart here behind you, and it's talking about that US cumulative fiscal deficit.
Yeah,
I mean, how does that also play into what you were saying there about that sort of spending that we see?
So what's really interesting about the nature of how this cycle has evolved is that this has been an incredibly long cycle. It's gone on for well over a decade, which is unusual. And within that, we've had a fundamental transition in what drives liquidity in markets. From the 80s up until the 2000s, it was really a liquidity-driven environment where the changes in the liquidity pricing was fundamentally important to what was driving the market. But since the COVID period, what you can see in that chart is that you have this period where in 2020 and 2021, there's this enormous government spend coming out of the US, and the rest of the world did it, but the US in particular did it at scale. And this was a logical response to this exceptional challenge of the arrival of COVID. That then shifted things in that we had this fiscal dominance narrative that moved, and it moved the Overton window insofar as what's acceptable in terms of how much money a government can spend, which moves us into this fiscal dominance where it's very hard to express the downside, that recession that never came. If there's this wall of spending that continues to come, then it's very hard for that downside expression to come. The usual cycles are not really playing out.
And so what does that lead us when it comes to the curve? I mean, the steepening seems to be the way to express that here right now. We have 2-year yields in the U.S. are now the lowest all year. In the past year, I would say. Is that steepening trend, can that continue?
Right, so there's a couple of dynamics embedded in the shape of the curve, insofar as the long end of the curve has not really come off as much as the growth concerns have slowly built with the passage of time. And the short end of the curve, the expectations continue to build. As you mentioned earlier, there's conviction in the market that a cut is coming in the near term. So ultimately, that's expressing those two things, which is the short end of the curve is saying the conviction in the quality of the growth is not particularly high. And then outside of that, the longer end of the curve is saying we are concerned about the lack of fiscal discipline.
So, I mean, concerns about the lack of fiscal discipline then, and how does that exactly play out, do you think? I mean, you're talking about sort of fiscal spending that continues to come, so you can't have that expression of a downward revision in the economy. But I mean, that must reach a head at some point.
Correct, yeah, which is the fundamental question for markets. And the challenge is there's a US technician, Richard Russell, unfortunately he's passed away, but he used to say the market always does what it should, but never when you think it will. So the challenge is these things can just go on far longer than anyone expects. The simple reality is the state of the US fiscal position is such that any sort of real fracture in the immediate term is unlikely. The debt to GDP, the liquidity ratios, we're not clearly at a point where this could really break some sort of treasury price expression. The other thing to remember is if we were to have challenges in treasury markets anywhere in the world, yes, it can express in the relative term structure, so the yield price in the long term and the short term, but it's more likely to express in currencies, especially for the US, insofar as central banks can purchase their own treasuries and manage their treasury markets. Where you're likely to see the capital flow express itself is in the price of the currencies.
It seems like investors have shifted dramatically towards, focus on the labor market. How are we looking at this jobs report? Are we going to be, or should we be worried about more revisions like we saw last month?
Well, I mean, when I speak to my clients, I advise them non-farm payrolls is important insofar as the market will react to it, but there's limited valuable information there insofar as there's much more short-term data these days. We can look at all sorts of sites that can provide us that. I personally find the initial claims far more useful because it's subject to less revisions. It's more frequent in terms of the data. But ultimately, it's back to the original point, which is there's this slow deceleration going on in the state of the US economy. We've got the pushing of this continued spend, which means it's not accelerating to the downside, which would normally be the usual cycle. And we should expect that it continues to decelerate. Now, importantly, there's a critical mass of jobs that the economy must create. Otherwise, it creates problems. Unemployment will go up, and that will trigger a cycle. And that is ultimately going to happen, back to your question, when. And so that's why I look at the initial claims. The longer you do this, the more you don't know, and the more you don't want to get too confident that you can predict the future. It's a probabilistic game where we have to think of all the possibilities and weight our portfolio towards the more likely ones that are not expressed in the price.
Okay, Sean, we'll have more on what's not expressed just yet. Sean Cochran there, head of research at CLSA. And still ahead, Morgan Stanley breaks down their new report and why household deposits, they say, aren't exactly flowing into equities as quickly as some have anticipated. They just came back from their mainland trip as well. Robin Shing, their chief China economist, joins us later on. And we are counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. As we wrap up this trading week, certainly has been a big one about diplomacy, military might in China as we wrapped up this military parade. Futures, though, So seem to be suggesting we might see a bit of a good day today. This is Bloomberg.
We're making it very easy for you in terms of electric capacity and getting it for you, getting your permits. We're leading China by a lot, by a great amount.
That was President Trump there speaking at a White House dinner earlier alongside U.S. tech leaders. It was, of course, an event early today in Washington at the White House, but it was jam-packed, star-studded. You can see Mark Zuckerberg there, but there was Bill Gates, there was Tim Cook, there were the heads of Oracle, AMD. You can see Lisa Su there in that blue suit. But a really big meeting, essentially, and it comes, of course, amid competition between Silicon Valley Chinese tech champions. And on that point, from the China side, Bloomberg's learned that China's DeepSeek is developing a new model with advanced AI agent features to compete against U.S. rivals like OpenAI. Sam Altman actually was in attendance as well. But let's dig into this with Newly Purnell, our tech reporter. And this is a big one, really, because they have had the R1 model. We haven't really seen anything major from DeepSeek since then. So what do we know about this agentic AI tool?
Yeah, right. I mean, this is DeepSeek, to go back to the beginning of the year, they kind of surprised the world when they released this LLM that seemed to be pretty much as good as a lot of the U.S. Versions, and it was developed for a fraction of the cost. So what they've said now, some great reporting by our colleague Saritha Rai, saying that they're working on an agentic AI software that could be released by the end of this year. And what it would be designed to do is compete with the likes of OpenAI and some of these other providers into what's seen as kind of the next phase of generative AI, some of these agentic AI services that can go out and do things for you, not just spit back text to you like an LLM, but go out and do things. So pretty exciting.
For the non-techies out there like myself, Newly, can you explain what an AI agent is and why are people so excited about them?
Yeah, it's sort of a fancy word for AI that can actually do something in the real world. So an LLM like ChatGPT or DeepSeek, you enter text, it spits back text based on its computations. The idea with agentic AI is it actually acts as an agent for you. You can ask it to, and I've done this, I reviewed another service, Manus, a Chinese-founded service based in Singapore. And the idea is you ask it to do something, it will open a browser or something in the cloud that can go out and scan the web, compile information for you, maybe even buy things online for you, make bookings, compile stuff into a spreadsheet or a PowerPoint presentation and give it back to you. So the idea is it's actually like an assistant, like an agent for you that can go out and do things independently and give it back to you. So you really could see how it could spur some of these productivity gains that people talk about generative AI being able to do.
Yeah, I think that's in that report from Sarita. She was mentioning Goldman Sachs saying that would be sort of the next leg to really spur a lot of productivity. But what does this mean then for the bigger picture? I mean, it's competition that DeepSeek faces in China, but also against others that have released agentic tools too.
Right. I mean, I think it could be, when we see this come out, it could be another moment where people say, well, look at all the money that OpenAI and Google and Microsoft and Anthropic and others are spending. And if this really small, scrappy startup from China is able to do something that's comparable with fewer resources, it maybe will throw into a question again the power of some of these other competing services with all of the resources and all of the years ahead that we assume that the American AI companies are supposed to be.
All right, Newly. Thank you. Newly Purnell there, our Bloomberg Asia tech reporter. Still with us is Sean Cochran, head of research at CLSA. Sean likes to put us on the spot sometimes and tell us, make this chart now. This is the one you wanted us to make. Our producers were scrambling in the commercial break. Of the NASDAQ versus S&P from 2009 till now. And that tells us a little bit more about where this AI trade goes, I guess. What does it suggest to you?
Well, there's two elements here. There's the fiscal element we talked about a little bit earlier, and then there's that leadership for AI. So if we if we look at that movement in the market, you can see there's been these waves. So the market has a major wave, and then it corrects. Its first big correction was basically as the economy was slowing down, and Trump comes along and says, I'm going to spend money and do tax cuts, even though the economy's okay. It wasn't actually in recession, I'm going to spend. It changed that fiscal narrative we talked about earlier. Then we move up into the COVID period, and we have a massive correction in the COVID period. It doesn't look that big on the chart, but it was quite big at the time.
Right.
And in that environment, you had that big fiscal spend, which further drives this US exceptionalism. And tech becomes the dominant sector to buy because that's the only sector that can operate in that time. Then we have an environment where we have this thought of a big correction. Now, we talked about a fiscal dominance chart earlier in the session, and there it was 2022 where there wasn't much spent. And so that's why you had this huge correction. Two things came along to put a floor in the market. One was that the government just kept spending again, that fiscal dominance returned. But two was the arrival of OpenAI. That gave us that big moment that had the market driving forward, which gave us the capex boom that we see now, which is underpinning the strength of the economy and keeping that market keeping on. The thing that caused a correction not that long ago in the AI sector was the arrival of DeepSeek. Right. Insofar as the US corrected because China came along and showed, oh, we can do this too. And that opens some fundamental questions about how do I think about AI? And there's lots we can unpack in there in terms of foundational models versus the layers and the agentic layers on top, and where is the competitive advantage?
Let's dig into that then, because I think that's the point. I mean, you know, that theory makes sense in the sense that, yes, you spend more, so you get more ROI, and that makes sense for that US dominance story. But if China can do more for less, what does that tell you then? And where's the sort of strengths that you see in the Chinese AI landscape?
Okay, so this is the fundamental question. How do we unpack it? Because we have released a big report recently. So this time of year is important for us. It's the 32nd CITIC CLSA Investors Forum. For that, some of our analysts released their big reports of the year. One of the biggest reports for us was the tokens tale, which talks about how many tokens, which is the fundamental unit of compute in AI, do you need in the future? Today, we're running at about 1 quadrillion a month, so crazy numbers. And our analyst believes that goes to 80 quadrillion a month. And that's his best guess. We don't really know, is the reality. However, that's a huge demand for tokens. Now, in terms of how do we process those tokens, we use GPUs, TPUs, these fundamental units of compute. But then there's productivity gains. Now, just the chips themselves should get something like 27x better over the next decade. So almost halving the amount of compute required to deal with those tokens. But then there's also what DeepSeek does, which is algorithmically, how do I approach the software in order to be able to do things fundamentally more efficiently. So they're breaking down into, we talked about the agentic units, different parts of AI that might call on a smaller model, which consumes less tokens, to answer the same question, but not only answer the same question with less tokens, but answer it with more precision, which improves the efficiency of AI. So this is the journey that we're going on. And so you can understand that incredible volatility in a stock, in these AI stocks. I've had some skepticism myself. And my
Look at Capricorn.
Team. Right. So
didn't talk about it a month ago.
Right. So ultimately, there's so many open questions, and it's understandable that you'll get a very wide range of opinions because the variables are so wide.
Sean, really great having you on this morning. That was Sean Cochran, their head of research at CLSA. And just as we've been speaking now, we've had a breaking headline crossing the terminal here. But Canada is looking to scrap its EV sales mandate and also launch a regulatory review. So we'll get more details on that just ahead. But just to recap, Canada looking to axe its 2026 EV sales mandate. Plenty more ahead as we look ahead to the opens in mainland China and Hong Kong. Futures are pointing to a little bit of upside here at the open. Also seeing the yuan there, offshore yuan, pretty steady. More ahead. This is Bloomberg.
All right, we'll finally see if we see a second day of the sell-off that we're seeing across mainland markets. And certainly one thing to watch yesterday was really this week alone, really, was what we saw in the Chinex, right? RSI levels basically reached 86 on Monday here. That's the fourth highest overbought sort of level we've seen on record. So that goes to show, yes, it's easy to tell why maybe regulators want to slow down this rally, right? But if you take a look at how, whether this sort of engineering of a slow bull market can actually work or be successful, take a look at history. The China Today column highlights this, right? So history suggests that it actually might be effective. You take a look at past rallies, right? Everything from 2013 up until now, when you have seen a 1 month return of about 20%, about a month after that, about 21%, you do 21 days, I should say, you do average a return of about 4%. So it has happened in the past that we can actually start to maybe cool things down a little bit as well. But then again, you take a look at this whole, what's really been driving the gains in this equity market, and it might be what we're seeing in the bond market, right? There is no alternative to, you can't buy property at this moment given how weak the market is. Therefore, I'm going to put my money out of bonds into stocks. That is one of the big factors of why we are seeing these inflows into the equity market. You take a look at how yields go and how this equity market has gone. And if that earnings yield is still about 4 basis points higher than where bonds are right now, analysts are saying that might be more reason for next leg to come. The Open is next. This is Bloomberg.
Welcome back. You're watching the China Show this morning. We're counting down to the open of markets. Yesterday, it was the reaction we saw to the Bloomberg scoop that we had around looking at measures perhaps to try and cool down the equity rally. We've got Robin Shing from Morgan Stanley in the studio with us, just making the point that maybe the market correction was enough, that it's sort of been self-done already, and regulators can maybe just pull back a little bit for now. No need for any excessive measures.
Yeah, he just came back from the mainland, so we'll be getting his takeaways coming through here. But yes, as you say, the rest of the world is actually reacting to the weak U.S. jobs data that we got overnight, and that really kind of maybe bodes well for this jobs report coming on Friday, that maybe, the almost 100% certainty now that maybe the Fed could cut. That's what markets are pricing in right now because of what we've been seeing, cracks in this labor market. So certainly that is going to be the big thing here. But right now, this cooling of this equity market, which we saw yesterday, was quite telling, right, from our Bloomberg scoop, that they want to find ways to, at least on the edges, slow things down here. That certainly maybe is working here right now, at least for a second day. We are seeing a slow going here so far on onshore markets there. But at one point, we did see the Shanghai Composite falling the most since like a few days after Liberation Day back in April. So that stabilized a little bit here today in the China session here on Friday. Shenzhen is doing decently well. We're up about 0.1%. And of course, we're watching some of the gauges like Starboard 50, which really did see a lot of losses there yesterday. We're up about now 0.5%. Capricorn is certainly one thing to watch here after that, 14% drop yesterday as well. We are seeing a little bit of stabilization there in the stock here as well. Of course, a lot of the hot money was going into stocks like Capricorn, like Quejiao Maotai of late in this A-share market. So at least for those both, looking decently better here than yesterday. And we're watching very closely what bond markets are doing here right now. Not much movement there. That 30-year is still well below, slightly above that 2% level here as well. But as we talked about, right, it is the lows that we're seeing in these bond market yields, bond yields, that is really kind of catapulting the flows into this equity market. And you're still seeing Hang Seng doing decently well. We're up about 1/5%. HS Tech seems to be doing modestly higher. Tencent is up some 1% as well. So a bit of a recovery there in Hong Kong here this morning. Key to watch, of course, is going to be the EV sector, right? So the Reuters reporting just after our show yesterday that a BYD is maybe considering cutting their sales target by 16%. So that sent a lot of questions, right? Is this EV price war coming to an end when you have the likes of BYD cutting sales production, the number one in the market, of course, right? So we'll watch the EV space here today. But Alibaba is down about 0.8% as well. There was these kind of talks about DeepSeek, and our sources telling us they're working on a new AI agent here in this whole kind of race with AI. So certainly that could be a catalyst for some of these AI stocks here today as well. That's why we're seeing maybe the chips are doing okay. If you take a look at SMIC, we're up about 2% in Hong Kong today. And of course, we are watching very closely China autos, right? So we talked about BYD. We're going to get Bloomberg Intelligence coming through here. Shirley Wong has been kind of crunching the numbers and looking at really what this means in this whole price war, right? BYD there, we see the stock recovering. We're up about 0.4%. But yes, the likes of the auto doing okay. We're up 2% here right now. Belle.
Yeah, let's also talk about what's been a rare meeting, actually, between Chinese fiscal and monetary policymakers. That's also been prompting speculation that easing measures could be on the cards. Let's get more with our senior executive editor, John Liu, joining us from Beijing. And John, I mean, who was in this working group, and what were some of the key takeaways as well?
So this working group was led by a deputy finance minister, Liao Ming, and also a deputy central bank governor. It's not the first time that this group has met. It was designed to better coordinate monetary and fiscal policy and the response that we've been getting from Beijing to the economic slowdown. And as we've been talking about, the market has gone up substantially over the last month or so, but it's only going to be sustainable if you have economic growth and corporate earnings backing it up. And so far, the economic data that we've gotten in August for July was still relatively weak. We're going to get more data later in this month. Next week, CPI and trade. Week after that, retail sales, industrial production. And that's really going to tell us where this economy is going. And that I think, is what this meeting is really focused on.
Does that give us any sort of signals of where policy and where stimulus could be? I mean, there's a lot of questions about how much room there is fiscally for the government now.
I mean, if you remember back in September of last year at the very end of the month, we had that really unusual press conference with the central bank governor where there was a bevy of new measures announced, cuts in the reserve requirement. We saw the regulatory bodies really step up to the plate and start launching new efforts to prop up the economy. That, I think, is not incoincidental because at the end of September, you have a sense of how the economy is done for the first 3 quarters, and you have a sense of how much the government needs to do to get to that about 5% GDP target that they've set for 2025. And so I think there is a little bit of looking forward in terms of getting ready in case the economy needs an additional boost. This meeting would set set the table for doing that.
John, thank you. John Liu, our executive editor there, about this rare meeting that we just saw in China. And Morgan Stanley was just coming through here on a trip from the mainland here and really kind of gauging what's been on the ground. Robin Xing, chief China economist, joins us now. Takeaways from your trip to Beijing and Shenzhen.
Hi, Yvonne. Let's recall what we discussed about 1 month ago in your show. Liquidity was in driver's seat. We have seen some kind of water buffalo forming. So that liquidity, that narrative was dominating basically every single speaker on your show in the last month or so. But we have also warned about a month ago there is a disconnection between fundamentals and this liquidity narrative. August prints are very soft. High-frequency data like housing, exports, fiscal impulse are all fading. So back to fundamentals, I would argue what happened in the market is more like a reality check. It's not a broad reflation yet. And we have seen that modest policy moves, as your colleague John in Beijing mentioned, some marginal easing in monetary and fiscal policy. But these are more cyclical tools which can cushion. To have a new cycle, you need structural moves to anchor reflation and rebalance. That's not these marginal easing tools. That's probably the upcoming fourth plenum and the 15th five-year plan outlines. That's the key swing factor we are monitoring.
What's the likelihood, though, that we get anything major from that? I mean, a lot of people have been saying also the rally that we've seen in Chinese equities has sort of removed some of that need as well for big stimulus measures.
Well, I would argue they need to reflate the economy with much stronger consumption-centric policies. For example, if they use the five-year plan to change the government incentives, to recalibrate the fiscal policy, to put all these resources into a stronger social safety net, that could unlock consumption in a more sustainable way. So that's the five-year plan to be announced by the fourth plenum. That's the key swing factor. Before that, we will keep hearing incremental, modest cushion measures, be it this fertility support or subsidy on services consumption, or some accelerated pace on vetted infrastructure spending. But these are more like providing a cushion.
There was this sort of meeting that the CSRC Wu Qing had with industry experts and the like recently. And what do you think has changed in terms of how regulators looking at this rally? Because, up until now, it seemed like they were focused more on stability, especially amid the face of tariffs and the like. And now you're seeing even like policymakers nudging towards a stronger RMB to help with inflows in some ways to the equity market as well. Has the role of the equity market changed from a policymaker's point of view?
Well, I think policymakers probably see the equity market as a very, very excitable dog on a very long leash. So it does, on random directions. But eventually, the policy guardrails, which is the leash, can bring it back. So what happened over the last 2 months, the debate over liquidity-driven market, the so-called deposit migration thesis every speaker on your show mentioned, I would taper expectations because the size of this excess saving in the last few years is probably smaller than most people imagined. Only in RMB, 6 to 7 trillion excess time deposit over the last few years. And more importantly, the pace of migration outflow into equity is much slower than the market imagined.
Yeah.
July, August, probably only 300 billion yuan migration at best. So it's quite slow. Why? Because many market entrants in 2021, they are still underwater. That precautionary saving is still elevated. So I think back to fundamentals, you need broader reflation that pulls through to wages, to employment, that can make this rally much more sustainable. And for policymakers, the signal has been providing guardrails, not bricks. So they probably act earlier, more targeted than previous boom-bust episodes. So now they are using some pro-market reforms plus some window guidance to provide guardrails. I think that's not bricks. And the market, as you mentioned, kind of did the self-correction by itself. So heavy-handed intervention is not necessary.
It's interesting as well. I mean, yes, maybe it's more led by smart money, less by sort of retail money. That's sort of the theme that's come out. But also the questions around what is the next leg of the rally, and the earnings results we've seen don't really justify any big move higher from here. When you also combine it against stories like Yvonne was saying about Reuters.
तो गाइस 5:30 हो चुका है. लंदन सेशन के बाद न्यूयॉर्क सेशन ऑलरेडी ओपन है. क्रूड थोड़ा बहुत मोमेंटम कर रहा है, ज़्यादा नहीं. गैस भी ओवरऑल देखोगे तो रेंज के अंदर ही, बट थोड़ा बहुत मोमेंटम नेचुरल गैस में भी हुआ है. ऊपर रेजिस्टेंस से सेलिंग, वापस आएगा वापस सेल कर सकते हैं. नीचे आएगा तो बाइंग प्लान करेंगे नेचुरल गैस में वापस से. क्रूड ऑयल भी देखो रेंज के अंदर ही है, तो हम रेंज को ही प्ले कर रहे हैं. ऊपर से सेल, नीचे से बाई, ऊपर से सेल, नीचे से बाई. यहाँ से एक और बाइंग का प्लान रहेगा, बट कैंडल का ध्यान रखना, ओपन इक्वल टू हाई ना बने. 6 PM बहुत इंपॉर्टेंट डेटा है आज के दिन. This 6 PM data will definitely impact crude oil, natural gas, or even gold, silver. Natural gas को नहीं करेगा, gold और silver and crude oil, gold के साथ, और US market. Unemployment rate and average hourly earning, non-farm employment change बहुत इंपॉर्टेंट है. गोल्ड और सिल्वर सबको इम्पैक्ट करते हैं, तो इन डेटा का ध्यान रखना. मार्केट मेनली मुझे लग रहा है इन्हीं का वेट कर रहा है, अदरवाइज अभी तक तो एक बड़ा मूव हो जाना चाहिए था. लाइक भी करते रहो. डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल. जिन लोगों ने सब्सक्राइब नहीं किया है, सब्सक्राइब भी कर देना. क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते. अननेसेसरी रिस्क मत लेना, ठीक है. थोड़ी देर पहले एक स्टेटमेंट या कह सकते हो ट्वीट डोनाल्ड ट्रंप की ओर से आया, जहां पर उन्होंने कहा है, वी हैव लॉस्ट इंडिया एंड रशिया टू द चाइना, टू डीपेस्ट डार्केस्ट चाइना. डोनाल्ड ट्रंप इन लेटेस्ट मैसेज. अभी 5:30 न्यूयॉर्क सेशन है, इसके बाद सीधा यूएस मार्केट ही ओपन होगा 7 बजे। 6 बजे का डेटा है, उसका ध्यान रख लेना बस, वो काफ़ी इंपॉर्टेंट डेटा है। बाकी एक छोटा सा ट्रेड ये क्रूड ऑयल का, और इसका इतना ही टारगेट है। बाकी देखते हैं, अब रेंज तो देखो कहीं तो ब्रेक करेगा, ऊपर ब्रेक करे नीचे, कल से देख रहे हैं ना ऊपर ब्रेक हो रहा है ना नीचे, शिफ्ट होते जा रहा है बस सपोर्ट और रेजिस्टेंस। तो यहाँ से प्लान करेंगे, कैंडल का ध्यान रखना, ओपन इक्वल टू हाई पे बाय मत करना बस। Okay, looks like we have lost India and Russia. Deepest, darkest China. May they have a long and prosperous future together. President Donald J. Trump. यहाँ से बाइंग का ट्रेड, सेलर्स निकल जाना क्रूड ऑयल में, सेलिंग का इतना ही ट्रेड था। वो थोड़ा सा ध्यान रखना बाइंग का ट्रेड का, क्योंकि यहाँ से जो बाइंग आएगी या तो काफ़ी बड़ी होगी या फिर बहुत ही छोटी सी, क्योंकि नियर बाई सपोर्ट नहीं है। सपोर्ट फिर नेक्स्ट सीधा 5400 410 के अराउंड है, ऑलमोस्ट 110 पॉइंट का लगभग गैप है। तो अगर रिवर्स करना है तो बेस्ट पॉइंट टू रिवर्स द प्राइस फ्रॉम दिस एरिया, और अगर ब्रेक करना है तो फिर फॉल बड़ा होना चाहिए until unless फेक ब्रेकडाउन नहीं होता। एक छोटा सा ट्रेड था ये 50 पॉइंट का, सेलर्स का, वो डन। बाइंग का ट्रेड देखते हैं कि क्या ये निकलता है डब्लू बना के, क्योंकि जाना होगा तो डब्लू बनाना ही पड़ेगा इसे। डब्लू बहुत बड़ी बाइंग थोड़ा सा अनलाइकली है इस लेवल पे। ओके, न्यूयॉर्क सेशन की कैंडल भी हो गई क्लोज नाउ। फाइव थर्टी की कैंडल हो गई क्लोज 15 मिनट की। नाउ अब 6 PM पे ही डेटा, और कोई डेटा नहीं है आज। क्वांटिटी का थोड़ा ध्यान रखना क्रूड ऑयल के इस बाइंग ट्रेड में 6 PM का कहीं डेटा मार्केट को और नीचे ना ले आए. Okay, 7 minutes left. 7 मिनट और रह गए. डेटा आने पे इम्पोर्टेंट डेटा है, ध्यान रखना. वाओ वाओ वाओ, लुक एट दिस. ये डेटा आने वाला है. अनएम्प्लॉयमेंट रेट और एवरेज आर्ली अर्निंग का डेटा आने वाला है अभी 7 PM पर, सॉरी 6 PM पे. बट जो ब्यूरो ऑफ लेबर स्टैटिक्स है यूएस का, BLS, उन्होंने कहा है कि कुछ टेक्निकल डिफ़िकल्टीज आई हैं, तो नीड टू सी डेटा टाइम से रिलीज़ करेंगे या नहीं करेंगे. ब्यूरो ऑफ लेबर एंड स्टैटिक्स फ्लैग्स टेक्निकल डिफ़िकल्टीज अहेड ऑफ August जॉब रिपोर्ट्स. वाओ. पहली बार देख रहा हूँ ऐसा होते हुए. Let's go directly to the news. डेटा काफ़ी इम्पोर्टेंट है.
Now, right now, I think what's happening in companies is trying to be more efficient, and that doesn't necessarily mean you need to increase headcount to do that. You can also use technology to do that, and some of that is coming through, particularly from the AI front, and that probably is going to continue. So I think the job creations, not looking for it to sort of fall off the cliff, but again, we're coming off from a very high level over the last few years. I think what you're seeing in the labor market is some normalization as well. We think that corporate profitability will remain intact. I mean, companies have talked about many ways to even circumvent and navigate some of the tariff headwinds, and we saw that through the second quarter earnings season, and we expect that to continue in the next couple of quarters as well.
Stick with the market cap S&P 500, or do you want to go elsewhere? The cyclical tilts work in the small caps over the last month or so.
I think, look, you stick with secular growth, add some cyclical exposure. We've been doing that through financials. You know, if we get rate cuts, but the right rate cuts in terms of the Fed is cutting with the economy still being resilient, then I think you can broaden it out to get even more cyclical exposure, and small cap could be an interesting way to do that as well.
Nadia, good to see you. As always on this Payrolls Friday, Nadia Lovell there of UBS on an equity market, looking for maybe a bit of a cyclical tilt for the months ahead.
Yeah, and maybe we'll get some confirmation of that when we get the BLS numbers. But right now the question is, when will we get the BLS numbers? We would be 4 minutes and 30 seconds away from it, but evidently, sorry, we are currently experiencing technical problems.
We'll see if we do. Scheduled for 8:30 Eastern Time. The estimate in our survey, 75k. The range is pretty wide. 0 at the low end, 144 at the high end. There's a rate cut on the table for September 17th. Will this data reinforce the move we've seen from the Federal Reserve, the concern, the shift, the bias from the chairman of the Federal Reserve to tee up a rate cut? The jobs number up next.
For over 147 years, Bgrim has embraced doing business with compassion, always committed to giving back to society. We empower people and strengthen communities for a better future.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast? Iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France. In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast? Iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
The Jane Street troubles over Indian derivatives and what it tells us about India capital markets overall. And we go to a gold mine in Australia to see what mining companies are going to do with all that cash.
I think the difference this time is what's going on around central banks.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee at the Economic Policy Symposium in Jackson Hole, and this is Bloomberg.
The top names at the Fed are on Bloomberg.
We have a banking system that's a dual banking system. So we have national banks and we have state chartered banks. The FDIC and the Federal Reserve oversee those state chartered banks together with the state banking commissions. It's important that we maintain the ability to oversee both the state chartered banks and the OCC with the national banks, and that we have a rational framework that is very similar for all of those banks going forward.
Nobody covers the Fed like Bloomberg.
Live from New York City, welcome to the program. Now, we're expected to have a jobs report seconds from now. We'll see if we actually get one. The scores going into it look like this. Equity futures just about positive on the S&P 500, just about unchanged at the moment as we come into Friday at all-time highs. On the Nasdaq 100, higher by 0.5. In the bond market, 2-year, 10-year and 30-year yields look like this. Yields a little bit lower, down 3 on 10s to 412.79. With a jobs number, let's cross over to Mike McKee. Good morning, Mike.
Good morning. We do have the data, and it is not good. 22,000 jobs created during the month of August. That is significantly lower than the 75,000 anticipated. Last month, 73,000 revised up to 79,000. Change in private payrolls, 38,000. Last month, it was 83,000. The 2-month...
ओके गाइस, S&P फ्यूचर को देखोगे काफ़ी बड़ा जंप आया है डाउन साइड पे. डेटा देखोगे, एक डेटा नॉन फार्म एम्प्लॉयमेंट चेंज का नेगेटिव है डॉलर के लिए, पॉजिटिव फॉर गोल्ड एंड अनएम्प्लॉयमेंट क्लेम्स और एवरेज आर्ली अर्निंग का डेटा ऑलमोस्ट न्यूट्रल है. ऑलमोस्ट क्या न्यूट्रल ही है. तो 3 में से 2 डेटा न्यूट्रल है, एक नेगेटिव है गोल्ड और सिल्वर के लिए. तो मिक्स डेटा कह सकते हो. एक ही नेगेटिव मुझे तो ये लग रहा था, नॉन फार्म एम्प्लॉयमेंट चेंज का डेटा थोड़ा सा और ज़्यादा आएगा और ये अनएम्प्लॉयमेंट रेट बिल्कुल ही फ्लैट न्यूट्रल ही है, बिल्कुल ही नो एक्सपेक्टेड नहीं होगा किसी को. डेटा भी आ चुका है, अब और कोई डेटा नहीं है. लेट्स सी मार्केट क्या करता है. सेलर्स निकल जाना ठीक है. बाइंग का टारगेट भी इतना ही है लगभग. अगर इसको ऊपर जाना है तो डब्ल्यू बनाना पड़ेगा. डब्ल्यू बना दिया तो थोड़ा बड़ा टारगेट रखेंगे, नहीं तो दिस इज़ द फाइनल टारगेट. अगर ये यहीं से रिटर्न कर जाता है और नीचे आता है तो फिर बाइंग मत करना, क्योंकि ऊपर जाना है तो एक डब्ल्यू बना के जाए तो फिर चांसेस वेरी हाई कि ऊपर ब्रेक करने चला जाएगा. लेट्स सी, नहीं तो इतना ही छोटा सा टारगेट रहेगा ये, ठीक है. बाकी न्यूज़ बेस्ड कैंडल है. लेट्स सी कितना और मोमेंटम करती है ये कैंडल. देखोगे गोल्ड पे भी इम्पैक्ट देखने के लिए मिला है न्यूज़ का. जो डेटा आया था उसका, जैसा मैंने बताया, डेटा कम्प्लीटली 3 में से 2 डेटा न्यूट्रल हैं, एक डेटा नेगेटिव फॉर डॉलर, पॉजिटिव फॉर गोल्ड एंड सिल्वर. तो गोल्ड अगेन अपने ऑल टाइम हाई को फिर से एक बार टच कर चुका है. लेट्स सी, ऑल टाइम हाई के ऊपर ही निकल गया, 3579 के ऊपर चला गया. तो ऑल टाइम हाई को ब्रेक करता हुआ ऑलमोस्ट ऑल टाइम हाई गोल्ड. इंट्राडे देखोगे तो 1% पॉजिटिव है. सेम फॉर सिल्वर. MCX में भी वही हाल है. MCX और इंडियन गोल्ड तो सीधा गैप अप हुआ है और सीधा अपसाइड. डॉलर इंडेक्स को देखोगे काफ़ी बड़ा एक फॉल US डॉलर में, एंड बिटकॉइन में भी एक थोड़ा सी वॉलेटिलिटी. बिटकॉइन की वॉलेटिलिटी का मेन रीज़न यही है, अनएम्प्लॉयमेंट चेंज का डेटा कुछ खास आया नहीं है.
Figure out exactly what's causing this, but certainly there's a lack of demand. That would be paramount. There's also maybe a lack of supply, but we saw in the JOLTS data now that we have more people who are unemployed than there are jobs openings. So it's now becoming a question of why aren't companies hiring? And for that, the logical explanation is the fiscal policies of the administration. I'm looking at the revisions, and June was revised down by 27,000 additional to a negative 13,000. So June is now a negative employment print. July revised up by 6,000 from 73,000 to 79,000. But this does suggest there's a lot more weakness in the employment area, in the employment side of the Fed's mandate than anticipated. And I would think that that negative June print would certainly put the Fed on the path to, at this point, be cutting by 25 basis points. I don't know if it's bad enough for 50.
You wonder if someone puts up their hand on the FOMC and asks for that 50. Mike McKee with the latest. Mike, I'll come back to you later. 22K then, if you're just joining us, the payrolls report did drop on time 4 minutes ago. 22,000 downside surprise, 75 was the estimate. You're looking at a 3-month average now for payrolls of just 29,000. Captured in the bond market with lower yields, in the FX market with a weaker dollar, in equities. Equities still positive on the session by 0.25% on the S&P 500. The Nasdaq still up nicely by 0.7. The Russell, after a 7% surge in August, up again this morning.
This idea that this could lead to a reignition of the cycle, and it goes back to the question that you asked yesterday. Is this a Fed that will be cutting into something of a reacceleration, or that will cut and spur that reacceleration? And right now, the market, based on the market activity, seems to think that rate cut could be very helpful in allowing the reignition of the cycle.
We've got a fantastic lineup through the next 25 minutes or so. We can kick it off with Stephanie Roth of Wolfe Research. Stephanie, good morning.
Good morning.
You've had 5 minutes to go over this. What's your first take?
First take is another weak summer employment report. Immigration seems to be having another impact on the data. When you look at the household survey, the foreign-born population was, again, sort of the weaker part of it. Looking ahead, we expect that you'll have one more piece of negative news. So September 9th, once we get the annual preliminary benchmark revisions, that's going to be revised down to the tune of something like 600,000. So that's going to be another really bad negative headline. Then beyond that, we think that the signs will look a little bit better. So we have another couple weeks of this. It should be a dovish September FOMC, and then beyond that, we think that the tides could turn up a little bit. And then you'll start to see the economy start to pick up cyclically. You'll have a bit of a trough, and then the dynamics could look a bit different.
The first thing you went to, though, was population growth. Do you think there's still a big supply side story that's underappreciated in these numbers?
Yes, I do. I think that's a large part of what's going on. Of course, it's hard to sort of decipher month to month, but if you look at the household survey, foreign-born employment was down 342,000, while native-born was up 451,000. The labor force participation rate for foreign-born ticked down again. So it does look like you're seeing some continued weakness out of the immigration. That helps explain why payroll growth was negative in June. We had 500,000 people from the CHNV program whose visas got expired overnight from May to June.
If that's the case, why aren't we seeing faster wage growth? Why are we seeing the underemployment rate going up? Why are we seeing the average number of hours worked in a week kind of stay stagnant or even go down, right? These are the signs of weakness that people look at on the corners and say, wait a second, there is something here that speaks to the demand side as much as there is this also supply side story.
Yeah, I mean, wages were fine, up 0.3%, which is an okay number. Not a number that you would expect if the labor market was really falling apart. So what we're seeing is a combination of supply and demand. It's certainly not just a supply side story. Demand has also softened. But when you look for the months ahead, that demand should start to pick up as the tariff uncertainty starts to fade. So we had a lot of things, largely policy-driven, that hit the economy over the summer. That should go the other way later this year. But right now, it's a combination of a supply-side shock and also some significant hits to the demand side as well.
Mike McKee standing by. Mike, you've got some more.
Yeah, John, to the issue you're just talking about now, I'm not sure it holds a lot of water because the civilian labor force grew by 436,000 during the month, which is the biggest since April. And April was when the month that we saw the market, the labor data start to weaken. The participation rate actually ticked up. And at this point, it doesn't look like immigration played a big role. I have to mention here that the BLS cautions on its website and in its literature not to use the foreign-born, native-born population statistics to just tell you what happened this month, because there are statistical reasons that they don't. It's complicated. I won't go into it on the air, but I'm not sure that gives us a whole lot of information. It's been a talking point used by administrations from both parties, but I'm not sure that that makes a lot of difference. The biggest thing that we saw in the numbers here quickly is that leisure and hospitality and also education and health are the only two categories that really show any growth at all. Education and health about 46,000, leisure hospitality 28,000. There are an awful lot of categories that lost jobs jobs during the month. I will point out that construction jobs were down by 7,000. ADP had them up by 16,000. And in that strange comment the president made last night about the payroll report, which suggested he already knew what the numbers were, he said it's all construction now. But it doesn't seem to be construction either.
Mike McKee with the latest. Mike, thank you. Stephanie, you were following that explanation. Please, I want to give you some time to respond.
Yeah, so I mean, I think it's fair. The data are certainly volatile month to month. But if you look at the foreign-born statistics out of the household survey, it's been fairly weak for the past couple of months. So to the extent that, of course, it's not a perfect picture, but we do know that there's significant crackdown from an immigration perspective that is likely having some impact, although it's very difficult to get a clean read out of the data. You saw the foreign-born employment fall 342,000 in August, 416 in July. It's hard to say that there's no impact from an immigration perspective. Of course, it's difficult to get the exact precise numbers out of the household survey because it is notoriously volatile, as Mike just mentioned.
Yeah.
But it's hard to say that there's no impact from immigration.
Getting a range of responses already this morning. This from Neil Data of Renmac. The Hawks have lost on their own terms. Employment growth is still cooling, and the unemployment rate is rising.
You have right now a 100% chance of a rate cut baked in for later this month. So it seems like they are agreeing with his assessment and that on their own terms, this would warrant a rate cut. Key question to me is, what is the depth of the weakness? And I keep going to, yes, the bond market response, but that's actually less interesting to me than the stock market response.
Sure.
The fact that there is this belief that this is not great, but it's not so bad that it curtails the cyclical tilt that we've seen. And that, to me, is really the big question.
Let's turn to Jeff Rosenberg on that. He joins us from BlackRock. Jeff, welcome to the program, sir. What do we always say? Yep. The first move isn't always the right move, and let's see if this sticks, but the first move is stocks higher. What's your take?
Yeah, the first move is stocks higher, and this is bad news is good news for the stock market because the Fed's going to ride to the rescue and cut rates, and the economy's not going to fall off a cliff. Financial conditions will help that. It's a little bit circular, but if the Fed is going to underwrite the risk rally, then financial conditions will hold up confidence, even if you're having a little bit of a slowdown here on the demand side. So, look, that's the initial read. You know, Russell 2000, NASDAQ outperformance is really quite notable. People piling into what has already been working because the Fed is going to be behind that. And I think that, you know, on top of what Stephanie and you all were just talking about, yeah, it's a weaker report, but it's a weaker report that solidifies 25, but it's really about, and I think this is where Lisa was about to go, you know, what's the path from here? Does this put October on the table? Does this put 50 on the table? But what it really puts on the table is a Fed that gets back in motion for cutting rates, and if the economy's not falling off a cliff, that's a pretty good combination for risk assets, and that's why you're seeing, at least in this initial reaction, bad news is good news.
You said something really important there, Jeff, that this is an indication that the Fed is going to underwrite risk assets at a time when there is enough weakness in labor markets to justify that. What gives you confidence that the weakness that we're seeing is fixable or addressable by a couple of rate cuts this year by the Federal Reserve?
Well, I wouldn't overstate that and say that it is, but the confidence piece of that is really the primacy of financial conditions. And so, you know, while we're worried about a lot of things, one of the things we're not worried about is financial conditions, and they are exceptionally easy. And this is what I've said on the program many times. You know, we focus on the economy, and it's this kind of debate. Does the stock market worry about the economy, or does the economy worry about the stock market? And I think it's more the latter, that it's about financial conditions. And the stock market is less about the economy and much more about AI and technology. And that boost to wealth is supporting consumption, and that's what drives the economy much more than anything else. And so I think that's what kind of eases the concern here around the slowing in the jobs market that we're seeing out of today's data.
If we've seen the hawks throw in their hawkish tilt and become more dovish on the Federal Reserve and start cutting rates, does data like this, Jeff, make you think that maybe you have to price in steeper cuts over the remainder of next year, especially with the changing of the guard, that maybe this market is underappreciating the risk of more significant easing?
Yeah, it's a really good question. I think it's one that will turn our attention increasingly towards, which is, okay, to what end? Waller, gave a little hint in that in his interview earlier this week, 100 to 150 basis points. That seems to be what most consensus views around Taylor rule implies. So that amount is kind of priced in. I think the uncertainty that you're alluding to is, will that be enough? And do you end up pricing in, more than that? Right now, the kind of standard economic analysis, those Taylor rules, are arguing for a path of cuts, but it's a shallow path, because policy is only moderately restrictive. And yes, the delta and the change here is to the downside, the deceleration on the demand side. But as Powell's highlighted, this is also still a labor market that is, not tremendously out of balance. These are small increases. Yes, there are increases in the unemployment rate, but the supply side and the demand side are both easing at the same time. And you see it in the strength in the wages. The persistent, the one thing that didn't happen here is a big slowdown in the work week, something we'll keep an eye on. And so that'll hold up. How deep does this path have to get?
It's quite a move at the front end of the curve. Jeff, just to keep you up to speed on things, if you haven't got the Bloomberg in front of you, we're down 9 basis points at the front end of the curve, now trading at 340, 349, so into the 340s now, which is something we haven't seen all year. 10s are at about 4.09%, so we've broken down through 4.1. 30s are way off, away from 5% at the moment at about 481. We're down 4 basis points on the session. So, Jeff, let's talk about the shape of the curve. There is a fear held by some, not all, but some, that we'd see a repeat of last year, that we'd see some weak jobs data, the Fed would come out of the gates aggressively, and what you'd see is the front end come down, but the long end would actually sell off. Yields would rise, and maybe we'd get the same kind of move that we saw last year. Jeff, do you see things lining up for a repeat of 24, or is this different this time?
Well, it's certainly different this time, and, the day's focus is on the labor markets, and it's a premier data point for the growth side of the equation. But next week, other data will come out, and we'll focus again on the other side, which is the inflationary side. And so this is really the tension that you see within the curve, that if the Fed is cutting and they're telling us, and Powell was pretty clear coming out of Jackson Hole, there's a primacy of, within the dual mandate, the growth side, the maximum employment side of that mandate. But it's happening at a time, and this is where the hawks have, kind of been, squawking a little bit, that, hey, the inflation piece hasn't really been solved, and the uncertainty of the pass-through of tariff inflation is still in front of us. Plus, all the other things that go into the back end of the curve, the demand supply, the fiscal, the deficits, it raises the potential here, and you're seeing it in the curve this morning, that you just lag the declines from what the Fed is doing in policy rates to the back end of the curve. And that view is, pretty consensus in terms of the expectations of steepening. And we've had a lot of that put into the curve already. So, that may get a little bit tired, and you've got some technical positioning. Everybody's on the same side of the boat, so that can have an unwind. But the fundamentals behind a steepening curve outlook, cutting interest rates in the face of still sticky inflation on top of all the fiscal concerns, do argue that the pass-through from policy in the short end to the back end won't be as strong as we would historically expect, absent, the big shock of an economy that really decelerates and brings back a specter of not inflation, but deflation. That's how you get the back end to really outperform.
Jeff, appreciate it. Good framing as always. Jeff Rosenberg there of BlackRock. If you're just tuning in, you missed it. It dropped about 20 minutes ago, and it dropped. We're down to 22K. Big downside surprise on payrolls. The estimate was 75. I keep going back to the 3-month average. The 3-month average is pretty dreadful. It's 29,000 now. That's a real step down in payrolls growth. And Bramo, that's why you're seeing this market start to price in more rate cuts. We're down 9 basis points at the front end.
We're seeing the slowest pace of job growth going back to the immediate aftermath of the pandemic and what happened there. Question here is why this is considered a positive for risk assets, given that it is a deceleration in this belief, as we were just hearing from Jeff, that the Fed is willing to underwrite risk assets.
Mike Collins of PGIM, Fixed Income, joins us now for more. Mike, welcome to the programme, sir. It's another downside surprise. You were looking for a weaker economy. It looks like we've got one. How does this change the conversation on September 17th for the Federal Reserve?
Yeah, Jonathan, I'm just glad the number came out, right? Right before 8:30, we were looking at the bond market rallying in the front end, and the bond market was turning from vigilante mode to conspiracy theorist mode, right? So let's be thankful we got the number, but this is a continued deceleration, right? And I think what's happening right now is the markets are quickly moving from pricing in 2 cuts for the rest of this year, meaning 1 in 12 days and 1 in December, to possibly a cut at all 3 meetings, right? That's what's the transition that's happening right now in the markets. And I love the conversation around the wealth effect, financial conditions. Is good news bad news, or is good news, or is bad news good news, or is it bad news? And the markets are kind of maybe the stock market's whistling past the graveyard a little bit here, thinking, oh, it's all good. The Fed will backstop this. Financial conditions are easy. The wealth effect is real and powerful and persistent. But the way companies manage through a cycle, Jonathan and Lisa, right? They first reduce wage gains, and we've seen that, check that box. Then they start cutting the hours, check that box. Then they reduce new hiring, check that box. And the last thing they do is start firing people, right? And we're just kind of maybe on the precipice of that last box being checked. And companies do that to preserve margin, right? And I think you're seeing increasing evidence that companies don't have the ability to pass through these higher prices from tariffs, and they're starting to eat it in margin. So they have to use the labor line as the delta to maintain their bottom line earnings, and that's not great for the economy. So I do worry, whenever you have a recession, you always look back, because we always miss it, right? Everybody's always surprised when you have a recession, and you always look back and say, wow, how come I didn't pay more heed to these, yellow flags? And I think these are more yellow flags that are popping up. And so I'm just, urging some caution that maybe the stock market, valuations, which are really, heady already.
बिटकॉइन नहीं देखते फिलहाल के लिए, नेचुरल गैस और क्रूड ऑयल ही देख रहा हूँ मैं. बाकी गोल्ड देखो ऑल टाइम हाई पे, वहाँ से कोई रेजिस्टेंस मेरे अकॉर्डिंग तो है नहीं. अब मैं क्या बताऊँ उसमें सेल करें ना करें, कोई रेजिस्टेंस ऑल टाइम हाई से ऐसा बना नहीं है. तो अभी ऑल टाइम हाई से ऐसे बस ऑल टाइम हाई है, इसलिए सेल करना मुझे सही नहीं लग रहा. कोई रेजिस्टेंस होगा तो देखेंगे. ठीक है. नेचुरल गैस से सेल कर सकते हो, ऊपर आएगा नीचे आएगा तो बाय.
Years, you should have owned as much risk assets, as much high yield as you could have. Defaults continue to be generally really low, but you are seeing continued concerns and pressure and credit deterioration among the weakest tranches of the high yield and the leverage loan and the private credit markets, where these high rates, these high borrowing costs, especially for companies that have floating interest rates, are really starting to hurt them, have a big negative impact. So I think there's kind of this sneaking, credit deterioration happening out there that's not hitting the headlines yet. So yeah, I think it's still a world where you're supposed to be a little long duration, have a curve steepener on, 2 positions, fortunately, we've been in, and stay very defensive on the credit side. I mean, talking about high yield spreads, Lisa, you see the headlines of, high yield spreads are just inside 300, but even there, it is somewhat bifurcated. Everything has done well, but we're selling, double B rated high yield bonds with double digit spreads, Lisa, like inside 100, right? And so that is clearly a recipe for moving up in quality, where you can buy high quality, investment grade bonds and structured product, and even mortgage backed securities in some cases at similar, spreads, or not giving up a lot of spread. So those are easy trades that you still have to be disciplined and do.
Mike, it sounds like you trust this data. It sounds like you're not worried about politicization of the Federal Reserve. Just quickly, is that true, that that's all noise to you, and you look at the data and this just indicates negativity?
Well, you look at the big picture trend, and that's what you have to do when you look at these data, Lisa. And, we went from 400,000 job growth a few years ago to 200 to 100 to 50. Our rate of job growth has been cut in half now for 4 straight years, and that's been the trend we've been expecting and looking to. Now you have this big change in immigration deportation policy, which kind of is a step function lower in terms of the labor supply. So now maybe 0 to 100 is not even the right level of natural rate of growth of the labor force. Maybe it's 0, right? It's the low end of that range, and we're kind of punching toward that. So this is a big supply problem. But I'm worried that the markets are kind of discounting the demand side too, that the demand side of labor is weakening. And yeah, granted, if the Fed cuts 3 times this year, 3 times next year, gets the funds rate into the high 2s, which is increasingly what's being priced in right now, the economy can certainly survive through that. Companies will survive through that. We won't have a recession, and that's a really good outcome for all of us.
Mike, appreciate it. Have a good weekend. It's good to see you as always. Mike Collins there of PGIM Fixed Income. Stephanie Roth of Wolfe Research still with us. Stephanie, you've talked about that reacceleration in the economy. Is the Fed about to pour some gasoline all over that fire on September 17th?
Yeah, I think they might. But that's okay because the economy has slowed down. So the extent to which we have a little bit of easing in financial conditions isn't the worst thing. We have this shock from both the supply and demand perspective, but the demand side is important. And the extent to which it could help sectors of the economy like housing, which has been hurt by higher interest rates, it's okay for them to cut a couple more times. Then we're going to see that reacceleration, and it might be harder for the Fed to cut beyond that.
I hope you're right. This is what we got from Steve Cheverone of Federated just moments ago, Bramo. This isn't about a September cut. It's now about the Fed's path towards neutral.
Right now, we're looking at 3 rate cuts being priced into the market by the end of the year, including more than a full 25 basis point cut at the September 17th meeting. This is about neutral. This is about where we are in the economic cycle. And this will be about what the Fed will do even before we get a change in leadership. So maybe President Trump will get what he wants, even without any kind of changing of the guard.
Mike Collins just happy we got a number. That's how low the bar is right now.
Well, I don't blame him. Honestly, we were getting warning signs, big red flashing letters. We have a data problem, and then
we've got some data. It's good news. Stephanie, it's good to see you. Thanks for being here. Thank you very much. If you're just joining us, you missed it. 22K on payrolls. Big downside surprise. 75,000 the estimate. 3-month average now 29,000. In the bond market, this is what it means to fixed income. Yields down at the front end by 10 basis points. 2s at 348. In the equity market, equities like it. Equities up by 1/3% on the S&P. All-time highs heading into the weekend.
गाइस क्रूड ऑयल का एसएल जा चुका है, ठीक है, निकल जाना, होल्ड मत करके बैठना उसको। काफ़ी देर से रुका था क्रूड ऑयल, शायद कोई न्यूज आई हो, बट ब्रेक हो चुका है अब। लेट्स सी साइडवेज जाता है या फिर नीचे सपोर्ट पे आता है एग्जैक्टली। एसएल जा चुका है, इसमें डोंट होल्ड नाउ। देखना पड़ेगा कोई न्यूज़ ना आई हो। छोटा सा ही टारगेट था, छोटा सा एसएल डाउन। दो प्रोबेबिलिटी, या तो फटाफट गिरना चाहिए कंटिन्यूसली, फेक ब्रेकडाउन ना हो बस। कैंडल काफ़ी ज़्यादा वॉलेटाइल थी। एक्चुअल गैस भी साइडवेज ही है, अब सीधा यूएस मार्केट ही ओपन होगा 7 PM पे। Arabia wants OPEC Plus to speed up next oil production boost. Major news. Oil Plus leader Saudi Arabia wants to group to consider reviving more oil production ahead of its scheduled return at the next परसों आई थिंक संडे को ओपेक प्लस जेएमएमसी की मीटिंग भी है। एक न्यूज़ की वजह से ही मार्केट गिरा है। सऊदी अरेबिया ने कहा है बाकी रिमेनिंग ओपेक प्लस कंट्रीज से कि ऑयल प्रोडक्शन अक्टूबर में बढ़ाएं और ज़्यादा। दैट इज़ अ कम्प्लीटली नेगेटिव न्यूज। जो परसों वाली न्यूज ही है, जो परसों न्यूज आई थी, इसकी वजह से मार्केट गिरा था क्रूड ऑयल का। जिस दिन सोर्सेस के हवाले से न्यूज आई थी कि ओपेक प्लस कंसिडर कर रहा है अक्टूबर मंथ में, ओपेक प्लस के मेंबर्स कंसिडर कर रहे हैं कि ऑयल प्रोडक्शन कम करेंगे, बढ़ाएंगे बहुत ज़्यादा अक्टूबर में। फिर परसों न्यूज आई थी, दैट इज़ नॉट कंफर्म येट। सेम न्यूज़ अभी सऊदी अरेबिया की ओर से स्टेटमेंट आया है। वही चाहते हैं कि ओपेक प्लस जो कंट्रीज़ हैं वो ऑयल प्रोडक्शन बहुत ज़्यादा बूस्ट करें अक्टूबर मंथ के लिए। लेट्स सी बाकी ओपेक प्लस कंट्रीज़ और जेएमएमसी नेक्स्ट वीक क्या प्रोडक्शन इंक्रीज़ करने के बारे में सोच रहे हैं, क्योंकि अगर सबने अभी तो ये सिर्फ सऊदी अरेबिया ने कहा है, अभी डिसाइड नहीं हुआ है। अगर ऐसा होता है तो क्रूड ऑयल आने वाले समय में कंटिन्यूसली फॉल कर सकता है, और अगर ऐसा नहीं होता तो क्रूड ऑयल वापस रिवर्स कर सकता है। ओवरऑल बात कर रहा हूँ। तो मेजर न्यूज़ फ्रॉम सऊदी अरेबिया, they want more oil production from other OPEC plus countries for अक्टूबर मंथ के लिए और ज़्यादा ऑयल प्रोडक्शन करने के लिए कहा है सऊदी अरेबिया ने। ओपेक का एक लीडिंग मेंबर है, बस कह लो वो जो कहता है बाकी लोग नॉर्मली मानते ही हैं। तो इस पे कोई और अपडेट आता है तो the news completely bearish news for crude overall। थोड़ा नीचे ही आ जाए तो बढ़िया है। एक ब्रेकडाउन ना हो बस। स्ट्रॉन्ग सपोर्ट यार, ये स्ट्रॉन्ग ही सपोर्ट था वैसे तो। दिस इज ऑल्सो गुड स्ट्रॉन्ग सपोर्ट एरिया। न्यूज़ की वजह से ब्रेक हो गया है। नेक्स्ट सपोर्ट स्ट्रॉन्ग एक यहाँ पर है 5400 टू 410 के बीच में। अनटिल अनलेस कोई और न्यूज़ नहीं आती। न्यूज़ आ गई है वैसे, बेरिस ही है वैसे प्राइस के लिए तो। एसएल जा चुका है इसमें, तो नेक्स्ट सपोर्ट नॉर्मली यहीं पर है अनटिल अनलेस कोई नया सपोर्ट ना बना दे। दिस इज द सपोर्ट एरिया नाउ। ठीक है, तो सऊदी अरेबिया की ओर से स्टेटमेंट था, इसका इम्पैक्ट प्राइस पे दिखा है। सडनली डाउन जा रहा है, बेरी सी न्यूज़ है प्राइस के लिए। क्रूड ऑयल की बात कर रहा हूँ मैं। और कोई अपडेट आती है इस पे तो देखते हैं। फिलहाल के लिए ये एक स्टेटमेंट सऊदी अरेबिया की ओर से कहा गया। कल निकल तो सैटरडे, परसों संडे को ओपेक और जेएमएमसी की मीटिंग है। तो वहाँ कंफर्म हो जाएगा कि ये रेट कट करने वाले हैं या नहीं करने वाले हैं। अगर करेंगे तो हमारा मार्केट भी आज क्लोज जाएगा, तो मंडे के दिन हो सकता है गैप डाउन ही ओपन हो। कि वैसे इंडिया के लिए तो, ओवरऑल कंट्री के लिए बात करें तो अच्छा ही है। लूसीफर जी, बड़ा एसएल लगा। बड़ा एसएल क्यों लग गया? 18 ही पॉइंट का एसएल था, जा चुका है वैसे, अब नेगोशिएट मत करना। वो न्यूज़ की वजह से फ्लक्चुएट किया था। अब न्यूज़ सडनली ऐसे कोई आ जाए तो उस पर तो कोई प्रोडिक्ट नहीं कर सकता। अच्छे अच्छे सपोर्ट ब्रेक हो जाते हैं, रेजिस्टेंस भी ब्रेक हो जाते हैं। एसएल जा चुका है, अब बिल्कुल भी होल्ड ना करें कोई भी। ठीक है, वो 1 मिनट की कैंडल पे देखोगे तो मोमेंटम ही ऐसा था। वो लुक एट द कैंडल, अच्छा खासा सपोर्ट ले रहा था। एक्सपेक्ट था डब्ल्यू बनाने के, जा सकता था थोड़ा बहुत ऊपर। सडनली ओपन इक्वल टू हाई कैंडल बनी, न्यूज आई 6:23 पे, सीधा डाउन। और 1 मिनट में रिटेस्ट भी कर दिया। लेट्स होप थोड़ा नीचे आ जाए अब। तो ऐसे जा चुका है, होल्ड मत करना भाई। ये नहीं लेके बैठे हुए हो सकता है रिटर्न कर जाए, फेक ब्रेकडाउन हो, बट इट इज गॉन ऑलरेडी। 10 लॉट में ट्रेड कर रहे हो, आई होप रिस्क पता होगा फिर। थोड़ा नीचे ही आए तो बेटर है। बाकी रेंज ब्रेक कर दी है, वो एक ठीक है। कल का जो पूरा रेंज था दैट इज ऑलरेडी ब्रेकन डाउन। तो एक्सपेक्ट करेंगे अगर थोड़ा नीचे और आता है तो यहाँ से एक बाइंग का प्लान करें। नीचे सीधा अब 100 पॉइंट का है डिस्टेंस। नहीं और कोई डेटा नहीं है, डेटा 6 PM पे था, ये तो न्यूज़ की वजह से किया है क्रूड में। इनफ है। ठीक है, तो एक्सपेक्ट करेंगे थोड़ा नीचे आए इस एरिया के आसपास, एक फ्रेश बाय रीटेस्ट भी हो जाएगा उस केस में। गैस वापस आता है, वापस एक सेलिंग का प्लान रहेगा। ये भी वैसे साइडवेज ही है, थोड़ा नीचे आ जाता तो बाई करते, वो भी नहीं आ रहा एग्जैक्टली लेवल पे। ट्रेडिंग सेशन है, ज़्यादा रिस्क मत लेना, ठीक है, छोटे छोटे ट्रेड्स के लिए। जिनको हो चुका है प्रॉफिट, बिल्कुल अवॉइड करना। वॉइस लो आ रही है, नाउ इट इज गुड। ग्रेट 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 सेंड लूसीफर। बाकी 7 PM यूएस मार्केट की ओपनिंग है, उसका ध्यान रखना। 7 PM एग्जैक्टली यूएस मार्केट ओपन रहेगा। नहीं वो भी चलेगा। कल इन्वेंट्री, अच्छा वो नेचुरल गैस में, हाँ इन्वेंट्री नेगेटिव आई थी, बट मैंने बताया था वो नीचे सपोर्ट है, वो ब्रेक हुआ नहीं, वो सपोर्ट से ही चला गया था। थोड़ा शिफ्ट जरूर कर दिया सपोर्ट आज इसने, बट वो कल न्यूज़ के बाद भी सपोर्ट ब्रेक नहीं हुआ था। स्टॉक फ्यूचर गेन जॉब्स मिस फ्यूल रेट कट बैट्स। Coin price target $113,000 as FOMC meeting and bearish September loom. 1,13,000. India will continue to buy Russian oil despite US tariff, finance minister says. Trump says purchases fund Moscow Ukraine war efforts. निफ्टी बुलिस, गिफ्ट निफ्टी और यूएस मार्केट भी। 6 PM का जो डेटा था वो काफी ज्यादा बुलिस था, उसका एक इम्पैक्ट है। 6 PM के बाद देखोगे ऑलमोस्ट गिफ्ट निफ्टी हो गया। यूएस मार्केट है, चाहे वो डाउ जोन्स हो या फिर नेस्डेक, 6 PM पे जो डेटा आया था दैट इज बेयरिश फॉर US dollar ये non-farm employment change and positive for gold and silver as well as equity market को भी ले गया ऊपर. बाकी unemployment rate और average hourly earning US में कितना unemployment rate पड़ा है तो flat है, neutral, ना बढ़ा है ना कम हुआ है, तो उसका impact हर जगह देखने के लिए मिला है. बट अभी भी कल का दिन इम्पोर्टेंट है. कल अगर टैरिफ लगा दिया ना इंडिया पे वापस आईटी सेक्टर्स की कंपनीज पे ट्रम्प ने, तो इंडियन मार्केट जितना गया है उससे ज़्यादा डाउन ओपन होगा. एक चीज़ इंडियन मार्केट में यू ऑल नोटिस लाइक 3 बड़े इवेंट हो चुके हैं, बट इंडियन मार्केट रैली दिखाई नहीं रहा है. गैप डाउन होता है, गैप अप होता है, फिर रिकवर कर जाता है. बड़ी रैली आ नहीं रही है. जीएसटी रेट कट हुआ था, उससे पहले सबसे पहले बजट आया था आई थिंक, तब भी रैली कुछ खास नहीं आई. देन उसके बाद जीडीपी का डेटा आया था काफ़ी अच्छा, रैली नहीं आई कुछ खास. जीएसटी रेट कट, गैप अप जरूर हुआ, वापस सेल ऑफ आ गया. तो बड़ी सेलिंग नहीं आ रही, तो बड़ी बाइंग भी नहीं आ रही इंडियन मार्केट में, स्टक है. Place on their peak almost. 23,670.
Driving productivity. On the other hand, if the economy is growing,
Job market stalls in August while unemployment rises.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equityfutures.
News when you want it with Bloomberg News Now. I'm Karen Moscow. We have the latest report on the jobs market. U.S. job growth cooled notably in August while unemployment rose, fanning concerns the labor market may be on the cusp of a more significant deterioration. Non-farm payrolls increased 22,000 in August after a combined 21,000 downward revision to the prior months. The jobless rate ticked up to 4.3%, the highest level since late 2021. Begin more with Bloomberg's Michael McKee.
I'm looking at the revisions, and June was revised down by 27,000 additional to a negative 13,000. So June is now a negative employment print. July revised up by 6,000 from 73,000 to 79,000. But this does suggest there's a lot more weakness in the employment area, in the employment side of the Fed's mandate than anticipated. And I would think that that negative June print would certainly put the Fed on the path to, at this point, be cutting by 25 basis points. I don't know if it's bad enough for 50.
And that's Bloomberg's Michael McKee. And ahead of that report, the Bureau of Labor Statistics said it was experiencing technical difficulties. After that report, we saw bonds drive higher with the 10-year Treasury up 15-30 seconds, the yield at 4.10% right now. Futures remained higher with S&P futures up 0.3%, Dow futures little changed, and NASDAQ futures up 0.7%. President Trump signed an executive order implementing his trade agreement with Japan with a maximum 15% tariff on most of its products, including automobiles and parts. The deal includes a promise that Japan will create a $550 billion U.S. investment fund. We got details with Commerce Secretary Howard Lutnick, who is a guest this morning on Bloomberg Television.
This is a completely different kind of trade deal that anyone's ever seen before. So the idea is the Japanese government will give $550 billion to Donald Trump.
फॉरेक्स में यहाँ पर सपोर्ट है क्रूड ऑयल में, देख लेते हैं एक बार फॉरेक्स के चार्ट को.
To invest as the United States and Donald Trump sees fit in America. So the Japanese will get back their money, and 90% of the profits will go to the American citizens, the American taxpayer.
And that's Commerce Secretary Howard Lutnick speaking to Bloomberg Television. The deal was reached in July, but had yet to be formalized as Washington and Tokyo haggled over its terms. Tesla proposed a new compensation agreement for Chief Executive Elon Musk, potentially worth around $1 trillion. The unprecedented proposal is designed to incentivize Musk to lead Tesla for years to come. It sets a series of ambitious benchmarks he must meet to earn the full payout. Tesla chair Robin Denholm discussed the benchmarks while appearing on CNBC.
The first one, in terms of market cap, is actually doubling the size of the company today. And we have, the first in terms of the vehicle side is actually getting to 20 million vehicles that are produced and delivered. And we're only at just over 8. So to me, the plan is super ambitious. And that is what motivates Elon. So in coming up with a plan that will incent, motivate, have his time, focus and attention on Tesla, we needed to come up with a plan that was super ambitious.
And that's Tesla chair Robin Denholm speaking to CNBC, and Tesla shares are higher this morning, up about 2%. President Trump says tariffs on semiconductor imports are coming soon. Trump made the comments at a White House dinner attended by some of the world's biggest tech leaders. We get more with Bloomberg's Valerie Teitel.
He still touted that some companies like Apple will be carved out of these tariffs that he was foreshadowing could be coming shortly, him noting specifically that Tim Cook will be in pretty good shape. Of course, that is Apple's CEO, and with Apple achieving some of those carve-outs, it's also understood that some other companies with their chip exports and imports will be getting similar carve-out as well, as long as they tout these investments in the U.S.
And that's Bloomberg's Valerie Teitel. Now, Tim Cook was among those attending last night's dinner, along with OpenAI's Sam Altman, Google Sundar Pichai, Meta's Mark Zuckerberg, and others. Shares of Broadcom jumping up more than 12%. Bloomberg News has learned the chip maker is helping OpenAI design and produce a new artificial intelligence chip that could start shipping next year. And Matt Bloxham covers tech for Bloomberg Intelligence.
I think it's certainly intended to be a direct competitor to NVIDIA. And I think what we've learned is that initially, at least, the chip will be used purely for OpenAI's own uses, but that clearly would create demand tension for NVIDIA about where OpenAI is sourcing its processing power, and beyond that, could start to offer it to external customers too.
And that's Bloomberg's Matt Bloxham. There were fireworks across 2 hearings on Capitol Hill. Democrats challenged President Trump's nominee for Fed governor, chair of the White House Council of Economic Advisors, Stephen Myron, raising concerns about Fed independence. And Democrats and some Republicans faced off with Health and Human Services Secretary Robert F. Kennedy Jr. RFK Jr. Senate testimony also drew the attention of President Trump, who called him a very good person while acknowledging that he held different ideas. Sources tell Bloomberg UK Deputy Prime Minister Angela Rayner resigned from her post after a watchdog's investigation into her tax affairs. The departure throws Prime Minister Keir Starmer's Labour government into further disarray. And Russian President Vladimir Putin says that any foreign troops deployed to Ukraine before a peace agreement has been signed will be considered legitimate targets by Moscow's forces. Putin's comments came hours after European leaders repledged their commitment to a potential peacekeeping force. And again, that weaker-than-estimated U.S. jobs report spurred investor concern about a more pronounced economic slowdown. It drove bonds higher. Again, the 10-year Treasury up 15/30 seconds with a yield at 4.10%. S&P futures up 0.2%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
When the rest of the markets
क्रूड ऑयल में देखोगे यहाँ पर 2 चार्ट हैं क्रूड ऑयल का, एक एफएक्स ओपन ब्रोकर का है, एक टीवीसी ब्रोकर का है। एफएक्स ओपन ब्रोकर में बिल्कुल यहाँ पर एक सपोर्ट है, बट ये जो कैंडल है ना, उसका लो ऐसा हिट करके ऊपर जा रही है। ये कैंडल उसका ऐसा हिट कर चुकी है, स्टिल क्लोजिंग नहीं हुई है कैंडल, बट ये कैंडल उसका ऐसा ले जा चुकी है यहाँ पे। बाकी एक दूसरा चार्ट भी है, दैट इज़ टीवीसी ब्रोकर, क्योंकि अलग अलग ब्रोकर के चार्ट थोड़ा बहुत डिफरेंस दिखते हैं। तो एक दूसरा ब्रोकर है टीवीसी ब्रोकर, में भी सेम जैसा FX ओपन ब्रोकर में हुआ है, उसमें भी यहाँ पर एक सपोर्ट है, बट ये कैंडल उसका भी एसएल उड़ा चुकी है। जो नीचे विक बनी है ना, दोनों में एसएल उड़ाई है, कैंडल क्लोज नहीं हुई है, इसलिए ऊपर अभी भी जा रहा है। तो यस, वहाँ पर है सपोर्ट एक फॉरेक्स में। ठीक है, MCX में नहीं है, फॉरेक्स में जरूर है। बाकी इसके नीचे वहाँ दिखा नहीं रहा 15 मिनट में, क्योंकि इसके नीचे अभी चार्ट में लेवल ही शो नहीं हो रहे। काफ़ी पहले लेवल आया था इस टाइम पे, 2 जून 2025, तो उससे पहले के लेवल इसके नीचे नहीं है। ठीक है, तो फॉरेक्स में है, बट वो एसएल ले जा चुकी है। इसमें भी क्लोजिंग नहीं आई है, बट वो कैंडल ब्रेक कर चुकी है। अभी हम MCX के अकॉर्डिंग चल रहे हैं, तो उस पर अभी हाँ ठीक है। 7 PM US मार्केट भी ओपन होने वाला है। नेक्स्ट कैंडल पे ध्यान रखना थोड़ा सा। US मार्केट इज गोइंग टू ओपन एट 7 PM।
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations to that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We had a very weak jobs number, less than a third of what we expected. And as a result, markets are rallying because they're betting on a rate cut. Odds on WIRP are over 111% right now. NASDAQ futures up 0.9% as the Broadcom and Tesla stories help to rally the market as well. The small caps, of course, gaining 0.5%. They need a rate cut more than anybody. On the New York Stock Exchange, you've got Elf Beauty, and they are happy for a reason. The stock is up 600% in the past 5 years. And
that's Haley Bieber.
wait,
there.
Haley Bieber is
The woman, Haley Bieber with the glasses. I think that's Haley Bieber in the front
here.
row.
Okay, apparently that's Haley Bieber. It does look like a small tattoo on her neck, so I would guess that's a Bieber-ish thing to have. BCP Investment Corporation ringing the bell at NASDAQ, also plentiful and smiling, even though their stock is down 16-17% year to date. Apparently, they're doing some kind of rebranding after a little bit of M&A. So I'll look at that stock. I'll check back and see if it helps them to rally up to at least unchanged.
That would be lovely. And Matt, I have one stock that is decisively higher for us to watch this morning, and that is chipmaker Broadcom, up just under 15%. It's going to help OpenAI create a chip available in 2026, and that puts it in direct competition with NVIDIA. Broadcom also said its AI outlook will improve significantly, all of that helping to ease concerns about slowing growth, Matt.
All right, so Avgo on the run this morning. Tesla also rising. Stakeholders are offering Elon Musk a compensation package, or I should say the board offering Elon Musk a compensation package valued at $1 trillion, but there are some big ifs attached to that package over the next 10 years. It includes growing the company's market value to at least $8.5 trillion. So they would have to he would have to raise the market value of Tesla by more than 8 times. We're back with BlackRock Chief Investment Officer of Global Fixed Income, Rick Reeder. And Rick, I want to get your take on these Kevin Hassett headlines that the jobs number will be revised up by 70,000. I know we've seen revisions very often to the downside. That's one of the reasons the president fired the chief statistician. Does this number look surprisingly low to you at 22,000? Do you think it should be more in the 90s?
No, not necessarily. I mean, listen, I think that, you think about the size of the economy, just think about the size of the population. I mean, we're talking, if you take a step back and you talk about the size of these numbers and the delta, what it means, it's actually, they're not that large that you could have these revisions up and down around the mean. I mean, I think the thing that we focus on is what is your moving average and where are we, what's your 3 months, what's your 6 months, what's a trend look like? And the trend, by the way, we talk about it's a good economy. It's a really solid economy. The trend is a bit lower. I think one thing that you have to also reflect within these numbers is immigration has come down significantly. That was literally 100% of the supply of labor, what created in places like leisure and hospitality created a huge amount. So to see some diminution of hiring on the backside of that too, that's something you also factor in the equation. So, listen, I think what we're talking about is a moderate, an economy. By the way, it's not laying off a lot of people, but it's just the velocity of hiring is slow today.
Rick, though, I think part of what Matt's question also gets at is this isn't just a random market commentator, right? This is the director of the National Economic Council. If you have administration officials saying, don't believe the number, it's actually higher than it is. This is the first data point. We should also say, without the head of the BLS, does that concern you at all? Does it concern you either about the reliability of the numbers or about this market's willingness, getting back to our early conversation, to continue to fund deficits if there are questions about institutions in America?
So, listen, I mean, I will say one thing. I've been doing this a really long time. You think about, we're in the era of big data. I still am blown away that the markets focus on that one release, whether it's CPI, whether it's payrolls. So what do we do? What are we trying to do within our business? You can scrape the internet for data, credit card data, hiring data, et cetera. You can do some pretty incredible things around earnings reports. And so what we tend to do is you take the whole combination. You think about for years analyzing the data in places like China. You have to go and look at what are your other sources, power, what's happening to the power supply, what's happening to the different parts of the economy. So, listen, what we try and do to evaluate is just think about the broad landscape. Listen, I think the data is, the data that's always been released, including surveys. I never understand why the markets focus so much on surveys. What we try and do is we use a ton of signaling data, AI data related help to do this, to try and understand what's the broad landscape look like. And you generally get a pretty clear picture when you take a lot of factors in the equation.
I thought it was interesting, Rick, I was listening to Tom Keene and Paul Sweeney on Surveillance this morning with Ken Rogoff, and he was talking about the importance of the non-farm payrolls number. I've always called it the granddaddy of economic statistics. Listen to what he had to say.
Jobs Day has always been the big number because it's the most reliable number that we get sort of in real time. Maybe now and going forward, it's not going to be considered as reliable, and I don't know what we're going to look at.
So Ken Rogoff of Harvard fame, if you still trust that institution, and also the author of the new book, Our Dollar, Your Problem, which is on Tom's summer reading list, I think #1 rec. Rick, what do you think about that? Are we getting to a point where we can't trust our institutions?
So, I don't know. I mean, you could take a pretty cynical... By the way, I agree he's a very smart guy. I would take a couple of things in the equation. Yes, the payroll report. I've been doing, I don't know how many years. I actually calculated how many payroll reports where my heartbeat goes up and my blood pressure surges. It is the big number that we focus on. But like I say, you know, and I still, if you take a step back and think about, do we trust our institutions? Yes. Do you like living in the United States and think about how our ecosystem works that allows us, you know, to tap into different sources and look at different pieces of data? So I don't know. I'm not that skeptical on it, but listen, do you want to see good data? And what he says is right. Payroll report's a really good one. By the way, claims data is pretty good. The JOLTS data is pretty good. Listen, so we got to pull it all together and try and get what the broad fabric looks like.
Rick, while this is going on, we're also in the midst of Stephen Myron's confirmation hearing to join the Fed. A watcher writes in wanting to know your opinion on Myron yesterday, saying that part of the Fed's mandate is to have moderate long rates. What do you think that exactly entails? Is this a Fed that potentially, with more choices coming from the Trump administration, would do something like an Operation Twist, would buy long rates if they back up? What would that mean to have moderate long rates?
So, listen, I think there's a series of tools. I mean, the Fed has balance sheet, they have morals, they have suasion, they have a whole series of things that they can do in terms to effectuate where the curve is. By the way, I've always been blown away by how actually, just by talking, how you can influence where market pricing is according to what your forward opinion is going to be, where you're going to move things. So there's a series of things that you could do. And quite frankly, I think, part of why I said, you have some innovation at the Fed. If you go back to post-COVID, the Fed was incredibly innovative and thoughtful about different asset classes, about how they thought about balance sheet, where they utilized it, et cetera. And so, yeah, I mean, I think the idea that, could the Fed employ more tools? I mean, think about how we finance today and think about the growth of private credit. How do we finance real estate, commercial, resi, asset-backs, cash-flowing entities? The world of modern finance has just exploded in terms of tools, utilizations, parts of the cap structure. To think that moving the Fed funds rate at the front, the overnight funds rate 25 basis points at every meeting, it's just hard to believe that's the most creative thing we could do today.
Hey, Rick, really thoughtful as always. So good to get your thoughts. We covered a lot of ground. That is BlackRock's Rick Reeder. Thank you so much. And look, there are still lingering questions about the data, Matt, and about the White House. Kevin Hassett, as you mentioned, saying 70,000 jobs would be added. We were hoping to speak with the Labor Secretary, Chavez de Remer, about this. Unfortunately, she is no longer joining this program. I think I can speak for both of us when I say the Secretary is absolutely invited and welcome to join this program whenever she can.
Yeah, absolutely. And there's a lot to ask her about as well after the ProPublica report yesterday that suggested she has 2 mortgages listed as her primary residence, that she claimed primary residence for 2 mortgages that were 2 months apart. If that's the case, you wonder not only what she thinks about this jobs report, but whether or not she feels she needs to resign, because as we know, President Trump's administration has said that can't be tolerated. No matter who you are, they consider that to be breaking the law. Certainly Bill Pulte has tweeted as much. Yeah. And no one, as he said, is above the law. And that would include, you'd guess, if it's true, Lori Chavez de Remer, this according to ProPublica.
And a spokesperson did respond to ProPublica saying that it was her husband that had planned to retire there. But I guess what you're getting at, Matt, is this issue where it sounds like one rule for allies, another for enemies. We give her the benefit of the doubt. Should Lisa Cook then get the benefit of the doubt as well? So again, a lot of lingering questions, and we invite the Secretary to come join us when she can. All right, Matt, shall we get a check on markets this
Let's take a look at markets now after that jobs number came in so weak, but then the administration said it's actually stronger than expectations. We had a gain and still have big gains, 0.4%, a gain of 26 points on the S&P 500. Does that push us to a new record?
It would indeed, Matt, because we were at a record yesterday, so we don't really need to move that much to that upside to get that new record. So if you look at what's driving us there, it's the two stories we've been talking about all morning, right? It is Broadcom and it is Tesla. For Broadcom, it's developing chips for OpenAI. For Tesla, $1 trillion pay package for Elon Musk, the first $1 trillion man. Maybe he can help pay down some of the American deficit. Moving us lower is NVIDIA, maybe also reacting to that Broadcom news because they have a serious challenge now. In the face of that, Microsoft also moves to the downside. Let's just get a check on the sectors too. Again, about 10 minutes into your trading day, and only one sector into the red, and it is energy, with some headlines about maybe Saudi wanting to pump out more oil in the OPEC Plus decision. We're going to get that this weekend. Otherwise, everything is in the green, and it's the interest rate sensitive sectors. No wonder, because we are now implying that we'll get that 100% plus odds that we will get a cut. So real estate does well, materials, consumer discretionary, Matt. Again, everything positive for a total return so far this morning of 0.4%.
Yeah, I think fascinating that you have NVIDIA down 2.33% because it's such a heavy stock, right? It's worth 7.5% almost of the S&P 500, but Broadcom is worth 3%. So you could see that a 15% gain doesn't hurt much at all for that stock. Coming up, Lululemon slashing its outlook, disappointing investors for a third straight quarter. More on the yoga pants retailer next. This is Open Interest.
You missed it on Bloomberg Insight. It feels like a day in which the whole world is waiting for the exam results, and then you open up open up the paper to see what did you get. Except unlike exam results, in a way, this is less about how you did on the exam and a little bit more about whether the teacher likes you or not. I mean, it really is crazy. It all depends on whether you come to the table or not. It's not really the case, is it? No, because we had countries that did come to the table and had agreements that did well. We had countries that came to the table, had agreements, and didn't do well. We had countries that didn't show up at all and got basically the same result. We had countries that weren't even invited and ended up both up and down. I mean, so it really does feel a bit random. These are not small tariffs. These are the highest tariffs the United States has imposed since the 1920s and 30s, and there's going to be real consequences to this. Don't miss Bloomberg Insight live weekdays.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the threat to central bank independence, the Jane Street troubles over Indian derivatives and what it tells us about India capital markets overall, and we go to a gold mine in Australia to see what mining companies are going to do with all that cash.
I think the difference this time is what's going on around central banks.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. In case you missed it on Bloomberg Tech Asia.
How does Samsung think about competition? Because you have also so many Chinese makers coming out with foldables, with good cameras.
You know, rather than focusing on competition, I think we have been focusing on our consumers. I think healthy competition with other companies, I think will bring more innovations and then bring more benefits to consumers.
Don't miss Bloomberg Tech Asia every month.
Time now for some top calls, some of the analyst action in focus this morning. First up, UBS has downgraded JB Hunt to neutral, suggesting that an inflection point in truckload prices seems unlikely in the near term, but it is rallying with everything else this morning. Next up, Baird initiating coverage of TKO Group with an outperform rating, saying it's well positioned at the intersection of key themes in the media landscape. Those shares up 2 1/3%. Finally, Stifel downgrading Lululemon to hold after its earnings, highlighting challenges from tougher trade policy and cautious U.S. consumers. Now, Lululemon CEO says, quote, "We're seeing fatigue with the consumer, particularly our high-value consumer who's been with us for longer." For more, we are joined by Bloomberg Intelligence senior retail analyst Poonam Goyal. And Poonam, Lululemon shares getting absolutely destroyed in today's trade. Is this about a macro influence of weaker consumers, or is this just about the competition eating Lululemon's lunch?
It's about both and execution. I think execution is really key here. When you look at what's going on with the numbers and why the guidance was cut so much, it's because they don't have enough newness in stores. They're not moving as fast as customers would like. They really need to step up on that. And they say they're planning to, but it's not going to be till spring 2026 that we can see consistent newness at a high level.
Isn't this just how it goes, Poonam, when you're talking about fashion at this level? I mean, how long, even if, this company was a pioneer in getting women to wear yoga pants in public, how long can they dominate in this, category that they created?
They're still dominating. I mean, clearly there's more competition, but if you heard them closely, they said the performance business actually did well. It's the casual side of the business, which is about 40% of the mix, that is struggling. And that's where they need to really step up on innovation. Their Align, No-Line pants were a call out in the quarter. They've done really well. But when you listen to Scuba and you listen to Softstream and Dance Studio, these are some of their casual lines. They just haven't been performing. It seems like what you see there is what you see everywhere, and that's not what consumers want to see. They want to see new things from Lululemon. They want to see innovation.
Poonam, if you live in New York City, you've been inundated with all things U.S. Open, and it feels like U.S. Open things have gone hand in hand with Lululemon. Lululemon seems to be putting a lot of dollars into marketing. I think they sponsor TFO. They've had this pop-up at the U.S. Open itself. Yeah. Is this the route forward for Lululemon to try to grab onto some of this viral marketing, or is that not enough? Is it the innovation piece that you're talking about?
I think they have to do both, right? So you need to be where the customer is. You need to be on social. You need to do pop-ups. You have to be at these sporting events. That's table stakes today. That said, it won't increase their marketing spend. They said that they're going to hold their marketing spend at 5% of sales. And then on product is still king in retail, in any retail. You have to have the right product to get customers in your door and shop.
All right, so the stock has been massively underperforming. If I look at a 5-year chart, it's down more than 50%. How much do you think with the right moves, Poonam, this company can recover?
I think if they can get the assortment right and the customer back in the door in 2026, they will stand to recover from what they're seeing. That said, there are still tariff headwinds, right? Much of the cut in the guidance that you saw yesterday was because of tariffs. They took their gross margin guidance down by 300 basis points, and that was 190 basis points more than they previously expected, largely due to the de minimis exemption that was taken away.
All right, Poonam, thanks so much for joining us. Poonam Goyal there, Bloomberg Intelligence, talking to us about Lulu as well as the state of the consumer and tariffs. Coming up, investors are piling into gold ETFs as the shiny metal hits a record high. That's next. This is Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television. The top names at the Fed are on Bloomberg.
We have a banking system that's a dual banking system. So we have national banks and we have state chartered banks. The FDIC and the Federal Reserve oversee those state chartered banks together with the state banking commissions. It's important that we maintain the ability to oversee both the state chartered banks and the OCC with the national banks, and that we have a rational framework that is very similar for all of those banks going forward.
Nobody covers the Fed like Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee at the Economic Policy Symposium in Jackson Hole, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on in stocks at this hour. Right now, another record all-time high on the S&P 500, 6530 there as the index rises more than 0.4%. Broadcom part of that story. Let me show you the stock in just a second. NASDAQ up almost 1 full percent, so 0.9 to 23,840. The small caps gaining more than 1% as well as everyone is betting on a rate cut September 17. Now the question is 25 or 50 after that. Non-farm payrolls number that we saw showing only 22,000 jobs were added in the month. Although the administration says it's really more like 92,000. Actually, can't trust that data. NVIDIA right now down almost 2%, and typically that would be enough to drag the S&P to losses. But because Broadcom is up 12 or 13%, it's adding back most of that difference. NVIDIA worth 7.5% of the S&P 500, Broadcom worth 3%. Tesla gaining after the board approves $1 trillion pay package for Elon Musk. Google is up as well. Gold at an all-time high, and I think it's the 7th all-time high this month. 35.93, the level there for troy ounce, and the Spider Gold Trust gaining. Obviously, when gold rises, you want to jump into that too, right?
Yeah, and I just love the irony of stocks at an all-time high and gold at an all-time high. I think that tells you something there. And as you point out, Matt, investors have been piling into gold ETFs more than any other asset class this week, with that precious metal hitting another record. Bloomberg Intelligence ETF analyst and ETF IQ co-host Eric Balchunas joins us. Eric, if you look at the demand for gold between central banks, between, I don't know, our parents going out to Costco and buying gold bars, and the ETFs, how much are the ETFs contributing to the record rise we're seeing in the spot gold price?
Yeah, they're a factor. You know, people, I think, overrate the ETF's impact because if you take all the gold above ground, ETFs own like 1 to 2% of it. So there's a lot more going on. That said, ETFs are the fastest thing, the first thing people reach for. They're very accessible. So ETFs give us a good sense of sentiment, and we've got $44 billion into gold ETFs worldwide. About $24 billion of that's in the U.S. So international also. This is a global trade right now. We think the big trade this year is to keep buying stocks, but you buy gold and maybe a little cash just to make yourself be able to sleep at night, given some of the geopolitical uncertainty, the administration. So gold and stocks rallying at the same time was the trade all year. And anybody who's been buying both is thrilled with the jobs report because it means Fed rate cuts, which is usually good for gold and stocks.
I wonder why, though, we have the big gains in gold, even though you mentioned the geopolitical uncertainty, even though we know this administration loves gold, at least as a decoration. Isn't it normally supposed to be a hedge against inflation? And if you don't think that we're going to see inflation, why would you buy gold?
Yeah, you know, gold's track record as being a hedge against inflation is a little shaky. I personally think a lot of people were buying it as a diversifier. You know, just in case the tariffs were worse than we thought, just in case World War III broke out. Like, I just think it was the hedge you bought while you kept buying stocks. And this is something we've seen in the past. We saw a little bit of this in 2020 as well. In fact, that was the record year for gold flows was in 2020, 34 billion US. So we're at 24 billion US, 10 billion away from breaking the 2020 record. We'll see if it gets there. But that's what I think it's for. It's more of a diversifier. it's not even a great stock hedge. It's zero correlated, and I think it does its job. And this year, like I said, if stocks go up and gold goes up, that's obviously positively correlated. So it's a very interesting asset, in my opinion, and I think people use it mostly just to diversify.
All right, Eric, thanks very much. Eric Balchunas there, and your ETF expert. I think he's everyone's ETF
Literally the world's ETF expert.
This guy knows more about ETFs than anybody in the world. And that's why he co-hosts our ETF show. Bloomberg ETF IQ, you can see it every Monday at noon New York time, 5 p.m. in London. It's one that you don't want to miss.
Yeah, because the money is flowing into that gold ETF, and I wonder how much of that is also just not flowing into bond ETFs. He's talking about it being the hedge for stocks because treasuries haven't been working as the hedge for stocks. Just the volatility there, but I should say that with this move this week, you actually have yields much lower on the week, significantly lower at the front end, the lowest since 2022 after that board data.
I should point out, Bitcoin is rallying today as well. Digital gold is up 2.5% to $113,000. So that line of code is also incredibly valuable.
Yeah, but my parents aren't going to Costco to buy Bitcoin.
No,
so just
they buy it on the app, right?
Yeah, of course. Yeah, my parents absolutely are doing that.
Coming up, we'll talk to former Fed economist Julia Coronado, get her take on this jobs number.
I want to spend a little bit of time talking about your relationship with autonomous vehicles. It's been it's up and down for Uber over the years, even preceding your tenure. You have stakes in a lot of AV companies. Yes. You talked recently about wanting to monetize some of those. What's the strategy?
So we want to essentially support the AV ecosystem and continue to help that ecosystem develop, and then AVs penetrate into the marketplace. AV, we think, represents a safer way of transportation. Ultimately, we think it'll expand the marketplace as it makes kind of safe transportation in cities available to everybody. So we're big fans of AV. And generally, we're working with multiple partners in the ecosystem. Waymo, for example, in Austin, and Atlanta coming up. Wave, AvRide, there are probably 18 partnerships that we have in the AV ecosystem. And we want to help these players develop by investing in them in some cases, but really by working with them to bring their product to market. These are technologies that are unbelievably promising, but they've taken billions of dollars to develop, and 10 plus years. And it's one of those overnight successes that's kind of taken 20 years of development, but it's finally ready to hit market, and we want to help the ecosystem get there.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg. Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Danny Berger. Stocks headed for a second day of a record high as rates collapse on the front end and throughout the curve after much weaker economic data. Coming up, we're going to talk about just that, a cooling labor market. Jobs growth was far weaker than estimated in August, reinforcing the case for a Fed cut later this month.
And the trillion-dollar man, Tesla offers an unprecedented pay package to Elon Musk that would make him the world's first trillionaire, but not for like over a decade.
Yeah, it's still a trillion, even in a decade. And chip tariffs are coming. President Trump says that he will be imposing fairly substantial tariffs on semiconductor imports soon.
All right, we'll bring you that news as soon as it crosses. We begin with the jobs report, though. BlackRock CIO of Global Fixed Income, Rick Reeder, said the economy is still in good shape despite the weak data.
You have a dynamic where if you strip out healthcare, you're running negative, what is that, negative 24,000 jobs. You take the 3-month, 4-month moving average, we're looking at 29,000 jobs, with healthcare being 59,000. So if you strip that out and you look at what's happening to the broad economy, you have an economy that's, you have an economy that's actually doing well. You have a job market that's actually soft today. And
let's get more on the jobs data with Michael McKee, Bloomberg's international economics and policy correspondent. Mike, you heard from Rick Reeder there saying that this economy is fine. It's just a soft jobs market. You've had an hour and a half to comb through the data. Just how soft or weak and consequential was it for this economy?
Well, I think what we might be seeing, Danny, is something of a turning point or an inflection point for the economy. Whether it continues down this path, we don't know. You're going to have to wait another month, perhaps, to get a third month in a row of poor labor statistics. But it certainly does show that the economy has slowed. Now, the consumer has continued to keep spending at a slower pace, but they haven't seized up yet. And business spending was up in recent months. So it is hard to say that this is an economy falling off the cliff. Maybe it just needs a little goose from the Fed. We'll see. 25 basis point cut isn't going to do much very quickly. But obviously, there's a problem here. Whether it's a serious problem or whether it will be, we'll see a rebound, as Rick was suggesting, is something that we don't know and the Fed doesn't know yet.
I wonder, to that point, what you think about Kevin Hassett's comments. Kevin Hassett, of course, is the director of the NEC. He of the previously of the Milken Institute, of the AEI, of the Hoover Institution. He said that the jobs number will be revised 70,000 higher from here. So essentially, the view from the White House is that this report is wrong, right?
Yeah. I don't know if they think the report is wrong. They haven't come out and put the kind of negative spin on it that they did last month when we had such a big negative revision. Even
the Labor Secretary, Mike, to that point, the Labor Secretary didn't even come on to give us her spin. We had her scheduled for an interview that the White House canceled last night.
Well, that is also probably due to the fact that, as you've been talking about, ProPublica mentioned her in connection with mortgage problems along the line of Lisa Cook, so maybe she didn't want to answer questions on that. But to Hassett's point, what he's doing, and he would certainly, I'm sure, agree with me, is talking his book. He is in the administration. He has to make it look good. And in the past, he's taking an average of August revisions. Now, we have seen revisions significantly sort of change since the pandemic. And for the last couple of years, in general, what we've seen are revisions downward. So it's certainly possible that they get revised up, and it's certainly possible there are seasonal issues with this. But I think the 70,000 number is just sort of a past average. It's not an actual prediction by Kevin, and I don't think anybody would make a strong prediction on what the revisions are going to be.
All right. It's good to have Mike McKee here to set me straight once. I have Danny now to set me straight, which is like her new role.
Mike, I'll help you along here.
Mike McKee there in Washington, D.C., our international, our global policy and economics correspondent. Later today, by the way, Mike McKee is going to speak with Austin Goolsbee, Chicago Fed president, on Balance of Power. That is an interview you do not want to miss at 1:30 p.m. New York time. I will be listening to it on Bloomberg Radio.
Yeah, as will I. It will be a good interview.
Yeah. All right, joining us now is Julia Coronado, a former Fed economist who runs macro policy perspectives out of Austin now. And Julia, just first off, let me get your reaction to the jobs number. As Danny pointed out, it's dragged the 3-month average down to 29,000. That's the lowest since the pandemic.
That's right. I mean, it's difficult to put lipstick on this pig. It is a weak jobs report. Last month was a weak jobs report. More and more sectors are shedding jobs on balance, not adding jobs. The pillars of job creation, state and local governments, private education and healthcare are slipping. So this looks like a labor market that is feeling the strain, not just of the trade war, but immigration policy has meant that now construction is showing job losses instead of being a source of job gains, as it has been in recent years. And again, these budget cuts are what are hitting the healthcare and state and local government sectors. So with nothing to replace it as an engine. So it really is a very weak picture. It looks like we are, to me, like we're close to a tipping point. We can talk revisions and technicalities, but I think the bigger picture is, we've put a lot of disruptive policies into place and offset it with a small-ish tax cut. Meanwhile, the tax hike of tariffs continues to, take money out of the economy month after month. And we're starting to see it filter into the macro data, and we're probably just at the beginning stages of this. So we're going to see tariffs push up inflation. We're seeing all of this take a toll on job growth. This is an economy that's being pushed to the edge.
Is it an economy that needs a 50 basis point cut in September, Julia?
See, this is the tricky part for the Fed. I don't think this is a 50 basis point cut report because the unemployment rate only ticked up a tenth. Policies like restrictive immigration are viewed by the Fed as structural, not cyclical. You're simply choosing a lower potential growth rate by having less labor supply, and that complicates the picture. So I don't think, especially with the surge in inflation that we're expecting to see in the CPI next week, I think they really are in a tough spot. Definitely a 25 basis point with a lean towards more should the labor market continue to be weak. But there may be dissents in favor of a 50 basis point cut.
Where should we be, Julia? What's our star right now?
Our star is really difficult to gauge. We've got this strange dichotomy of a stock market. I mean, for a macro economist to watch a stock market rally off of this report, it's just not the way I construct the engine of growth. The engine of growth is paychecks to consumers who spend the money, who then justify the AI investments and all of the other optimism that the stock market seems to reflect. You need consumers having paychecks to demand those services. So I don't know. It's a strange combination of easy financial conditions and, a job market that's sputtering, and it looks very vulnerable. So, where should they be? What is our star? We're in the middle of so much disruption that thinking about equilibrium is challenging. And, what the Fed is facing, and we have seen it before. We were there in the 70s where we actually saw weak labor market and sticky high inflation. We've had that experience before. So that's why we're seeing some of this hesitancy on the Fed to be preemptive and get ahead of the curve. Especially when, again, between aging and immigration, we know that the break-even rate on payrolls is probably not far above zero right now. And that just is what it is. The Fed's not going to change that with interest rate cuts.
Julie, this data was kind of interesting when it came to that, though. Yes, reduced immigration obviously playing a big role, but the labor force outright grew in this latest report. There was no supply shrinkage. What did you make of that?
Well, the household survey, is very noisy from month to month. So we saw the labor force participation rate decline over the last 3 months. We had actually penciled in a rebound this month, which is what we saw, partly just reflecting statistical noise. It bounces around from month to month. If you get a positive one month, you get a negative the next month and vice versa. So I try not to read too much from month to month moves into household flows. The sort of rule of thumb for economists from the household survey is look at the ratios, not the flows. Look at the unemployment rate. Look at the labor force participation rate and the trends. So I don't put too much weight on that. It is something that on balance is going to be a constraint, labor supply. We're not going to capture that in real time in the household survey in terms of the flows, but the unemployment rate should kind of give us the overall correct picture of slack in the economy. And it's not huge. It's not widening. The SOM rule is not anywhere close to the 50 basis point threshold. So it's just kind of creeping higher. And then all the structural elements tell us that, growth, we're just not going to see that much growth in the U.S. If you don't have labor supply, you don't have growth.
By the way, you talk about the labor supply, the growth engine, and if I look at earnings for the S&P 500, growth was strong. I mean, double digits by some estimates in the last quarter. Is that set to slow down, you think, substantially, Julia, corporate earnings over the next few quarters?
Well, yeah, I think we did get some tax cut benefit to margins and to, earnings in this quarter, in this most recent earnings season.
But also tariff hits to margins, right?
Right, exactly. So we've got these offsetting forces. The tax cut helped kind of get us through a quarter. I don't think it's enough to be the engine of growth. So, yeah, I think there's some optimism built into those earnings projections. And, even when you look at something like a Home Depot earnings where they were saying, consumers came back, but they're still super cautious, not doing big projects, not wanting to borrow to fund bigger projects. That feels like, okay, there's a bounce. Consumers had to do some spending, but we're still in the same place of elevated uncertainty, lots of hits to growth. Again, the DOGE cuts are just starting to show through in the data as a weak hiring season for state and local governments and private education workers. That's not going to change next month. It's going to continue to be weak. And that has been an engine of jobs growth. So those people who are losing jobs or whose spouses are losing jobs are going to become more cautious. They're going to go into the holiday season with a great deal of caution. And we should see that in the consumer spending numbers in coming months. So I don't see the offset here to that. I don't see the engine of growth. A corporate tax cut is not an engine of growth. It is not leading to hiring. It is leading to protection of margins, which is fine for a quarter, but it's not going to drive the top line revenue gains that you need to see for it to be sustainable.
To your point, Julia, that idea of an economy that is at the precipice of change. Julia Coronado, thank you so much for joining us, former Fed economist and president and founder of Macro Policy Perspectives. Let's get a look, though, quickly at some of the stocks that are moving at this hour. With that is Bloomberg's Natalia Kenny-Javich. Hey, Natalia.
Hi, Danny. So I'm looking at shares of Lululemon. They are down by 15% and now trading at the lowest level since March 2020. So the company downgraded its earnings guidance for the full year. Definitely the retailer is facing an increased pressure from both tariffs and slowdown in sales. It said it would take about $240 million hit from tariffs and the end of the de minimis exemption. We saw at least 5 analysts downgraded the stock today. Then in the tech space, I'm watching shares of Broadcom. They are up by 10% today. The company said it's helping OpenAI to design and produce its artificial intelligence accelerator from 2026. It also said that its artificial intelligence outlook will improve significantly in the fiscal 2026. JP Morgan analysts are saying that strong performance puts Broadcom on track to drive about $20 billion in revenue from AI in full year of 2025. And then finally, in the healthcare space, I'm watching Novo Nordisk and Eli Lilly. Shares are down despite the news that the WHO, the World Health Organization, added Ozempic and Mounjaro to its list of essential medicines that could expand access to drugs around the world. And the WHO also said that generic competition will be encouraged to drive the price of those drugs down.
All right, Natalia, thanks very much. Natalia Knežević there talking us through some of the stocks that are moving at this hour. Coming up, Tesla CEO Elon Musk could be on his way to becoming the world's first trillionaire, but it's going to take more than a decade and a lot of success. We'll discuss his new pay package proposal next. This is Bloomberg Open Interest.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the threat to central bank independence, the Jane Street troubles over Indian derivatives and what it tells us about India capital markets overall, and we go to a gold mine in Australia to see what mining companies are going to do with all that cash.
I think the difference this time is what's going on around central banks.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
In case you missed it on Bloomberg Brief.
We do see that there are some real inflationary pressures. I mean, one thing is, of course, coming from the tariffs. We are seeing some push from various kind of climate situation, and so that is why we also think that there is a link between climate risk and financial risk. I do think there is for sure a danger that inflation could be quite persistent here.
Don't miss Bloomberg Brief live every weekday.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
All right, the S&P 500 has turned negative just after our conversation with Julia Coronado from Macro Policy Perspectives, where she said she doesn't understand why stocks would rally on this jobs number. It was only 22,000 for the month. It averaged only 29,000 over the last 3 months, and that's the lowest 3-month run that we've had since the pandemic. As a result, stocks were initially up because we were fully pricing in and still are fully pricing in one rate cut. However, maybe it's for the wrong reasons. Right now, it looks like that's what stock investors have decided, right?
Yeah, that's the thing, right? If we are getting a rate cut because unemployment's at 4.3%, the worst 3-month growth since the pandemic, it's the wrong reason. I would point out we're also getting a post from the president on Truth Social saying that Powell should have lowered rates a long time ago. But again, Matt, I think your point very much so stands. These are cuts for the wrong reason, especially if we're talking about 50 basis points.
Yeah, and we heard that, well, we saw a statement from Lori Chavez DeRemer. She had been scheduled to come on this program. She, through the White House, did cancel that interview last night, right after the ProPublica report came out, showing that she also, or alleging that she also has claimed 2 mortgages as a primary residence, which we now know you're definitely not allowed to do in the eyes of the administration. Nonetheless, she put out a statement saying, second quarter GDP smashed many economists' expectations, demonstrating strong growth and resilience. All job growth this year has been in the private sector among native-born Americans, making sure that no one who immigrated to this country, even fairly, is part of that statistic. And she does make sure, of course, to thank the president a number of times in her statement.
And, you know, I think that statement's also interesting is because nowhere in it does she say that the data is wrong. Nowhere in it does she say that you can't trust what the BLS is saying, even though Kevin Hassett was on media earlier, I believe speaking to CNBC, saying that he thinks the numbers will be revised up 70,000. So it depends, I guess, what data as to the ones you can rely on.
All right, so that's one of the big stories today. There are many, you know, internationally, if you look at the collapse of, well, it's not collapsed yet, the crumbling UK government was an interesting story this morning. The Broadcom news is amazing. They're going to maybe in the markets giving them some credit for challenging NVIDIA. And then this, Tesla's board has proposed a new pay package for CEO Elon Musk worth about $1 trillion. The plan spans 10 years and includes a series of really difficult benchmarks for Musk to meet to earn the full payout, but it is still massive. Let's talk to Steve Mann right now, Global Lead Director for Auto and Industrial Market Research at Bloomberg Intelligence. And Steve, the shares are up, so, you know, shareholders, they are, you know, part of what is sometimes a fanboy cult for Elon Musk. Is this because they believe he's going to be able to achieve it?
Well, I mean, the stock is up, but you know, if you compare it to their peer group, it's not up that much. I think investors are cautious. This is only a plan. It hasn't been passed yet. So we'll see what happens on September 15th when, at the board meeting. But look, I think the overall thing here is that you know, it's a lot of money, but it's not that easy to get to. Some of the operational metrics that it needs to meet, it's very, very demanding. So look, it's a great plan. I think it's not going to be easy for Elon Musk to get there, and I think the investor can see that look, you know, it's going to take a decade, and some of these operating metrics are very, very high.
Steve, I'm like so for this. More companies should do this thing. Set an impossible metric and just make the CEO shoot for the stars and see what happens. But if we just look at the numbers itself, $8.5 trillion is where they want Musk to grow the valuation of this company within 10 years. That would be twice the valuation of NVIDIA. What would Musk and Tesla have to actually do to get a valuation of that level?
Yeah, they can't make it easy for Elon Musk. If it's too easy, I don't think the investors shareholders are gonna pass that. So they're gonna make it a little bit challenging for him. You know, I think some of the highlights of those operational metrics is like the 20 million vehicles that they need to deliver between now and 2030. That's easily achievable. They're delivering around 1.8 million annually today, so it's not that hard to get to. I think what's really difficult, will be challenging, is the FSD subscription. So they're looking for about 50% take rate on FSD. Currently, it's less than 10%. It's probably around 5 to 6% right now. And then lastly, the EBITDA, adjusted EBITDA, metric of $400 billion annually, annual run rate of $400 billion. That's really hard to achieve because, you know, based on our forecast, you basically need to hit over $1 trillion revenue for the company, and that's about probably close to 8 times where it is today. So not easily achieved. But look, in the last pay package that he received, those were stretch goals too, and he was able to do it. So it really comes down to execution and how he's going to get there.
I mean, Lord knows what kind of inflation rate we're going to see over the next 10 years. Maybe it's not that difficult to achieve. an octupling of the market cap. But Steve, it's weird for me to hear you talking about cars in this regard. I know you cover automakers for Bloomberg Intelligence, and you and I often have great side chats about cars. But this is, at least according to Elon Musk, not a car story. It's a robot story, right? He came out recently and said Optimus will be 80% of Tesla's valuation. So what do you make of that? And how weird is that for your job?
Yeah, that's a good point. I think they're all integral. One of the things that, well, first of all, it's probably not going to be an auto company down the road, given that the easy targets that he's getting for car delivery. The challenging part is the AI stuff, the FSD, the Optimus robot. He needs to deliver 1 million, and I think that's going to be really hard to deliver 1 million unless he's going to use a lot of them in his factories. Then he'll be able to deliver 1 million.
Hey,
so
Steve, just quickly, if I can jump in, because one of the other things we wanted to get your take on was in this proxy statement, they also talked about this idea that he needs to have assurances that Musk's involvement with the political sphere would wind down in a timely manner. What did you make of the inclusion of that in the proxy?
Yeah, I'm not surprised that's it's included in that, and I think the board is suggesting an against vote on that. I think he's already doing that. Like, we haven't heard a lot from him on the politics, and I think in the past few months, with his focus on the company and his other companies, we're seeing like the launch of a successful launch of his rockets. We're seeing this plan coming out, and I think he's already really focused on the companies he's managing. So I can see why the board's actually voting against that proposal.
Steve, great to get some time with you. Really appreciate it. Steve Mann there of Bloomberg Intelligence. He leads our car coverage. I sometimes call him up just to shoot the
chat
S.
Cars.
Yeah, just to chat cars, He has incredible knowledge on the industry and also pretty good taste, I'd say. It's important.
Does he own a Tesla?
No, I don't believe so.
Okay, we'll leave it there. Maybe that says everything.
It's nothing he's ever admitted to me.
I see. But to your point, he is talking about Tesla. He talks about cars, but it's much more than that, Matt.
We are going to talk about cars.
Yeah, we
Actually, coming up, BMW has released its Neue Klasse, the iX3.
Of course.
Mercedes has released its new electric, second-generation electric car, the GLC. The CEO of Mercedes told me and Hannah Elliott on my Hot Pursuit podcast that he's going to release a convertible G-Wagon, and SparkCharge CEO Josh Aviv is going to join us to talk about his company expanding its giant, already large EV charging network.
Between 2010 and 2025, we have a new form of capital. Because what lives in here, ladies and gentlemen, is a machine. It's not just what's in here, but all the networked machines that are connected to this. Satellites, the carbon fiber cables, the algorithms, the server farms, all that. I call this cloud capital because it lives supposedly on the cloud. It's not on the cloud, it's on Earth, and it's inside our oceans. What does this do? What does Amazon, or the Google, or the Meta algorithm do? It doesn't produce anything. What you buy on Amazon has been produced elsewhere, hasn't been produced by Amazon. What it produces is a remarkable power to input and infuse desires and thoughts into your mind. So it's the first time we have machines that do that which once upon a time advertisers, human marketeers, orators, preachers, politicians, poets did, which is to change our mind, to modify our behavior. This is now automated. So anyone who owns concentrated quantities of cloud capital has an immense power.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
It will start below 70,000 euros. There will be a 6 in front of it. So the pricing will be very competitive. The price is achievable. And if you compare that to the content of the car, this is extremely competitive.
Now is BMW CEO Oliver Zipse talking with Bloomberg's Oliver Crook, a couple of Olivers there. The automaker unveiling in Munich the new second-generation electric platform. The iX3 is the first vehicle on that platform, showcasing the company's most advanced hardware and software. BMW expecting EVs to contribute now more than 50% of its sales in 2030. Here with more is Bloomberg's Global Autos editor, Craig Trudell. And Craig, I mean, I guess the looks matter to some extent, but the important thing about this vehicle is more than 500 miles of range on one charge. It can charge more than 200 miles in 10 minutes. So it's leaps and bounds above other Western EVs.
Yeah, the range is really strong. The charging time is extremely competitive. And to your point on looks, I know this is a subjective thing, but they fixed the grille. They don't have a bucktooth looking electric vehicle that's an SUV. That has been, something that has been, sort of the source of mockery. I think that the vehicle looks different inside and out. And this is a company that has bet a ton of money, more than 10 billion euros toward this Neue Klasse line of vehicles. And it's going to change over its lineup extremely quickly. So this is really the start of a story that we're going to be talking about for the next couple of years.
Did they fix the grille? Craig, Matt, I'm looking at you can't tell me this thing doesn't look, show the picture. You can't tell me this thing doesn't look like a snapping turtle. It's crazy looking. I don't think this looks good.
It's more kidney-like.
Right? It looks like
a little bit more traditional. I have to say, I think it doesn't look like that much of a difference. To me, it looks still like an iX3. The real difference is in the concept that they have, the Neue Klasse. That's like their 3 Series concept, which I hated at first, and I've been talking to our autos reporter, Will Wilkes in Frankfurt, and I'm liking it more and more. It's bringing back 2002 vibes, but this is just like a grocery getter. Can anyone else match this technology right now, Craig? I mean, without putting in, a 250 kilowatt-hour battery, can anybody else outside of China do 500-mile range?
I think the answer to that actually lies with the battery suppliers. And, is there some differentiating technology that a manufacturer like BMW can bring to the table? Absolutely. But for the most part, these cell suppliers now are kind of calling the shots for this industry. So a company like CATL is, what everybody is counting on for these performance metrics. And it is going to be the case that you're going to have to sort of differentiate in other ways. That being said, I think BMW absolutely, is doing the things that they need to do with CATL cells to achieve these metrics. And it is, something that even in China, I think will be competitive. Will it be much higher price than a lot of other electric vehicles in China? I think that will still be the case, and that may cap their potential in that market because things are still just extremely cutthroat in China.
All right, Craig, thanks very much for joining us. Craig Trudell, there, our global autos czar. He's covered vehicles for us out of Detroit, out of Tokyo, and now in London. Check out his Hyperdrive column, especially focused on the future of automobiles. Staying in the world of EVs, we've got another expert with us here on set. Spark Charge is the world's largest mobile electric vehicle charging service provider, raising over $30 million in new funding. The money will help expand its mobile EV chargers across North America. Mobile EV chargers, note. Here with us is the founder and CEO, Josh Aviv, who also happens to be somewhat of an EV expert. Josh, let me first get your take on this BMW technology. I know Mercedes has a new one out, the GLC, and we're starting to get into a world where range anxiety shouldn't be that much of an issue.
Yeah, I agree. I mean, I think what BMW did is amazing, right? And I think you asked a good question. Is there anyone else out there with a 500-plus mile vehicle? The Cadillac IQ, very big vehicle, but I think some people have started to see up to 600 miles when they're hypermiling. So I think a lot of consumers are going to like that, right? I think a lot of consumers are going to push beyond this 250 to 300 mile range and start to see 500 miles. And I think that's great for the industry.
I have driven, just for the record, the Cadillac Escalade IQ, and I did enjoy it.
Yes.
It is a land yacht.
Yes.
Of largest proportions. I think it has a 200-plus kilowatt-hour battery.
205 kilowatt-hour battery.
Okay, but doesn't this all beg the question, if all of a sudden you don't have that range anxiety anymore, if you can drive this BMW for hundreds of miles and not worry about it, how does that change your business? Because you're also trying to address range anxiety.
Absolutely. So for us, it's a great thing, right? We like to see cars with bigger batteries. Bigger batteries mean more charging, right? And so I think that's great for everyone in the industry. It's a win-win-win. Consumers can drive longer. EV charging station companies like ourselves are able to fuel them quicker and give them more energy, so we love it.
Your big business isn't fleet. You're not going to be charging up Danny in her BMW iX3, right?
Although I'm sure if I called you up, you'd help me out. But
well, actually, I think that's a great question, right? Will we start to see rental car companies adopt these and put them into their fleets because they have longer range, right? I think that's a very, very good value proposition for companies like Hertz and Avis. Hey, we've got a car that's 500 miles. You might not need to charge it on your weekend rental. Just bring it back.
By the way, does the battery chemistry changes that we see in automotive, does that come to Spark Charge also? Do you have to constantly be keeping up with the top chemistry?
We are battery agnostic in our technology, and we designed it to be that way so that we could always take advantage of the best battery technology out there. If we have a more denser, lighter battery pack, then we can deploy more energy on a single go.
Just how capital intensive is that? Matt mentioned that you raised $30 million in May. Congratulations. What is that going towards?
Absolutely. It's going towards expansion. So we're happy to announce we're available in all 50 states across the United States. And we just expanded into Canada and Mexico. So we are now covering almost all of North America. And we plan to expand into Europe and the Middle East, hopefully in the next couple of months.
So your charging network is mobile. That means you meet the customer where it is.
Yes, sir.
What do you think about the advance or lack thereof that's been made in the fixed charging infrastructure? Because that's one of the biggest complaints. I talked to Ola Kalenius a couple of days ago, and he says he thinks they're doing not a great job in most European countries. Here it seems a little bit better, but what's your take on that?
Absolutely. So I think...
as an EV driver yourself, right?
As an EV driver, I think we're going through multiple different phases of, like, call it infrastructure in the United States. If you remember when infrastructure first came out, 50 kilowatts, 50 kW was like super fast. Everyone was excited. Then we started to see 200 and 350 kW come out, and that allowed people to charge quicker, get on the road, travel further. I think we're starting to enter what we call the third phase of infrastructure in the United States, where we're starting to see 400 kW charging stations that can charge cars in a matter of minutes. And I think the fourth stage will be that holy grail, that 1,000 kilowatt charging station, or what we call megawatt charging. I think once we see that, that'll be, call it the fourth and almost final stage, where now it's just about as quick as putting gas in your car. You can charge your EV just as fast. And I think adoption will grow much faster after that as well.
But you mentioned all the geographies you're expanding into, but within those geographies, how does it change based on whether it's an urban area, suburban, more rural? Does the strategy need to change of where those are placed and how much investment you're putting into it?
Absolutely. From the Spark Charge side?
Yes.
From the Spark Charge side with fleets, if it's a fleet in a more rural area, it really means that basically they're servicing, for example, a lot of consumers that are a lot further out. So you're talking about an Amazon, you're talking about a rideshare company or something like like that that wants to basically service consumers in an area that there is no infrastructure. When we're servicing fleets that are in more dense cities and more urban environments, then what we're seeing is that they're typically needing quicker charges. So it's really a quick go because they want to turn the vehicles quicker. It's not so much long distance, but speed to get the vehicle back out on the road. So we typically deploy faster charges in those urban environments.
I have a bit of a wonky question because I've been driving this Rivian R1S this week, which the design is fantastic, but it's still on the 400-volt architecture. And I don't know why they chose to stay there. It's like using a tiny little hose, right, to try and get water out of. Is everybody else moving to 800 volt? And then what's the next step?
I think most car companies are going to move to 800 volt, but I think because a lot of the charging stations that we have deployed today work on 400 volt, I think what you'll see is like this interim. Like, for example, the Hummer can do both. So the GM Hummer can do both 800 volt charging and 400 volt charging.
So can the Ioniq,
and the Ioniq. Yeah. And I think that's the right way to go so that you don't leave any of the legacy systems out.
All right.
By the way, I like how you said that question was wonky, as if all the other ones you asked weren't wonky car questions, too.
It's rare that I get to talk with someone who knows so much about cars here on set, and I appreciate it as well. Look forward to having you on my podcast. On
Absolutely.
Hot Pursuit. Josh Aviv there is the founder and CEO of Spark Charge. It is the largest mobile charging network in the world. Mercedes-Benz CEO Ola Kalenius, as I mentioned, says the electric G-Wagon, well, he already talked about that with us. Hannah drove it. He already talked about the baby G, and we know it's coming. But now he's going to put out a cabriolet. This picture is not of the new product. That's the older one. We don't know what it's going to look like, but it was breaking news on my podcast. He spoke with Hannah Elliott and myself ahead of the Munich Auto Show.
The standout debut is the all-new electric GLC, which is based upon a whole new architecture that we call Mercedes-Benz Electric Architecture, MBEA. Considering that the GLC today in our portfolio is our most sold model, we have taken that extremely popular car and literally in every dimension taken it to the next level. So this is a very, very big world premiere for us. People who maybe have not made the leap into the electric era yet, we have tried to engineer out every reason why you wouldn't. And of course, it's going to be a Mercedes through and through.
All right, in that soundbite, he was actually talking about the GLC, which is their smaller SUV that will go up against the iX3. They'll be showing that at Munich this weekend. But really, the interesting thing is that they're finally coming back with a convertible G-Wagon. This is obviously a much more expensive vehicle, right? I wouldn't be surprised to see a 2 in front of the number.
Well, what is like the audience for this versus like the baby G?
The baby G will be smaller and more affordable.
Who are the people buying these, basically, is what I'm asking.
I'm not sure about, I will say that I had, I got one in 2020.
Right.
Just the base G500. I was living in Berlin, and it was a fantastic vehicle. Back then, the base model came with a twin turbocharged 4-liter V8. Now the base model, and this is another problem in society, has moved down to a 6-cylinder motor.
A huge problem for society, yes.
But even in the G class, like, that's not where you go to save costs, right? But I didn't get to ask him about that. The convertible is more showy. I'm going to guess Kardashians will probably get one.
I'm just going to listen to your podcast to get all of this. I can't wait. Again, Hot Pursuit, Matt's podcast with Hannah Elliott. Definitely one for you to check out. Okay, coming up on this show, away from cars, Jane Street, taking India's market watchdog to court on Wall Street Week. We're going to explore the risks that country's regulators are navigating. You're watching Bloomberg Open Interest.
case you missed it on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What do you see?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee at the Economic Policy Symposium in Jackson Hole, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Time to get a little teaser of this week's Wall Street Week. From high-speed trades to household savers, India's markets are evolving. David Weston dives into the country's regulatory tightrope as retail money pours in and IPOs surge.
As a market maker with a unique model, Jane Street's business makes bets on inefficiencies in markets. Bloomberg reporter Catherine Doherty has been reporting on its business in India.
Jane Street has kept its trading secrets close to their chest, but it was really the Millennium lawsuit.
Jane Street saw an opportunity in India's equity markets, engaging in a strategy called index arbitrage.
So the firm was essentially placing these large bets that were then impacting the other side, and they were profiting from the way that these markets were moving. So the regulators in India have identified this as a manipulative trade, and the firm has said it was an arbitrage trade and not market manipulation.
India's market regulator, the Securities and Exchange Board of India, or SEBI, banned Jane Street from the country's securities markets. Jane Street has filed an appeal alleging that SEBI denied it access to documents it needs to defend against market manipulation accusations. Ironically, the problem with India's capital markets historically has not been encouraging too much risk, but too little. Nilesh Shah has watched the evolution of the country's capital markets as the managing director of Kotak Mahindra Asset Management.
The Indian savings allocation is more tilted towards physical assets. We are one of the largest buyers of gold in the world, putting anywhere between $50 to $70 billion annually. We also have love for real estate. Capital market or financial savings itself has taken off in recent times. But thanks to mutual funds, insurance industry and pension funds, slowly and steadily allocation to capital markets, both debt and equity, is increasing rapidly.
India's transition to retail investing is still in its early stages, but it is moving fast. 1 in 5 households today hold shares, up from 1 in 14 just 5 years ago.
We launched an investor awareness program called Mutual Funds Sahi Hai. Mutual funds are right thing to do. And that has helped us in mobilizing more and more retail savings into mutual fund. Our industry is growing at a frenetic pace, and I believe the nudges from the regulator, the work done by the regulator, is laying the foundation. Now it is up to us as an industry to carry forward the work.
One measure of the expansion of Indian capital markets is the success of its IPO market, which is among the biggest in the world.
Last year, IPOs in India accounted for about more than $20 billion US dollars. It was the #2 IPO market in the entire world.
That was David Weston on India's capital markets. You can catch Wall Street Week every Friday at 6 p.m. New York time, and that means today because it is Friday. Coming up, President Trump warning chip tariffs are coming soon. We'll get the latest from Washington, D.C., and there's a lot to get. This is Bloomberg Open Interest.
Up to the minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the threat to central bank independence, the Jane Street troubles over Indian derivatives and what it tells us about India capital markets overall, and we go to a gold mine in Australia to see what mining companies are going to do with all that cash.
I think that the difference this time is what's going on around central banks.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff, with the understanding that if they come into the country, if they're coming in, building, planning to come in, there will not be a tariff.
President Trump saying his administration will announce chip tariffs soon, speaking at a White House dinner with big tech CEOs. Bloomberg Washington correspondent Tyler Kendall joins us now. And among those at that dinner, Tyler, was Tim Cook, which Trump went on to say Tim Cook would be in pretty good shape. So what form do we expect these tariffs to take, and who gets relieved from them?
Yeah, hey, Danny. Well, I actually just had the chance to catch up with the NEC director, Kevin Hassett, here at the White House, and I posed a very similar question to him about what it's going to look like when it comes to these reprieves, and he said that those details are, of course, still being worked out. But we've been able to glean some clues from President Trump himself, appearing to reaffirm last night that those companies that commit to onshoring production, investing in the United States, will be able to get some sort of leniency when it comes to these levies. One of the big questions here is, one, what's the rate actually going to be? President Trump has floated tariffs as high as 300%. But at the same time, he's also brought that down to 100%. You heard him right there outlining that it's going to be substantial but not too high. And then when are they going to actually come? I pressed the NEC director on this. He said that Section 232 investigation has been making progress and that he expects to have something to present to President Trump in the next few weeks or sooner. In his words, it's going to be something that we're watching very closely because we know the White House is working on what's considered to be a rather expedited timeline when it comes to Section 232 investigations. This one was launched back in April into, of course, the entire supply chain, Danny, not just chips themselves, but the equipment used to make the chips. And then, of course, importantly, those downstream products like consumer electronics.
Speaking of tariffs, Tyler, there are a lot of lawsuits out there. What do we know? What's the latest on the federal appeals court decision that is pushing the White House to the Supreme Court?
Well, when it comes to the tariffs, we know that the White House has already put forward and they're asking for an expedited ruling here. They want the Supreme Court to start to hear arguments in early November. That could potentially open the door, Matt, for a ruling by the end of the year. Important to note, though, that the Supreme Court's term goes into the middle of next year. So this by no means is a sure thing. But it's clear that this White House wants to see this done as soon as possible. In fact, in their filing to the court, they cited how this appeals court ruling is complicating their ongoing negotiations. Of course, the other side of this is that we know that trillions of dollars are tied up in this decision. I had spoken about this the other day, but I was really struck by the Committee for a Responsible Federal Budget, which put out that if the Supreme Court upholds this ruling, it could potentially vanish about 71% of the projected tariff revenue. It's something that we're watching really closely here, and something that, again, the NEC director, Kevin Hassett, told us reporters here at the White House earlier today they are confident in their arguments.
Tyler, thank you very much for bringing us the latest. That is Bloomberg's Tyler Kendall. Now, we did about 2.5 hours ago get labor market data that showed the slowest 3-month job growth now since COVID. Initially, stocks rallied, but they are turning around now. We asked Julia Coronado of Macro Policy Perspectives about that initial market reaction.
We've got this strange dichotomy of a stock market. I mean, you know, for a macroeconomist to watch a stock market rally off of this report, you know, it's just not the way I construct the engine of growth.
Matt, we got to give credit to Julia because we did see a market now turn down 0.5% after that labor market data.
Yeah, right. And we were up about that much when we started talking to her. So I'm not sure if it's a call, but her logic seems to be more aligned with what the market is looking at right now. You can see, as Danny said, we're off 0.5%. We had been above, well above 6,500, so another new record. And we still see yields much lower, right? As soon as this decision came out, we saw the 2-year yield drop to what, the lowest level since 2022? Mm-hmm. And we were down all across the curve, still are down all across the curve right now. Even on the long end, the 30-year down by 1.1 basis points to 47.89.
Yeah, it's important that move is sticking because what it implies is that this is a data that's maybe bad enough for 25 or even 50, and it's not for the right reason. So can growth really hold up? Can stock gains continue to hold it as well?
That is the debate. Coming up on Monday, Citi's Stuart Kaiser will weigh in. We also have Katrina Dudley of Franklin Templeton and Carlisle's Chris Pareo, plus CEOs from TickPick on sports and Ethan Allen on couches. This is Bloomberg Open Interest.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Tesla proposes an unprecedented $1 trillion pay package for Elon Musk.
Plus, Broadcom surges on earnings and a big new AI chip customer who we report is OpenAI.
And we speak with Qualcomm CEO Cristiano Amon as the company partners with BMW to provide its automated driving brains.
But first, we check out these markets, which are volatile to say the least as we head towards this weekend. People taking money off the table. Look, we bought into the stock market throughout this trading day and actually earlier in trade today. But the Nasdaq 100 now rolling over a bit, Ed. We pulled back on some of the week's losses. We're now down 0.8% on the Nasdaq 100 over the course of 5 days. But remember, we were shut on Monday, so that factors in the Friday sell-off too. More broadly, we think of a macro picture, a weak labour market, and we'll dive into that. But for now, look at the individual movers, which you've got.
Yep, our top story. Tesla is up 2.5%. The board proposing a compensation package for Elon Musk, $1 trillion is the headline. It is over 10 years. It is against multiple high-bar milestones, both operational and financial, and there are some safeguards in there as well, additional safeguards to keep Elon Musk focused on Tesla. Let's get out to Bloomberg's Dana Hull, who covers Tesla and leads our coverage of Elon Musk, and that's where I want to start. What are the milestones, operational and financial, Dana, that Elon Musk and Tesla have to hit if he's going to get to the full $1 trillion package?
Yeah, so it's 12 tranches, and to sort of unlock a tranche, there's 2 components. Market cap, which is basically, it's in $500 billion increments. So to reach the first one, it's a $2 trillion market cap, and then everyone after that is by half a trillion. But it's operational milestones that include things like number of Optimus robots, number of robotaxis in deployment, cumulative car sales, FSD take rate. And these are very aggressive, very hard to meet milestones. Tesla is nowhere close to them right now, but this is what the board thinks is going to motivate Elon to really dig in and really go guns blazing for this sort of AI robotics future that he recently outlined in Master Plan Part 4.
And perhaps what really motivates him is 25% ownership of the company. What's interesting and what motivates investors is his dedication, particularly moving away from politics, which seems to be one of the key points here in what the investors are going to have to vote on. But it's also about thinking about succession. I was interested in the 11th and the 12th tranche, Dana.
Yeah, I mean, clearly, Musk has been the CEO of Tesla since 2008. And at some point, they need to come up with a real succession plan. And I think that the committee worked very hard over the past 7 months to kind of make it clear to investors that they are always talking about succession plans, and that whenever the time comes for Musk to step down, they want his involvement in choosing a successor. But this package is designed to keep Elon focused for the long haul and to really motivate him and give him that kind of like dopamine hit that he likes of kind of, swinging for the fences and doing crazy things that no one thought were possible.
Dana, very quickly, how does this package compare with the 2018 package being disputed in the courts?
So if 2018 was a moonshot package, this one really could be thought of as a Mars shot. And if you actually, Command F the proxy, there's a reference to a Mars shot in one of the footnotes, because the numbers are so high, the milestones are, we're not talking billions anymore, we're talking trillions in market cap. And remember, Elon Musk has always talked about wanting Tesla to be the most valuable company in the world. This is a pay package that incentivizes him to get there. And if he gets there, shareholders will also get there, which is why I think you're going to see a lot of investors support this package.
Dana Hall. Question is whether the courts support it once again, but really interesting take on this $1 trillion potential payday. Let's get more from someone who used to be on the board. And then we now push forward to the future of Tesla with Steve Wesley from the Wesley Group. You are indeed the founder, managing partner. Steve, I'm really interested as to some of these milestones. Yes, it's about market capitalization, which is extraordinary. But to get 20 million cars on the road, to get 10 million of those with FSD, to get 1 million robots, 1 million robo-taxis, is that realistic?
Well, I think that's going to be awfully hard for Tesla to do. And again, I support incentive-based pay packages for CEOs. And the pay package sounds astronomical, but so are the milestones to get it. I mean, he's got a double market cap just even to get the first milestone. And I understand what they're doing. They want to get Musk 100% focused on Tesla. But the big question is still, how do you get Tesla back on a growth trajectory? It's got 2 years of flat growth here. They've got to get permitting for full self-driving in San Francisco and Austin, first things first. And then they've got to start selling humanoid robots. Musk has said they're going to shoot for 5,000 this year. That feels a little aspirational, but whatever it takes to kick the company into a higher gear, that's what shareholders should be looking for.
Steve, section or page A51 of the proxy, if I bring it up and you allow me to read it to you, the board receives assurances that Musk's involvement with the political sphere would wind down in a timely manner. One of the reasons that Caroline and I wanted to get you on the show is you did sit on Tesla's board for 3 years. You've been a controller of a state in California. How do those provisions come about? How do you interpret it?
Well, look, I think there's two things going on. Musk is saying, look, I want to be wildly incentivized if I do great things for shareholders. And I think shareholders, I think the board is saying, okay, fair enough. We're going to have to set awfully high standards, and that's not just going to be performance standards for selling more cars, for getting full self-driving and really showing the promise of AI and Tesla. And he's also going to have to really make the humanoid robot proposition real. I think if he does those things, he deserves a big pay package. But you touched on something else. The board clearly wants to see him focused on Tesla, and that probably means less politics, less focus on some of the other properties that are already doing extraordinarily well. So you can see why the board constructed it as they did. Let's see if shareholders support it. I have a hunch they will. And the big question is, it's going to be game on for Tesla. Can he hit these wildly audacious goals?
Within the operational goals, there is the target to produce 1 million humanoid Optimus robots. There is to build the robotaxi fleet to 1 million vehicles. But there is still a goal in there, Steve, to produce and sell and deliver 20 million electric vehicles to consumers. In other words, Tesla's historic bread and butter. That seems to contradict like the big picture vision for AI. You know, in a world where Tesla operates a proprietary ride-hailing app, he's still being asked to deliver tens of millions of vehicles directly to the consumer.
And you put your finger on the linchpin here, as always. What I love about this is what I suspect, and I don't know, but what I suspect Elon wants is an audacious, big target, because that's what gets his adrenaline going. Great. What I think the board is pushing for is, hey, don't forget, you've got to sell a lot of electric and autonomous vehicles, and competition's coming. So let's come back to the real world for a minute. Volkswagen unveiling a $29,000 ID2 next week in Europe. That's going to be hugely competitive. BYD Europe sales up 225%, while Tesla Europe sales are down 50%. Cybertruck sales down 50%. Now Ford's coming out with a $30,000 competing truck. And in China, competition's huge. And now not only is BYD rocketing up with more EV sales, but Geely, Starwish, a new $10,000 EV in China, biggest selling car in China. There's competition coming from all sides. And I think this is the board's way of saying, hey, don't forget, you still have to sell a lot of cars if you want anywhere near this size of bonus. It's not going to be easy.
Yeah, Steve, so if you're on the board and as an investor, how does he turn around the bread and butter, the selling of cars?
Well, again, we've talked about that one a lot. Everybody is going to be coming out with a $20,000 to $25,000 car. Tesla has been late in getting that to market. They need to do it. Here's a point that people really need to get their arms around. We're reaching cost parity for EVs this year. Now, people are going to say, hey, what's going to happen in Q3? I can tell you, in Q3, EV sales are going to be up in the U.S. because everybody's rushing to still get that last government credit, and then it's going to go away. A lot of people say, me oh my, is that going to crush the industry? Absolutely not. What you should understand, the average EV price dropped $14,000 in 2025. EVs are soon going to be cheaper than internal combustion vehicles, and that's going to continue for the rest of our lives.
Steve, later in the program, we're going to go deep on the shareholder-initiated proposal for Tesla to invest in XAI. But if you look across the broad package, would you please kindly assign what chances you give that shareholders will vote in favor of all of those provisions at the November annual meeting?
Well, look, it's hard to know. It's the biggest pay package in history by far. But again, they've attached the goals to such high numbers where they're trying to create a win-win. I have a hunch that shareholders are going to support this. I think what they really want to see is the two things you've pointed out. One, Musk dropping back from politics and focusing fully on Tesla. And two, getting back to the reality of selling more cars, getting full regulatory approval for autonomous driving. Those are the goals ahead of him. I hope he hits them.
Steve Wesley, a former Tesla board member, now of Wesley Group, and somebody with a command of the world of electric vehicles. Thank you very much. Now, coming up, shares of Broadcom are surging today after news breaks that an unnamed customer deal from the call, well, it's OpenAI. That's next. Carrie, what are you looking at?
I'm looking at the broader markets, actually, Ed. Look, maybe it feeds into anxiety around NVIDIA's command of the key hyperscalers and the growth that they see in terms of their own chip provision, training and inference. But we're down 4% on NVIDIA. The stocks are still up 0.4% thanks to Broadcom. But more broadly, we're risk off. That's after the macro data. This is Bloomberg Tech.
In case you missed it, on Bloomberg Crypto. What are your takeaways from recent IPOs of firms in the space? Circle, for example, we saw bullish last week. The investor appetite was certainly there for that one. What are your thoughts?
If I use the framework of intrinsic value versus options value, my personal belief is that a lot of these companies in the crypto ecosystems are option valued, so they're overvalued in my perspective. And in some cases that is a good thing and a bad thing, which is you're getting more attention, and so you know more about what's happening in the industry. But I think it's really important to just take a look at, how are these companies growing efficiently, where do they make their money, where do they not, and where do the losses accrue. And so again, taking a step back, how do these companies actually grow the industry? How do they grow themselves? And are they actually providing intrinsic value to themselves and their shareholders is what matters most.
Don't miss Bloomberg Crypto live Tuesdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Taking a look at the shares of Broadcom, up 8.5% at times in the session, reaching an all-time high after posting record revenue. Bloomberg then reported that a new customer Broadcom is working with to design and produce an artificial intelligence accelerator from 2026 onwards is OpenAI. That's something that could challenge NVIDIA. Let's bring in Bloomberg Intelligence analyst Kunjan Sabani. As normal, Hock Tan does not name. He alludes to this A6 customer on the call. And when you published your research and reaction, that's where you looked at A6 and AI revenue. Why focus there?
I mean, that is the center stage story right now. Look, before this announcement, they were still the majority share owner of the ASIC accelerator landscape. And with this announcement now, their share is actually going to increase, if you can believe that. So right now, they are the number 2 AI semi company after NVIDIA when you think of the revenue size of AI revenues. I mean, just for comparing contrast, right, their AI revenue now is running or going to be running almost bigger than an entire data center revenue of the number 2 GPU provider in AMD. So they are increasing their share at an unprecedented rate, not just adding new customers and new revenue streams, but also increasing the unit volumes at the existing customers. So gaining share at existing customers and as well as adding more customers.
I mean, a 10 billion future backlog coming from OpenAI is nice, Kunjan, but compare and contrast NVIDIA and Broadcom for us, because many want to make them compete. But really, are we seeing this as an alternative, this custom silicon, or is it an and rather than an or?
At this point, it is an and. Look, it's a lot more nuanced than just saying that the ASICs from Broadcom are going to kill NVIDIA. The ASICs, the use case is really limited to, say, top 10 global hyperscalers. Now, no doubt today these top 10 represent the largest spenders when it comes to accelerators, but the compute demand from these top 10 today is so much more that it's not coming at the cost of NVIDIA GPUs. The bear case thesis is, yes, in the future, as these customers keep improving their own chips gen after gen, keep improving their software, they could become sellers of the compute based on their own chip. The case study being the AWS and Anthropic deal. However, there's still a major, huge market of enterprises, sovereign customers, neo clouds, which still make sense to be exclusively on the GPUs likes of NVIDIA.
Kunjan Sabani, it's always great to get your take. Senior analyst from Bloomberg Intelligence, we thank you. Look, Alphabet, actually a Broadcom customer. Let's talk about Alphabet right now, because breaking news from the EU. Google will be fined almost 3 billion euros, that's $3.5 billion, by the European Union because it's being ordered to stop favoring its own advertising technology services. Now, this comes hot on the heels of the fact that Google seemed to only get a slap on the wrist when it comes to its monopoly of search, coming from Judge Mehta here in the United States. The DOJ, Ed, is still looking at ad tech. Will we see the EU fine implicate on that perspective? Because it seems as though there is a concern coming that it's got too much control.
It's not just a fine. You know, the European Union is now saying to Google that it needs to stop favoring its own ad technology platforms. And if you remember back in 2023, under the previous competition commissioner, Margarita Vestager, they had been warned that they needed to stop doing this. And over the term of Vestager's tenure within the European Commission, she went after Google on billions of euros of fines. So they have 60 days to respond. Google's statement is this is unfair.
Coming up, a conversation on the jobs market. We're going to be speaking ahead with Sarah Franklin, Lattice CEO, on the state of the tech labour markets after that pretty woeful number coming from non-farm payrolls. This is Bloomberg Tech.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
US August payrolls out earlier today, and a gain of just.
Hey guys, crude oil आ गया है नीचे. If you look at the crude oil, as expected, support break हुआ, continuously fall. यहाँ पर एक थोड़ी सी बाइंग एक्सपेक्टेड है. थोड़ा ध्यान रखना, 9 बज चुका है, 9 से 10, 10 से 11, 2.5 घंटा और है. 2.5 घंटे में अगर मोमेंटम आ गया तो आ गया, नहीं तो साइडवेज चला गया तो ऑप्शन में थीटा डी के भी हो सकता है. तो थोड़ा सा यहाँ पर बाई करोगे तो ऑप्शन बायर स्पेशली वो थोड़ा ध्यान रखना क्वांटिटी का, बिकॉज ऐसा ना हो कि बाई तो कर लो मोमेंटम ही ना आए. बाकी नेचुरल गैस में भी हाफ प्रॉफिट बुक कर लेना. नीचे एग्जैक्टली आ नहीं रहा है सपोर्ट पे, वापस ऊपर जाता है वापस सेल कर सकते हैं. बाकी नैस्डैक को देखोगे क्या मोमेंटम आया है, ऊपर रेजिस्टेंस पे था, सेल ऑफ आया, जितना मोमेंटम न्यूज़ में आया था उससे ज़्यादा तो गिर गया, कंप्लीटली फॉल. वापस सपोर्ट पे पहुंचा है 23,500 टू 480 के. यहाँ से कितना रिवर्सल और देता है. $23,600 तक जाने के चांसेस हैं. इसके ऊपर जाएगा नहीं जाएगा, नीड टू सी.
alone, not really when you look at AI that's set up properly, AI that's integrated well with systems. And so
वीक का कॉल ऑप्शन बाय कर लें, आई मीन नॉर्मल ऑर्डर इंस्टेड इंट्राडे, वो अब नेक्स्ट वीक का करो, इस वीक का करो, उससे क्या फ़र्क पड़ता ज़्यादा। थीटा डी का कम होगा बस, बट टाइम थोड़ा कम है, ध्यान रखना। 9 बज चुका है ऑलरेडी, तो 11:30 तक ही मार्केट चलता है। 11:30 भी मान के चलो, लास्ट आधे घंटे में तो कहीं भी मूव कर जाता है। 2 घंटे हैं मैक्सिमम, जितना मूव आना है 2 घंटे में ही आने आएगा। बेस्ट तो है पुट शॉर्ट कर दो, सबसे बेस्ट है। आया तब भी प्रॉफिट, नहीं आया तब भी प्रॉफिट।
of work. Is that really happening within the workplace or in any of the HR sectors that you're tracking?
there's definitely generational differences in the embracing of AI between Gen Z, millennials, and what we're seeing though is that AI, whether it's freeing up time to have better work-life balance or to do more strategic work, I don't think any of us want to do robotic work. We want to be able to focus on what makes us human, our creativity, our ingenuity, and this is what's so powerful that AI is enabling us to do.
One of the tropes that's going around at the moment is this 996 culture. Dare I even reference the lift heavy, run far, marry young, eat eggs and steak. But Sarah, more broadly, how much are you seeing this culture being adopted by those that want to grind, being shunned by those that have been in the workforce for a while?
Again, getting back to, there's a lot of fear. There's a fear that I'm not going to be relevant. There's a fear that my job may go away. And so a lot of this fear is driving the culture. And so what's most important right now is that everybody understands the urgency in skilling up themselves on AI and bringing AI skills into their workforce, not just the workforce of tomorrow, but the workforce of today.
फिर मिनी में जा सकते हो, क्रूड ऑयल मिनी में भी ठीक है। उसमें फ्यूचर में, क्रूड ऑयल मिनी फ्यूचर में, उसमें एटलीस्ट साइडवेज गया तो लॉस नहीं होगा। बाकी ऑप्शन भी जा सकते हो, ऐसा नहीं है, बट ऐसा है कि साइडवेज चला गया तो कुछ प्रॉफिट नहीं होगा, ऊपर से लॉस ही हो जाएगा थोड़ा बहुत, ज़्यादा नहीं, छोटा सा ही एसएल है। बाकी देखो तो नेक्स्ट मंथ का ऑप्शन भी ट्राई कर सकते हो। बाकी याद रखना, जितना ऑप्शन में बाय करते हो उतने में ही मिनी भी आ ही जाता है लगभग। कैंडल का ध्यान रखना, ओपन इक्वल टू हाई नहीं बननी चाहिए, ओपन इक्वल टू हाई पे एंट्री नहीं होती, ठीक है।
You missed it on Bloomberg Insight.
It feels like a day in which the whole world is waiting for the exam results, and then you open up open up the paper to see what did you get. Except unlike exam results, in a way, this is less about how you did on the exam and a little bit more about whether the teacher likes you or not. I mean, it really is crazy.
It all depends on whether you come to the table or not. It's not really the case, is it?
No, because we had countries that did come to the table and had agreements that did well. We had countries that came to the table, had agreements, and didn't do well. We had countries that didn't show up at all and got basically the same result. We had countries that weren't even invited and ended up both up and down. I mean, so it really does feel a bit random. These are not small tariffs. These are the highest tariffs the United States has imposed since the 1920s and 30s, and there's going to be real consequences to this.
Don't miss Bloomberg Insight live weekdays.
in case you missed it on Bloomberg Tech Asia.
How does Samsung think about competition? Because you have also so many Chinese makers coming out with foldables, with good cameras.
You know, rather than focusing on competition, I think we have been focusing on our consumers. I think healthy competition with other companies, I think will bring more innovations and then bring more benefits to consumers.
Don't miss Bloomberg Tech Asia every month.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Welcome back to Bloomberg Tech. Let's take a look at the broader markets. We do that from the lens of tech, though. NASDAQ 100, a volatile day. At one point, we saw that markets traded higher on the bad news being good news in terms of woeful jobs data means the Fed is going to cut. But now the market pushes lower. We're off by 1/10%, maybe going to break back to the green. But volatile day, Ed, some key stocks to watch.
Right. Yeah, so our top story is that Tesla's board is proposing a $1 trillion compensation package for Elon Musk. I know that we don't normally do this, but like the stock's up 3%. A 1 sigma or 1 standard deviation move for this stock is nearer to 5%. And it kind of feels like a little bit unremarkable, despite the fact that we're talking about a $1 trillion compensation package. And of course, the reality is that it's over 10 years and there's a lot in there to get through. So let's get to Bloomberg's Max Chafkin, one of the team behind Bloomberg's Elon Inc. podcast. And, you know, I've spent 4 hours reading a 300-page document, and there's a lot in it, but there are these milestones and targets that Musk and Tesla need to hit to get to 1 trillion. Which jumped out at you off the page when you saw them?
I mean, the thing I think is most significant is there are provisions in here about succession planning, about the idea that Elon Musk needs to come up with a, you know, with a way to who's going to oversee this company beyond him, which I think is really important. And I think this $1 trillion package reflects the fact that Tesla and Elon Musk are kind of inextricably linked, you know, for better or worse. For worse being, of course, the political blowback that has come from Musk's association with Donald Trump and his centrality to many of the more unpopular policies pursued by the Trump administration, but also the idea, and many Tesla investors, as you know, Ed, see it this way, that Elon Musk has some kind of special ability to see the future. And that's what this is about, right? This is a long-term bet on that relationship, while also acknowledging that at some point, hopefully for investors deep into the future, that relationship will come to an end.
It's so interesting. Investors, of course, agreed to the previous $56 billion pay package, and the judge that has overruled that and put it on pause was like, it's unfathomably large, was part of her concern, as well as the board's role within it. This time, they've been very careful to try and make sure that the board seems independent, but they are giving Elon what he wants, which is 25% of shares.
Yeah, he's been out there for the last year and a half or so, essentially campaigning for a bigger stake in the company. And you might ask yourself, well, that's kind of strange. How does a CEO who, you know, there are many owners who are putting these stickers on their cars that say, I bought this before he went crazy, a CEO who has in some ways lost a part of his customer base, how is he asking for a massive pay raise? And I think the answer is, like I said, investors think this is a bet on the future. It's not necessarily about cars, it's about Optimus, it's about self-driving cars, it's about Tesla as this massive robotics company. Yes.
But Tranche 11 and Tranche 12 directly relate to Musk's participation, right, in a succession plan. Just going back to all of that, Bloomberg's Max Chafkin, for weeks, will be going through this compensation proposal. Thank you very much. There's another side to it and another story. A lot of the momentum behind a shareholder resolution for Tesla to potentially invest in XAI came from retail investors. One of those that led the charge, lobbying others in recent months, is Alexandra Merz, a.k.a. Tesla Bloomer Mama on X. Merz is a prominent figure in that group of retail investors who back Tesla and Musk, a longtime Tesla investor and shareholder, and joins us now. So it's included a shareholder-initiated proposal for Tesla to invest in XAI. Your reaction, please.
Great, very happy. Obviously, we have worked on that for a while now. It all started last year when another retail shareholder, Gali, asked Elon whether that is possible. At that point, obviously, XAI's valuation was much lower. Elon had then responded that he would ask the board. He came back a couple of quarters later saying this needs a shareholder vote, and then shareholders asked for a proposal to be included.
And you'll get to vote in November. Alexandra, why is it important that you have skin in the game with XAI? What is the future as you see it? Because according to this pay package, it is still 20 million cars on the road. It is still FSD.
Oh, it is still cars. It is still FSD. That is Tesla's bread and butter. But every Tesla now, and Ed knows because he drives one, already has Grok in the car. And Grok is the XAI product, the large language model that is used, derived from X, former Twitter communications and conversations, and the strongest, in my view, large language model there is.
Alexandra, I did use FSD on the way to work this morning. I only used Grok during the journey. The skeptic would say XAI is burning through cash. It is a company facing massive rivalry with OpenAI and Anthropic. It can't stand on its own 2 feet. This would be Tesla bailing out XAI. How do you feel about that?
Not at all. I mean, honestly, we had recent reports from Elon saying that XAI doesn't need any current cash. The question is obviously at what price. And the shareholder proposal, the way it is proposed, does kick it back a little bit to the board to find the right valuation. Because when we lobbied for this shareholder inclusion, we kept it very generic. There is a clear definition, and I think the board has clearly said they don't want to have the responsibility of the basic decision. They are not recommending either for or against it. This is shareholders deciding by themselves whether they want XAI or not. In my view, I think it will be a fantastic financial investment. I also see the synergies between XAI and Tesla just growing, with the bots even more. But it is coming down to real shareholder democracy, shareholders deciding whether this investment has to be done or not.
Last time, the courts exerted their power over what shareholders did sign off. And at that time, the judge discussed that it was an unfathomable amount of money that was being offered to Elon Musk, and that the board didn't have enough independence. What do you make of this current pay package proposal in that respect?
I mean, first of all, we're in Texas. We're not in Delaware anymore. And then let me just quickly address Delaware. That judgment, if it stands in appeal, and we will know in a couple of months, there's an October 15th the hearing, and then we'll probably know by January, February whether it stands or not. But if that judgment stands, Tesla has, in this current proxy, now also a shareholder vote on whether they want to have a plan B in place for the 2018 package to be fulfilled. So if that plan B becomes necessary, because Delaware's courts don't understand what our shareholder interest is, but so if that happens, it will actually cost us billions and billions more, probably 50 to 60 billion more than what it initially cost us in 2018. So I don't see how that would be in any favor to us shareholders. The package will live, plan A or plan B, but it's just the question is, will we get it the cheap way, the 2018 way, or will we have to pay 60 billion more because a judge ruled against us?
And eventually, maybe $1 trillion if you hit an $8.5 trillion market capitalization and then some key operational targets.
And we'll be happy to pay, I can tell you that, because if he gets it, we got it.
Alexandra Merz of LNF Investor Services, it's great to have you back on the show. Coming up, we'll talk to the guy positioned to be the Silicon Valley candidate for California governor. Tech founder Ethan Agarwal joins us. This is Bloomberg Tech.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The top names at the Fed are on Bloomberg.
We have a banking system that's a dual banking system. So we have national banks and we have state chartered banks. The FDIC and the Federal Reserve oversee those state chartered banks together with the state banking commissions. It's important that we maintain the ability to oversee both the state chartered banks and the OCC with the national banks, and that we have a rational framework that is very similar for all of those banks going forward.
Nobody covers the Fed like Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
President Trump welcomed top tech leaders to the White House yesterday to discuss AI. At the dinner, CEOs reiterated their pledges to invest hundreds of billions in the United States, while Trump said chip makers that didn't build in the United States would face substantial tariffs. Just take a listen.
Chips and semiconductors, there will be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff, with the understanding that if they come into the country, if they're coming in, building, planning to come in, there will not be a tariff.
We continue with technology and politics. Startup founder Ethan Agarwal is aiming to position himself as the Silicon Valley candidate in a run for California governor. The two-time startup founder has raised money from VC firms like Andreessen Horowitz in the past. Now he's looking to win votes with his tech-forward campaign pitches. Ethan Agarwal joins us now. This is early in a cycle, it seems. There will be a crowded field of many political heavyweights, likely others from the technology industry. What chances do you really have of being governor of California?
There's a lot of other candidates that are running, mostly from Southern California, most of whom are politicians. My view is if you are generally happy with the way things are going in California, you have lots of other options. If you are looking for a systematic reset and a complete change, I present a different opportunity.
A different opportunity that leans into maybe crypto, being an ability to pay your taxes. You're leaning into DMV apps, for example. But at the same time, a load of our team can't get into work today because the BARD is down. So I'm interested as to what the infrastructure perspective is here.
Yeah, hey, Caroline, good to see you. I mean, look, first and foremost, I trust Californians, which is something that has been lost. Our politicians love telling us what to do. Infrastructure is a key part of the platform. What's happening is Californians, like people come here, I mean, Ed and I were just talking, people come here because they want to live a great life, they want to enjoy the weather, they want to build something for their family, and that stopped happening because jobs aren't available here. You guys saw the jobs report this morning. Companies are leaving the state, we're over-regulated, you can't build a house, you You can't do anything without the government trying to get a piece of it or trying to tell you what to do. That's what politicians love to do. So what we need is someone who understands that Californians themselves can be trusted, who actually likes Californians, and who actually wants them to realize their potential. California is a state of massive potential, and we're just not realizing it because of all this regulation.
Okay, let's bring up some of the policies that are on your platform, because I think that was Caroline's question. What is the specific proposal you have to fix infrastructure like BART, to fix housing, jobs creation in Silicon Valley, etc.?
Yeah, it starts and ends with CEQA. CEQA is the California Environmental Quality Act. It was passed in the 70s when Reagan was governor, and it initially had some good ideas, but it's been leveraged and extorted to all hell at this point, where anybody can sue anybody to stop any construction from happening. And that's why you don't see modular construction happening in San Francisco. That's why you don't see construction happening in housing in LA. That's why there was a water treatment facility in Huntington Beach. It was going to do 50 million gallons of drinkable water. It got stopped under CEQA. There's 600,000 people that live up in Mendocino that are getting a PG&E. PG&E's plant is getting shut down. They're not going to have access to reliable power because the salmon and the eel are going to have trouble. I mean, these are just ridiculous things that are happening in California. I think that California humans should actually live well, and it's not happening.
The team in New York as well. I'm going to jump in here. You're basically saying I want to deregulate.
Yes.
Very similar to what the Trump administration is proposing across a number of industries.
Yeah, I don't think this is a Democratic or Republican issue. I think this is just common sense. Like, the reason California is losing 500,000 people is because the regulation is driving jobs out. It's that simple. Like, other states like Arizona, they beg companies to come to their states to create jobs. California does everything it can to kick companies out. Masa-san announced that he's investing $1 trillion in data centers. All of that money is going to Arizona. Why is it not coming to California? Whatever you think of Elon, I mean, we just talked about his pay package. Whatever you think of the guy, Tesla is based in California. They moved to Texas, and they're creating 22,000 jobs in Gigafactory there. Why are those jobs not in California? Are we shocked that people are leaving? Of course not, because there's no jobs here. It's really that simple.
In terms of policy and how you work with an administration that perhaps the current governor is very much on TikTok actively working against, I'm interested as to what you think the relationship of Silicon Valley and whether you think that it's a voting base that will get behind you, because boy, are they pro the administration, some of them at the moment it feels, and you're running on a Democratic ticket.
I am running as a Democrat. 34% of California voted for Trump. So the notion that California is a deep blue state is just not true. We're not 95-5 or 90-10. We need to understand that the state has shifted. And again, I don't blame people. They're frustrated with what they're seeing. So look, my view is, if you want to vote for somebody who's going to kind of keep things the same, there's a lot of smart candidates. There's Katie Porter, Antonio Villaraigosa, et cetera, who are doing a good job in SoCal. But if you are actually frustrated with what's happening and you think the state can realize its potential better, that's where you come to me, where you want a little less regulation, a little less of government all over your back.
We are, of course, going to be inviting you alongside other candidates to be joining us as the race heats up for California Governor Ethan Agarwal. We appreciate your time today. Stay well. Meanwhile, coming up, Qualcomm CEO Cristiano Amon joining us to discuss the chip designer's new partnership with BMW, deepening that relationship as it aims to improve self-driving capabilities. This is Bloomberg Tech.
has a kind of a similar business model to Kava. They're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the threat to central bank independence, the Jane Street troubles over Indian derivatives and what it tells us about India capital markets overall, and we go to a gold mine in Australia to see what mining companies are going to do with all that cash.
I think that the difference this time is what's going on around central banks.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Qualcomm, well, it's steering deeper into the auto industry, teaming up with BMW to debut its new Snapdragon Ride Pilot. It's an automated driving platform designed to boost safety and driver assistance. The system is just being rolled out in the all-new BMW iX3. Let's bring in Qualcomm CEO Cristiano Amon for more. You call it a revolutionary driver assistance system. How is your software stack different?
Look, we are incredibly excited about what we did with BMW. It's been 3 years in development, focus on safety, and it's different for a number of reasons. I think the first one is one of the things you saw about BMW iX3, it's the incredible range. So when you talk about assisted driving and autonomy, you need to put server-class computing power in those cars, and with Qualcomm technology, there's no compromise. You have all the computing power, but you still have efficiency on power consumption. You can get incredible range. Okay. The second thing is it's scalable. It goes into every tier car, so we're super excited about it.
Cristiano, I've been studying the Snapdragon Ride Pilot, the SoC architecture, the software piece. This is highly analogous with the camera-based system that Tesla has, right? With FSD. You just talked about it being scalable for that reason. Did you benchmark against that?
So two different important parts. First, the architecture is scalable, starting from basic level ADAS all the way to multiple cameras and multiple sensors for you to do navigation on autopilot in urban environment and highway environments. That means it can scale to entry-level ADAS systems and entry-level cars all the way to the full capabilities. The other thing has been certified now in 60 countries, and is launching, and a lot of people will be able to see the performance. Actually, we're super excited for people to see how it performs. And one thing that is great about this, we've done this with BMW, but it's available for the entire industry. Every OEM will be able to use it, and BMW and Qualcomm, we want that. And people will be able to see it, compare, and I think that's a great opportunity.
You know, my question was one of sort of an academic one, because it's the argument of a camera-based only system from an economic standpoint versus also including LiDAR and radar. But you're super focused on the compute, not just performance, but energy usage of the compute. Could you talk a little bit about how you engineered to that level?
Yes. I think the Qualcomm DNA, Ed, it's about efficient computing because we design all of our chips assuming there's a battery on the other side. It's not plugged to the wall. So I think you have the benefit of a lot of the Qualcomm energy efficiency compute, and you have the ability to get a lot of the computing power required in an architecture that actually incredibly efficient from a thermal management and from a power management. The second thing to fully answer your prior question is you do have the capabilities to navigate on autopilot in urban and highway environments, even if you have complex sensors or cameras and radars.
Cristiano, push us forward, because your real focus on auto has been one of diversification of Qualcomm more broadly. Of course, the auto sector has its trials and tribulations. How much is this going to drive growth for you, for the business in the longer term?
Caroline, that's a great question. Remember, we talk about our pipeline of $45 billion in automotive, which is kind of translating into revenue. We see quarter after quarter record revenue for Qualcomm, especially because it's not about moving with the size of the market, it's moving into share as new cars are launched with our technology. The pipeline is converting. And I look at this stack that we're launching on the Snapdragon Ride Pilot with BMW, is we look at that as an opportunity for expansion. In the 45 billion pipeline, 1/3 of that is ADAS, but and it's included, of course, the BMW project. But now other OEMs can use it, and that's going to be upside on the 45 billion pipeline.
Cristiano, last night the president hosted a number of technology leaders at the White House. I believe you were invited but unable to attend. And his message was very simple. Tariffs are coming specific to chips, but those that invest in America will be spared. How is Qualcomm thinking about that? You know, a lot of emphasis gets put on TSMC in Arizona, but is that like big enough to serve all of you?
Yes, it's unfortunate that we couldn't attend. We sent a representative, but we had the big party in San Diego at a stadium for the 40th anniversary of Qualcomm. And to your question, look, we're excited about that. Remember, we're a fabulous company, so we need a supply chain that is resilient and in America. We like the fact that TSMC, which is one of our suppliers, and investing in America. We like the fact that Samsung, another one of our suppliers, invests in America. And for Qualcomm, this is actually great news. We want diversification of manufacturing. We want more capacity in America, and we have said
Is Intel
before,
an option, Cristiano?
Not an option today. I think we would like Intel to be an option. They have been talking about moving to the next process technology, which they call it the one that comes after 18A. For us, we need a technology that has efficient power consumption. I think we just had this whole conversation on car. So if in the future Intel is ready for us, will be an option. Right now, our suppliers really TSMC and Samsung.
Qualcomm CEO Cristiano Amon. It's great to have you back on Bloomberg Tech. Thank you very much.
That does it for this edition of Bloomberg Tech. Ed, what a week.
Yeah, huge headline. $1 trillion comp package for Elon Musk. We have months to digest it. Don't forget, check out the podcast. You know where to find it on Bloomberg Terminal and online on Apple, Spotify, and iHeart. A short week, but a big week. From New York City and San Francisco, this is Bloomberg Tech.
In case you missed it, on Bloomberg Crypto. What are your takeaways from recent IPOs of firms in the space? Circle, for example, we saw bullish last week. The investor appetite was certainly there for that one. What are your thoughts?
If I use the framework of intrinsic value versus options value, my personal belief is that a lot of these companies in the crypto ecosystems are option valued, so they're overvalued in my perspective. And in some cases that is a good thing and a bad thing, which is you're getting more attention, and so you know more about what's happening in the industry. But I think it's really important to just take a look at, how are these companies growing efficiently, where do they make their money, where do they not, and where do the losses accrue. And so again, taking a step back, how do these companies actually grow the industry? How do they grow themselves? And are they actually providing intrinsic value to themselves and their shareholders is what matters most.
Don't miss Bloomberg Crypto live Tuesdays.
In case you missed it on Bloomberg Brief.
We do see that there are some real inflationary pressures. I mean, one thing is, of course, coming from the tariffs. We are seeing some push from various kind of climate situation. And so that is why we also think that there is a link between climate risk and financial risk. I do think there is for sure a danger that inflation could be quite persistent here.
Don't miss Bloomberg Brief live every weekday. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
From New York City for our viewers worldwide, I'm Scarlett Fu, and Bloomberg Real Yield starts right now. Coming up, U.S. payrolls tumble in August with just 22,000 jobs added to the economy, sending bond yields plunging across the curve. Traders are now locking in a September Fed rate cut. We begin with the big issue, a labor market in stasis. Another weak summer employment report.
This is a continued deceleration.
There's an ongoing sort of labor market slowdown.
We want a labor market that's cooling, that's not freezing.
U.S. growth is still good. We are expecting the Fed to cut rates.
We don't think they have to do much more.
There's a lot of uncertainty, but there's a lot of complacency, I think, in the bond market.
This is not a bond market which is not functioning. It's a bond market that's repricing.
Government bonds are going to have a less important role to play in portfolios as diversifiers looking ahead.
The way we're looking at the yield curve is you're probably going to see a further steepening.
Bond investors are a little concerned about putting on too much of a steepener trade.
I'm not overly concerned on this run-up in yield. The market, to me, feels like it's overpricing cuts between now and the end of next year.
The market's already pricing in the cuts.
Everyone is assuming that the Fed is moving to a place of easing.
If the Fed doesn't cut, that's probably sets up a little bit of a pullback here.
All right, all the commentary on the jobs number. Let's take a closer look at those payrolls number, because it was an eye-popping miss on the headline number. 22,000 jobs added versus a consensus estimate of 75,000. Now, after you fold in revisions for the last 2 months, we are looking at a loss of 21,000 jobs from previously reported numbers. As for the unemployment rate, that ticks higher to 4.3%, which is in line with what economists had been looking for. Average hourly earnings also stabilizes, gaining 0.3% in August. That's what we got in July as well. And average hourly earnings actually coming in a little bit lighter than what people had anticipated, or I should say 3.7% versus the estimate of 3.8%. Let's flip the charts and take a look at the 2-year yield over the course of this holiday shortened week. We did start the week higher, but since Wednesday, you could see a steady decline, and then, of course, capped by a plunge today. At one point, the 2-year yield falling as much as 12 basis points, now at the lowest since since 2022. And everyone we talk to seems to like the short end, so I wonder to what extent that feels like a very crowded trade. Let's stay on the payrolls report because Jeff Rosenberg of BlackRock says the numbers highlight the tension in the Federal Reserve's dual mandate.
It's a weaker report, but it's a weaker report that solidifies 25. What it really puts on the table is a Fed that gets back in motion for cutting rates. And if the economy is not falling off a cliff, that's a pretty good combination for risk assets. Bad news is good news. Next week, other data will come out, and we'll focus again on the other side, which is the inflationary side. And so this is really the tension that you see within the curve.
Joining us now is Kay Hirsch. She is U.S. CIO for J.P. Morgan Asset Management Global FIC, and Ian Lingen, head of U.S. rate strategy at BMO Capital Markets. And what I thought was interesting here was when Jeff mentioned if the economy is not falling off a cliff. Kay, let me start with you. What's next for the economy? Are we thinking recession? Are we thinking stagflation?
No, we're in the soft landing camp, or as we fixed income people like to say, sub-trend growth. That's the same as soft landing for equity peoples. But actually, before we step forward, may we take a step back?
Please.
As I was walking up from our new corporate headquarters 270 this
Beautiful
morning,
building.
I was thinking about the last time I was on this show with you, and it was 3 months ago. And you may have forgotten because you're in it every single day, every data point. But 3 months ago when I was here, we were focused on a really hot number. It was, I think, 134,000, and that was the third consecutive, much higher than expected number. Now, subsequently, that was revised away to something like 19,000. So I don't think we should get too carried away with a specific data point. I'm more looking at what we see here is a slowing in job growth. We're not sure what the break even is to keep the unemployment rate steady, given everything that's going on. But this feels like a normal and healthy slowdown in job growth. On another level, it's not surprising because when I was here in June, we spoke about the lack of breadth in the employment growth. Those job gains were very focused on healthcare and education. Those together represent about 17% of overall employment. And yet over the last 3 months, they've represented something like 200% of job growth.
Interesting.
So this is, I think, why you're starting to see some revisions away.
And Ian, it is exactly those revisions that had you kind of skeptical heading into this jobs report as well. When you look at the data now, this report today, with a new head of economic statistics over at BLS, how skeptical are you of this latest print?
Well, one observation that I'll make is that the participation rate in the survey on the establishment side was the second lowest of the year. So that means that this number is also going to be revised. And so if we look at this number in concert with ADP, with jobless claims, it's telling a similar picture. My biggest concern was that we had a strong payrolls number and a softer ADP, and then the market would have discounted the BLS data even more. But now we have a clear message, and it is a message of cooling. It's not a message of contraction, at least not yet. My primary concern is there's a sentiment within firms and within hiring that has swung away from adding. Now we're at stall speed, and the question is the next leg actually shedding jobs? And that's when one would get worried about a recession over sub-trend growth.
But we're not there yet.
Not yet.
Okay, I mentioned BLS because obviously that's something that caught the president's attention last time around. And Howard Lutnick, the Commerce Secretary, was speaking about the new leadership at the BLS. Let's take a listen.
Donald Trump needs to rely upon the numbers. America needs to rely upon the numbers. You can't have these bent former administration people who have a view and who want to harm the president. We need accurate numbers coming from BLS, and finally we'll have new leadership to deliver it.
Obviously, he's speaking from the perspective of someone who is, has the ear of the president and is speaking to the president in many ways. The August jobs report was weak. The July jobs report was weak, and the president was unhappy with that. But I'm not clear why the weak print was bad when it buttresses the case for a rate cut. I mean, it gets us to where the president wants to go, doesn't it, Kate?
Yes, but let's take a step back because you've asked about the BLS, and I think it's really important to touch on that. There's these challenges to BLS credibility, but actually, if you look under the surface, since COVID, since the pandemic, the response rates have really plummeted. So what happens is you get a phone call. hi, are you employed? Or a company essentially is asked the same thing. And after the first month, and Ian, feel free to help me out, I think it's something like 60% of people respond. Pre-pandemic, those numbers were much higher. After the second month, it's in the 80s. After the third month, it's like 95%. So those numbers are more reliable. So the question I think to ask is, instead of calling companies and individuals, is there a better way to get more real-time access to data so that we're not always revising away the data, which absolutely calls into question the credibility of the BLS, which I think is helpful to no one.
Ian, do you have more faith in the inflation numbers that we're going to get next week, for instance? It doesn't get revised in quite the same way that the jobs numbers do.
Well, I do have a bit more faith on the inflation side because a lot of the inputs are real-time. A lot of the inputs are not survey-based, i.e. relying on someone or a firm to contribute. So there are questions about the methodology on CPI as well, but that's a separate issue. That's not a reliability of the data per se. I'm also concerned, because we do get the benchmark revisions for the BLS data on Tuesday, that we have more revisions coming on the job side that might have until now flown under the radar a bit, and that could be a bigger market mover than even CPI next week.
Okay, fair enough. Before today's release of the jobs report, Stephen Englander of Standard Chartered had said that, in our view, published NFP below 40,000, which is what we got, and an unemployment rate at 4.4%, which we did not get, will make a 50 basis point cut likely. How wide open is the door to a 50 basis point cut, Ian?
So I'll make the observation that we were pretty close to a 4.4% unemployment rate, because on an unrounded basis, it was a high 0.3. That being said, this report, I think, locks in an October rate cut as opposed to putting 50 basis points on the table. I wouldn't take 50 basis points off the table yet because we still have CPI and we still have those BLS revisions, and we could be looking back at the reference period and conclude that, in fact, policy was much more restrictive at that moment than we're currently assuming it was, and we're just playing a game of catch-up with the economic data as we go into the Fed on the 17th.
Kay, how fast of an easing cycle could this be?
So we're more in the soft landing camp and expect the Fed to cut once in September, so 25 basis points. And if we continue to get this type of economic or this type of employment number, we would expect probably 2 more cuts, so call it 75 basis points. I think employment is the number to focus on. At Jackson Hole last month, Fed Chairman Powell made very clear he's more focused on the employment side of the dual mandate than he is on the inflation side. But I would agree with Ian. We absolutely will be watching CPI next week as well.
All right, good stuff. Kay Herr of JP Morgan Asset Management and Ian Lingen of BMO Capital Markets, thank you both so much. And a programming note that Chicago Fed President Austin Goolsbee will be joining Bloomberg's Balance of Power at 1:30 p.m. New York time today. Be sure to tune in then. Up next on Real Yield, the auction block. September starts on at a sizzling pace for debt sales. We're going to talk credit next. This is Real Yield on Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode every month, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm Scarlett Fu, and this is Bloomberg Real Yield. It is time now for the auction block, where global issuance got off to a sizzling start for the month of September. We start in Europe. Tuesday set a record for issuance in one day. Supply for the week coming in around 79 billion euros. That is the busiest stretch since mid-May. The numbers were helped by a record 10-year gilt sale in the UK. Now, here in the U.S., it was the second most active week this year, with more than $67 billion sold. Tuesday saw a record 58 bonds in the market. Big names included Citi, Merck, and Cigna. And over in high yield, the primary market priced almost $10 billion this week, including almost $5 billion on Wednesday, the busiest day in 3 months. Borrowing costs have fallen, hovering near levels last seen in 2022. Now, sticking with credit, Omar Aguilar, who's the CEO of Schwab Asset Management, says high-quality companies are pretty well positioned despite historically tight spreads.
Credit spreads have been incredibly tight, and most importantly, not only the level, but if you actually see the level of volatility of the credit market, it's actually very surprising to just see that even though we have seen all kinds of uncertainty coming from headlines and everything else, we've seen this done incredibly, well positioned for high quality companies where leverage has not been high.
Joining us now is Patrice Altanji. She is head of debt capital markets for HSBC Americas. Also with us is Matthew Mish, head of credit strategy at UBS Investment Bank. So as we kind of set it up, there's been a ton of issuance in Europe and in the U.S. There's a lot of supply. Patrice, let me start with you. What does demand look like right now?
Demand is still super strong. I know we've got a lot of news today out on the jobs report, but the technicals and how fixed income investors have been shaking this off has been pretty impressive. Oversubscription levels very strong in Europe. We saw a number of U.S. issuers heading over to that market. That's been a consistent theme. In fact, almost 25% of corporate supply in Europe is from U.S. issuers this year, and that's up about 5%. And in the U.S., the inflows are strong. They're strong on Lipper data, they're strong on ETF fund flows, and they're strong on broad ag flows. So there's really not a bad spot in the market right now when you're thinking about different tenors.
Matthew, what do you see? Because a lot of what people are saying is that there's this rush by investors to lock in yields while they can before rates begin falling next week, as early as next week if the Fed cuts.
Yeah, I think at these spread levels, you have to issue, right? And you're going to take opportunistically the chance given the amount of events this month. I think in general, from the client base, what we're hearing is, I think, an increased belief in a softer landing. Mm-hmm. And that really comes through even despite the jobs data. I think people think inflation boosts nominal earnings growth. Ultimately, that you're seeing a lot of this issuance mean that credit conditions are easing in the marketplace, and default rates are still low. The latest data that we have on bankruptcy filings across the board is fairly benign. So to us, this looks like, and there's 6 periods in the past where you've had labor market data that is at or very close to kind of flatlining. And in half of those instances, credit spreads have essentially not moved. And it really has been those cases where the economic slowdown has really kind of bottomed and started to pick up. And so you've reaccelerated, and that's the expectation in the market. Or you've had credit events like 2007. And I think we see very limited signs of either of those evolving in the next few months.
Do you see any sign of complacency in where spreads are? I mean, they're pretty tight right now. Okay. I'm sorry. Misty.
No, we don't really see, it's a steady grind in. We did see spreads hit some tights before Labor Day. We saw a little bit of back off as issuers made room for the deluge that we're seeing now. But even with almost $70 billion in supply this week, we have seen those spreads start to grind in. And, cash balances, we did an investor survey very recently, and investors are reporting that they feel that they have either high or very high cash balances. Almost half of our investors are reporting that. The other half say it's very normal, and like less than 2% felt like they were at low cash balances. So people are ready to go. They've made room for the supply that's coming. I think a lot of issuers have tried to pull forward some of their supply in early in the year. We've seen the banks fund a lot. They're mostly done. A lot of the corporates have done a lot of their funding, but technicals will remain strong. So I think when we look at the rest of the year, we'll see people trying to be opportunistic, taking advantage of these windows before 2026 to start on 2026 plans. And we're also starting to see the M&A calendar pick up. And fixed income investors love helping to fund M&A transactions. They're typically very large liquid deals. And it's a great place for them to participate.
Thank you, Patrice, and forgive me for butchering your name earlier. So, Matthew, put that all together with the steepening yield curve and the expectation that it will continue to steepen with this idea that we're going to get more M&A, we're going to get more activity as the year goes on.
Yeah, I mean, look, we generally have a view that the ranges are going to be narrow for spreads and that interest rates are heading lower. So from a fixed income standpoint, that generates pretty good returns, almost equity-like returns for the rest of the year. So depending on the specific pocket of credit, whether you're talking high grade, high yield, leveraged loans, or private credit, we're looking for a range of 2 to 3.5% total returns over the next 4 months, which on an annualized basis is 6 to 10%. I mean, that's very attractive returns. It's not without risks, but I think the two biggest risks in the market right now are, one, that the labor market deterioration actually gets worse, right? That we have to go through a period where maybe we're miscalibrating the magnitude of the slowdown. I think that could be problematic. The other thing really that people are focused on is the AI trade, and that ties in very closely with private credit. But right now our view is the cycle extends. There's a very positive technical, we think, in private credit where the inclusion of alternatives in defined contribution plans is going to help drive more flows into the market. And there's a lot of optimism in capital deployment, to the point Patrice was making on the private credit side.
How does that affect what you're looking at, the private credit and the demand for those instruments?
We're seeing a lot of business development companies do a lot more funding into the bond markets, both in the U.S. and in euros. We had a great successful transaction there this week that Blue Owl did, and was very attractive levels versus where they were in dollars. So a shout out to them on taking advantage of that opportunity. But it does flow into our market, and the investment grade markets are the most liquid in the world. Yep. So whether we think about AI needs and needs that companies will have for the future, a lot of that I think will get funded ultimately in the bond markets, because it's the place where you can do 20 to 40 billion if you need to.
If you had to point to something that worries you the most right now, what would it be, given where spreads are right now? Matthew?
It really is on the private side. I mean, we wrote a note a few weeks back highlighting that there is emerging signs of deterioration in the credit quality. So it's not a public market story, it's a private market story for us.
Could that spill over?
It could, but I think our view has been very clearly it's not going to be volatility in interest rates in the medium term. It's not actually going to be economic growth unless we fall off a cliff. It really is going to be the question of whether or not the increase in default rates, which is marginal right now in that market, really picks up and accelerates. But our view is outside of an economic recession, the only other way that happens is if you look at the BDC portfolios, to Patrice's point, they're very concentrated in several sectors, two of which are tech and services. So we're watching it closely, but right now the signs are not for an acceleration in defaults. And if that's the case, you don't get a surge in cumulative default rates in that market, you're not going to see much spillover. If anything, that market will continue to be a shock absorber. So if you get public markets or confidence to fall, public market issuance tightens up, you'll see private credit step in.
Okay, that's a really good something to watch for. Patrice, what about you? What worries you the most right now?
Yeah, when we talk to investors, the top 5 things have been U.S. fiscal policy, the deficit, inflation,
the usual.
Geopolitical tariffs, like U.S. weakening economic conditions have been at the bottom of that. Whether today's report starts having that, come up a little bit in their concerns, maybe, but it is still a number that people are working through. Investors, it's not stopping them. Maybe they're thinking about it a little bit differently, but it hasn't slowed down the market from our perspective, but definitely something that we're watching.
Gives them something to think about, but not enough for them to pause.
Correct.
All right. Patrice and Altanji of HSBC Americas, thank you so much, along with Matthew Mish of UBS Investment Bank. And if you can't get enough talk on credit, be sure to check out the Bloomberg Credit Edge weekly podcast on the Bloomberg Terminal and wherever you get your podcasts. Still ahead on Real Yield, the final spread, the week ahead, the last full week of data before the Fed's September meeting. This is Real Yield on Bloomberg.
You missed it on Bloomberg Insight. It feels like a day in which the whole world is waiting for the exam results, and then you open up the paper to see what did you get. Except unlike exam results, in a way, this is less about how you did on the exam and a little bit more about whether the teacher likes you or not. I mean, it really is crazy. It all depends on whether you come to the table or not. It's not really the case, is it? No, because we had countries that did come to the table and had agreements that did well. We had countries that came to the table, had agreements, and didn't do well. We had countries that didn't show up at all and got basically the same result. We had countries that weren't even invited and ended up both up and down. I mean, so it really does feel a bit random. These are not small tariffs. These are the highest tariffs the United States has imposed since the 1920s and 30s, and there's going to be real consequences to this. Don't miss Bloomberg Insight live weekdays.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee at the Economic Policy Symposium in Jackson Hole, and this is Bloomberg.
I'm Scarlett Fu, and this is Bloomberg Real Yield. It's time now for the final spread, a look at what's coming up in the week ahead. And on Monday, Japan and France hold confidence votes, questions about political stability, particularly in France. Also over in China, trade data is released. On Tuesday, here in the U.S., Apple holds its annual iPhone event, plus a UK bond sale, especially with a lot of bond vigilantes, being irked in the UK. And there's also earnings out of Oracle. On Wednesday, we get the start of inflation data reporting with U.S. PPI coming out. Also, Ursula von der Leyen's State of the EU Union address coming out that day. That sets us up for the ECB decision on interest rates on Thursday. That coming out at 8:15 a.m. And then U.S. CPA data. That is the big data point for the Americas and the 9/11 memorial services. And then we cap off the week on Friday with the University of Michigan sentiment survey and inflation data out of Europe. And for my final thought, I want to take a look at CPI estimates, looking ahead to that print, because right now the consensus estimate is for a pickup on the headline number of 0.3% from the prior 0.2%. When you back out food and energy expenses, it'll stay stable at 0.3%. On a year-over-year basis, core will be 3.1%, sticking with the 3.1% prior. When you strip it all out, we're looking at inflation that is still above the Fed's 2% target. That does it from New York. Here for Real Yield. Same time, same place for us next week. This is Bloomberg.
I want to spend a little bit of time talking about your relationship with autonomous vehicles. It's been it's up and down for Uber over the years, even preceding your tenure. You have stakes in a lot of AV companies. Yes. You talked recently about wanting to monetize some of those. What's the strategy?
So we want to essentially support the AV ecosystem and continue to help that ecosystem develop, and then AVs penetrate into the marketplace. AV, we think, represents a safer way of transportation. Ultimately, we think it'll expand the marketplace as it makes kind of safe transportation in cities available to everybody. So we're big fans of AV. And generally, we're working with multiple partners in the ecosystem. Waymo, for example, in Austin and Atlanta coming up. Wave, Avride, there are probably 18 partnerships that we have in the AV ecosystem. And we want to help these players develop by investing in them in some cases, but really by working with them to bring their product to market. These are technologies that are unbelievably promising, but they've taken billions of dollars to develop and 10 plus years. And it's one of those overnight successes that's kind of taken 20 years of development, but it's finally ready to hit market, and we want to help the ecosystem get there.
Didn't really think that I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Welcome to Bloomberg Markets. I'm Scarlett Fu. Let's show you what's happening on this Jobs Friday. We had an equity market that was slated to open higher, at least judging by the pre-market trade, and it did initially, which would have been a new record high, except that it gave up its gains and it is now down 0.5%, as you can see there. So retreating from that record high. Treasuries are rallying big time, sending yields sharply lower. You can see the 2-year yield down 11 basis points, the 10-year yield off by 9 basis points, and crude oil tumbling, now lower by more than 3% before this weekend's OPEC Plus meeting. Bloomberg is reporting that Saudi Arabia wants the group to boost oil production. Let's go back to equities and highlight a couple of individual movers, and Bloomberg's Natalia Knežević joins us now with more. Hey, Natalia.
Hi, Scarlett. First, let's take a look at shares of Lululemon. They are down by 18%, one of the lowest levels since early 2020. The company cut its earnings guidance for the full year and said it would take about $240 million hit from tariffs and President Donald Trump's decision to end the de minimis exemption. At least 5 analysts downgraded the stock today. Then in the technology space, I'm watching Broadcom. Shares are up by 9.5% today. Sources told Bloomberg that it will be helping OpenAI to design and produce an artificial intelligence accelerator from 2026. The company said its artificial intelligence outlook will improve significantly in the fiscal 2026. And then finally, shares of DocuSign are up today by 5.3%. The second quarter results beat expectations, and the company also raised full-year forecast. To Bloomberg Intelligence, however, this billing guidance seems conservative, Scarlett.
All right, thank you so much. Bloomberg's Natalia Knežević with our individual equity movers. Well, we got the highly anticipated jobs report this morning. Non-farm payrolls missed significantly, showing an increasingly stagnant job market, an increase of only 22,000. Investors were waiting to see how this would factor in the Fed's decision-making for the rest of the year. Here is some of the reaction that we saw to that report on Bloomberg TV today.
We're going to see tariffs push up inflation. We're seeing all of this take a toll on job growth. This is an economy that's being pushed to the edge.
What it really puts on the table is a Fed that gets back in motion for cutting rates. And if the economy's not falling off a cliff, that's a pretty good combination for risk assets.
The markets are quickly moving from pricing in 2 cuts for the rest of this year, meaning 1 in 12 days and 1 in December, to possibly a cut at all 3 meetings.
All right, we're going to help get some help breaking down the numbers with Molly Smith, who covers economics and central banks for Bloomberg News. But Molly, I just want to first mention a couple of headlines coming out from Scott Bessent, the Treasury Secretary. He's written an opinion piece in the Wall Street Journal, basically calling for more of an independent review of the Federal Reserve, criticizing the central bank for what he calls mission creep, and talking about how the Fed's expansion beyond its dual mandate of managing inflation and maximizing employment has jeopardized its credibility. What's the backstory here for his latest hit against the Federal Reserve?
I think this really just falls into the broader context of the Trump administration's attacks on the central bank, and especially coming from Bessent right now, who's the Treasury Secretary, and usually a role that, you try to distance yourself a bit from the Fed. Of course, Scott Bessent's name was on that short list for a time of who might succeed Chair Jerome Powell, as the Trump administration has expanded that search of names quite a bit for that term that's coming up at the end of May next year. So, I mean, I think this is really, again, it's consistent with a lot of what the administration has said in coming after the Fed. Of course, we saw Trump after the jobs report today, again calling on Powell, again saying he's too late in cutting interest rates. So the irony, of course, is that we probably are going to get a Fed rate cut at this next meeting. Yep. And who knows, whether Steve Myron, who had his confirmation yesterday, that hearing rather, if he's going to be in the meeting in time for that or not. But yeah, one way or another, we are going to get lower interest rates. It will not be because the Trump administration is asking for them.
And to your point, Scott Bessent, according to the Journal, will start the Fed chair interviews on Friday. Again, he was on the short list at one point. So put this together with the jobs data that we did get, because the Trump administration was not happy with the July jobs report. They fired the head of economic statistics over at the BLS because of the large revisions. We get a jobs report today that's also weak. It's not good in terms of the narrative on the economy, but it gets them what they want, which is lower rates, right?
Yeah, that's the irony. And of course, now there's nobody there to fire at the time for getting a weak print. And everyone who you've seen who's talked about the report since from the administration since it came out, there was a statement from the Labor Secretary. We saw Kevin Hassett of the NEC come on. Lutnick was on, I think, shortly before the report. None of them are talking, of course, about how manufacturing employment has declined so much in recent months. So that's, of course, not a great look for this administration. Mm-hmm. And to see that June payrolls were now negative. That's the first negative print that we've seen since 2020. So I think a lot of it right now is still just, as you heard from some of the guests earlier today, that the labor market maybe was in stall speed before, is now more significantly deteriorating. And that's definitely where we're seeing that market reaction coming for not just the lock on the September meeting, but also the other two later this year.
And that's really reflected in the steep move in the two-year yield, down 11 basis points to the lowest since 2022. This puts all the onus, it feels like, on data next week, on the inflation reports, PPI and then CPI, for people to really get a sense of where yields head for the rest of the year and whether the Fed is going to cut 25 or maybe even 50 basis points?
I think, the conversation about 25 or 50 for September, at least, that would have been decided today. I don't think that the inflation data is really going to help on that front, especially because the inflation data is probably going to be telling you shouldn't be cutting right now. It's what the expectation is, at least. So I think, if anything, we're probably looking at 25 right now, at least, for each of the three meetings remaining this year. CPI and PPI next week aren't going to alter the course for September, but the remaining two meetings may be a bit more of a toss-up, depending how the rest of the inflation and employment data play out.
All right, good stuff. Molly, always a pleasure speaking with you. Molly Smith, who covers economics for us here at Bloomberg News. Now, we've just heard how the markets are reacting to today's jobs data, but what's not in those headlines is perhaps just as telling, especially when it comes to who is entering or leaving the labor force. A recent analysis shows that mothers of young kids are vanishing from the workforce, at least recently. Joining us now is Misty Henganes, who conducted the research. She is the Associate Professor of Public Affairs and Economics at the University of Kansas. And she is also the author of the upcoming book, Swiftonomics: How Women Mastermind and Redefine Our Economy. Misty, thank you so much for joining us today.
Yeah, thanks for having me.
So you track something that you call girly statistics, which basically is unpaid labor from the home that is not captured in official statistics. You can slice and dice those kinds of numbers any number of ways, but what does it include overall?
Yeah, so girly statistics are really thinking about the type of economic activity that is generally done by women and often ignored by society, and particularly ignored within economic statistics. So it's looking at all of the, meals that are made, all of the childcare provided by caregivers who predominantly are women.
So what do the girly statistics show with regard to the strength or weakness of the labor market compared with the official data?
Yeah, so, one thing that I will point out is the analysis that I've done in the first half of 2025 looks at mothers' labor force participation, so moms working in paid labor, and there's actually been a pretty stark decrease in the first half of 2025. Between January and June, there was a 3 percentage point drop in labor force participation of mothers of small children under the age of 5. And so, when we look at the broader numbers of what's going on with women's labor force participation, often we don't see what's going on in the underbelly in some of the most vulnerable populations, and moms are one of those populations.
So what does this tell you about the state of our labor market and women's role in the labor market right now?
Yeah, I think it's really a canary in the coal mine type of scenario. Generally, if I'm wanting to look at what's going to happen in the future as we move on with the labor market, I want to look at what's going on with some of the most vulnerable populations who are kind of the first out, last in. When we're thinking about the strength of the labor market, that tends to be again caregivers of small children, mothers of small children. Often I'll look to labor force participation of Black women as well. I think those are good indicators as to what the health of the labor market in general.
Where do you get your raw data on girly statistics? How do you put those numbers together?
Yeah, so we, all this data is available on our dashboard. It's called thecareboard.org. But what we do is we take the current population survey microdata and we take the American time use survey microdata. So the time use survey measures how much time we spend in non-paid activities. Mm-hmm. And we blend those two together to get a better overarching picture of what's going on in the economy as it relates to care activities.
Do you get much by the way of private data? I mean, are companies, employers making available data to economists like you to be able to put together this picture?
Yeah, so we are starting to have some conversations with some companies around getting access to data, especially when thinking about the policies and HR policies that companies provide to their employees. A lot of times those can be really critical for moms and or caregivers.
I mentioned earlier that you're the author of the upcoming book, Swiftonomics, and it's about women in the workforce and how they've revolutionized the workforce, particularly women who are working in pop culture, like music, for instance. What do people misunderstand about the economics of working women in that industry in pop culture, whether it's Taylor Swift, whether it's Beyonce, whether it's Rihanna?
Yeah. Well, I think the first place to start is just to understand that women's educational attainment has really increased a lot over the past few decades, and especially over the past century. And that increase in educational attainment of women has really afforded them a lot more leverage within the labor market, a lot more leverage in industries that have been predominantly male or relatively misogynistic in nature, such as the entertainment industry. And it's not only that women are coming up with higher levels of education and more, therefore more power and influence, but so are their friends and colleagues. And so you've got groups of women who have access to money, access to resources, who are really influencing and pushing against the grain in society today in terms of just the traditional ways that we typically think of ourselves and the opportunities that we have.
So we talked earlier about unpaid labor inside the house, how that's not captured in the official statistics. Are the contributions, the economic contributions of women in the pop culture space, is that captured in official data?
It's captured in official data to the extent that their job activity is captured in the official data. And so in that sense, yes. But, you think about Taylor Swift, who has a new album coming out where, her album is representative of kind of a showgirl status. And if you think about it, showgirls were like one of the first paid jobs available to women, way back when. And her album really is focused on telling the other side of the story of what it's like to be a showgirl, telling the story that, again, isn't captured in official data and statistics, the story of how women recover in these jobs, what that recovery looks like. And I think these are important stories for us to tell, especially as women. We often can be seen as having a disadvantage in thriving. And so the more we can tell these stories, the more we can provide data to tell these stories, the better off we'll all be.
Yeah, another story on that is The Last Showgirl, which with Pamela Anderson, which I saw, which was really interesting.
Yes.
Misty, thank you so much. Misty Hageness is Associate Professor of Public Affairs and Economics at the University of Kansas and upcoming author of the upcoming book, Swiftonomics. Coming up, shares of Broadcom soaring after reports it's building custom AI chips for OpenAI. Where does that leave NVIDIA? We're going to break down what it means for the AI arms race next. This is Bloomberg.
You missed it on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss the close, live every weekday.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the threat to central bank independence, the Jane Street troubles over Indian derivatives and what it tells us about India capital markets overall, and we go to a gold mine in Australia to see what mining companies are going to do with all that cash.
I think the difference this time is what's going on around central banks.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
This is Bloomberg Markets. I'm Scarlett Wu. It's time now for our stock of the hour, and we're focusing on Broadcom. The shares are higher by more than 10.5% after announcing a deal to help OpenAI design and produce an artificial intelligence accelerator. You look at shares of NVIDIA, they are falling as a result, with the chip maker perhaps at risk of losing its historic $4 trillion valuation for the first time in almost 2 months. Let's bring in Bloomberg Tech's co-host, Caroline Hyde. So we bring up Broadcom and NVIDIA in the same sentence. Does that mean that Broadcom is stealing NVIDIA's market share?
I think that's a knee-jerk reaction, but more broadly, the market is so insatiable with its level of demand that most analysts will turn around and tell you it's going to be an and, not an or, when you're using Broadcom, which is making custom chips. And Hock Tan, the CEO, what he likes to do is he likes to hint and really divulge that he's got these big clients coming, but he didn't name who it was. It was Bloomberg's own investigations, FTs and the likes, that went out there and said, by the way, this is OpenAI. That's now their fourth key customer for these custom chips that are being very specifically used in the world of generative AI, whether or not it's particularly inference of the overall models. Yes, you've trained them, and probably with that you've used the heavy-duty Blackwell offering, but then you turn to inference. How do you use these models? And for many of them, they're turning to their homegrown chips. We know that Google makes them internally with Broadcom's help. We know that Amazon makes them internally with Broadcom's help. No wonder OpenAI is saying, I want to do this internally too. I don't want to be so exposed to just NVIDIA's own supply chain and their own price point. I want a little bit of flexibility here. But it is interesting that NVIDIA's been selling off when, more broadly, the news around NVIDIA since their earnings has been one of maybe sell and taking in some profits. Meanwhile, Broadcom is at a new record high today on this news.
So I got to ask you about Tesla as well, since I'm sure that this is something that came up for you.
This is news.
Yeah, this is a company that's worth $1.1 trillion in market cap, $1.15 trillion. And Elon Musk has been offered a pay package, a long-term pay package that could be worth about $1 trillion.
About the same.
Yes, which is mind-boggling. What exactly are they looking for Elon Musk to do to get that $1 trillion pay package?
They're looking at him doing some pretty mind-boggling stuff to get this mind-boggling pay package, because to get $1 trillion, not only has to be there in full for 10 years, he has to serve 7.5 years to be able to get any of sort of those rewards of stock compensation, but he's got to get the market capitalization to $8.5 trillion, which is 2 NVIDIAs and then some. But he's also got to make really categorical milestone achievements. Look, you're talking about 20 million cars on the road, not 8 million. You're talking 10 million with full self-driving FSD, where people are paying for that technology. You're talking about 1 million robots. You're talking about 1 million robo-taxis. At the moment, he's got a handful of robo-taxis on the road. These are key, big achievements that he's got to make, but that's what infuses him with enthusiasm. Also, he'll get his 25% share of the overall share count. That is also the control that he wants. And he's got to help with his succession planning. These are 12 tranches he's got to get through, 11 and 12. He has to help with thinking who's going to replace him. So there's some big achievements that are needed here.
Perhaps he is properly incentivized now to go through those things one by one on his checklist. All right, Caroline Hyde, thank you so much for detailing all of that for us. Bloomberg Tech co-host Caroline Hyde with the latest on Broadcom and Tesla. Now coming up, Martin Norton, who is the chief investment strategist at Empower, will be joining us to share her perspective on today's jobs report and what it means for your portfolio. This is Bloomberg.
up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
in case you missed it on Bloomberg Tech Asia.
How does Samsung think about competition? Because you have also so many Chinese makers coming out with foldables, with good cameras.
You know, rather than focusing on competition, I think we have been focusing on our consumers. I think healthy competition with other companies, I think will bring more innovations and then bring more benefits to consumers.
Don't miss Bloomberg Tech Asia every month.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. You look at the markets, stocks are lower, bonds are rallying as investors increasingly make their bets that the Federal Reserve will cut rates in September and then again later in the year. Let's bring in Marta Norton. She is Chief Investment Strategist at Empower. So, Marta, coming into this report, pretty much a September rate cut was baked in. And then after that, it was a little bit of like pause and cut again. How does the pace, the cadence of rate cuts change with this jobs report?
Well, it certainly reinforces the idea that the trend is weaker. I think that was what was so profound about the July report. We didn't just get a weak payroll number. We got a restatement of prior months that suggested that the job additions to the economy were way weaker than people anticipated. And so there was a bit of bated breath around this report, whether that would reinforce that trend. And I think it does. So it certainly puts a lock on the 25 basis point cut. There is talk of a larger cut, a la last September, of 50 basis points. And then, of course, there's that question of where we go from here, which I don't think is fully established, but you are starting to see the market price in the idea potentially cuts over the course of 2025.
We were talking earlier with folks from the bond market, and a lot of them are saying that they don't see a recession or stagnation around the corner, but they still are hewing to that idea of a soft landing. Based on the company news that we've seen, the earnings that we've seen, is that kind of the default scenario for equity investors too?
Well, that's certainly the way the equity market is responding to the weakness that we've seen in the labor market. I think it's a really interesting environment that we're in because you are seeing this profound weakness on the hiring front. And at the same time, to the point of your prior guests, we're seeing this strength in earnings. So, you know, of course, with Q2, we didn't just see companies edge past those earnings expectations. They really blew past it and delivered a far stronger quarter than people anticipated. And that wasn't just on earnings. It was also on revenue, which is another fundamental signal of health for this economy. So I think it makes it a really precarious situation. You still have inflation. You have evidence of a strong economy and then weakness in the labor market. And how do you calibrate that at the Fed? Those are the key questions.
So how do you calibrate that? What do you do with your portfolio? If you have been heavily exposed to Mag 7, do you continue to load up on the winners here? Even with NVIDIA down today, is that a buying opportunity, or do you maybe perhaps go more defensively?
Well, I think another variable that we want to add to this, mash of things that we're looking at is where valuations are in the equity market. Of course, market bottomed April 8th. We've seen this tremendous rally, and it hasn't just been in technology. We're looking at areas of strength like industrials, like financials. And so while you could argue that there's still a lot of health in the economy, even with what we're seeing in the labor market, a lot of that good news is priced in. And so I think that leaves us with a little bit of room for disappointment, for some deflation in the equity market. So I think there's a few different ways that folks can think about this. One is just maintaining some measure of breath, assuming that we're not looking at some sort of collapse economically, but two, looking for those pockets of opportunity that do exist. And they are few and far between, but they do exist. Healthcare, for example, small caps, for example. Mag 7 still relatively cheap relative to technology. So I think there are some opportunities, but expectations should come in a bit, in my estimation.
And so it sounds like small caps, the rally that we've seen there, the outperformance that we've seen there could be set to continue for a little bit longer here. Marta, really appreciate your joining us today. Thank you so much. Marta Norton is Chief Investment Strategist over at Empower. I'm Scarlett Fu. We are looking at a stock market that is in decline right now. The S&P 500 retreating from its record high from yesterday, losing 0.5%. Small caps, however, worth noting here, outperforming with the Russell 2000 gaining 0.2%. A rally in bond market is pushing yields lower. You can see the 2-year lower by almost 11 basis points and the 10-year lower by 8 basis points. I'm Scarlett Fu, and that does it for Bloomberg Markets. Balance of Power is up next in Washington. This is Bloomberg.
Names at the Fed are on Bloomberg.
We have a banking system that's a dual banking system. So we have national banks and we have state chartered banks. The FDIC and the Federal Reserve oversee those state chartered banks together with the state banking commissions. It's important that we maintain the ability to oversee both the state chartered banks and the OCC with the national banks, and that we have a rational framework that is very similar for all of those banks going forward.
Nobody covers the Fed like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the threat to central bank independence, the Jane Street troubles over Indian derivatives and what it tells us about India capital markets overall. And we go to a gold mine in Australia to see what mining companies are going to do with all that cash.
I think the difference this time is what's going on around central banks.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Job market disappoints again. Welcome to the Friday edition as monthly jobs data show weaker payrolls and the highest unemployment in 4 years, which may be enough to bring President Trump the interest rate cuts he's been pushing for. I'm Joe Matthew alongside Preeti Gupta in Washington. Thanks for being with us here on the Friday edition, indeed, the early side of Balance of Power on Bloomberg TV and radio. There may be a celebration about interest rates at the White House coming up here, Preeti, but lower rates not enough to boost stock prices today.
Absolutely. Not just the jobs numbers. This is a flurry of economic data that we've seen the last couple of weeks. The PPI numbers weren't great. The CPI numbers weren't great. The manufacturing, the factory boom, you name it, the data says we're slowing down.
That's true, and I guess you can't have both. If you want to have lower interest rates, this is how you get there, as opposed to urging them on Truth Social. But it's interesting, the messaging that we've been hearing from the White House on this, trying to downplay what is 1 month worth of data, but to your point, it is part of a larger composite, and we're going to talk about that coming up with Anna Wong, the chief U.S. economist at Bloomberg Economics. Also, you see the chairman of the Ways and Means Committee is going to come talk to us this hour as well.
We're going to talk about this shutdown. It's looming, 12 working days for for Congress to find a solution.
What could go wrong? Well, we'll find out. Jason Smith will have some things to say about that, of course, in line with the president on fiscal and monetary priorities, and we'll be here to talk about the big, beautiful bill, the implementation of the tax items that were worked out in his committee, and yes, whether or not we're going to shut down at the end of the month. It's all after a look at Wall Street. Charlie Pellet's back with us today. Let's get a read on the markets before we get down to business. Live from New York. Charlie, how's it look?
Right now, a lot of red on the screen, Joe and Creedy. We have got the Dow, the S&P, NASDAQ 100 index all lower. Interestingly, though, the Russell 2000 index of small cap shares up now by 0.3%. Keeping that all in context, S&P down 28, drop there of 0.4%. Off session lows, the Dow down 227, drop there of 0.5%, while the NASDAQ Composite Index down 0.2%. The 10-year yielding 4.07%, the 2-year 3.48%. Stocks lower, bonds higher on concern the Fed will now have to rush to prevent further weakness. We've got spot gold trading higher by almost $50 the ounce, up 1.4%, $35.96 on the precious metal, while West Texas Intermediate crude is tumbling 2.6%, $61.84 a barrel, and Bitcoin right now up by 0.3%, $110,755 on Bitcoin. Lululemon Athletica shares plunging 18% after earnings. It slashed its outlook due to weakening demand and the Trump administration's tougher trade policies. And Broadcom is helping OpenAI design and produce an artificial intelligence accelerator from 2026, getting into a lucrative sphere dominated by NVIDIA. Right now, Broadcom up 11%, NVIDIA down by 2.9%. Recapping, stocks lower, S&P down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back we go to Washington as Balance of Power continues. Once again, your hosts, Joe Matthew and Preeti Gupta.
All right, Charlie. Great to see Charlie Pellet on the Friday edition, and thanks for joining us here. You made it to the threshold of the weekend, and we've got a lot to talk about on this jobs day with big concerns about the trajectory of the job market following the data that fell short this morning. Only 22,000 on payrolls, unemployment up to 4.3%, and outright losses of jobs in some key sectors, including manufacturing. President Trump was asked last evening as he dined with the titans of high tech at the White House about the veracity of the numbers and whether he would trust what we heard from BLS, knowing a month ago he fired the commissioner after not thinking that the data were correct. In fact, he suggested they were politically rigged. Here's what the president said last evening.
We have a jobs report coming out, the first since the BLS commissioner who you fired won't be there. Can you commit to saying the data will be credible?
The number, I don't know, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now. I think you'll see job numbers that are going to be absolutely incredible. You're going to see job numbers like our country has never seen before.
I love Mark Zuckerberg having the side conversation with somebody while the president's talking to the media. The visuals were great last evening, but we want to get to the numbers here before we're joined by Representative Jason Smith, chairman of House Ways and Means. Anna Wong is with us, the chief U.S. economist at Bloomberg Economics. Anna, it's great to see you. So we need to wait a year for the golden age to begin in the job market? What do you make of this?
Well, you know, for example, next week we finally will get some revisions for last year. So indeed, you have to wait a whole year. But I think that for today's number, there has been a historical tendency for August to undershoot consensus. When you look at where the number print in the first print relative to consensus, since 1999, 70% of the time, the initial print disappoints. And one possible explanation is that people tend to go on vacations in August, and this August the weather was beautiful in the U.S. And so the response rates for surveys tend to be lower as well. And the response rate we saw today is one of the lowest August we've seen, the lowest since 2000. So personally, I do expect this number to be revised up even within the next 2 months. And traditionally, the median upward revision in the next 2 months would be about 25,000, and the disappointment is usually about 25,000 too. So roughly offsetting by the disappointment. That means that eventually this number would be revised up possibly to 50,000, 60,000.
Didn't the last guy get fired for all this, though? The revisions and the lack of response rate?
Well, the lack of response rate has been going down for a long time, and many of these issues are long-standing and not just from one commissioner or another. So if Trump does fire the BLS commissioner, he won't get the upward revisions either.
There you go.
Anna, 50,000, even in the best case scenario, still doesn't sound like a strong labor market. I'm going to repeat Joe's question. Even in the best case scenario with those revisions, is this the Trump economy?
Well, you know, and the unemployment rate increase, right? I think that's where the real signal is, because it's the relative labor demand and supply. And what we saw in the unemployment rate is that participation rate increased. So even though employment in the household survey actually increased over 200,000, the unemployment rate still ticked up, because in fact people are coming back into the labor force after dropping out in the past 3 months. I do think that the bottom of this labor market was actually in June, and we actually have been through the really rough patch already. In fact, after all the revisions are done, we probably have a couple negative prints a couple months ago. We also probably have a negative print late last year, but I think things should be rebounding right now.
Well, that's fascinating, because we hear so much about the huge levels of investment that are coming from some of the individuals who were at that dinner table last evening, with hundreds of billions of dollars in data centers alone. That's supposed to prompt a massive amount of job growth, correct? Is AI and the productivity from AI working against that?
So we are indeed estimating that the investment from AI will be continuing on this linear trajectory, or even slightly non-linear, in the next 2 years. So that helps with GDP growth, right? On the other hand, we are seeing a rising unemployment rate in sectors that are exposed to AI, possibly because employers are not hiring as fast. And this is what we're seeing in the demographics group from age 20 to 24, that their unemployment rate is close to 10% right now. So I think through the reduced hiring, not outright layoff, this is where ultimately through natural attrition and not replacing those workers, you're going to see slow build up, acceleration in productivity.
Wow, really interesting conversation as always with Anna Wong. Thank you, Anna, for your great analysis. And you can find Anna's work on the terminal and of course online at Bloomberg.com. As we add the voice of Congressman Jason Smith, the Republican chairman of the House Ways and Means Committee, is with us right now, live from Capitol Hill on Bloomberg TV and radio. Mr. Chairman, thank you for joining us. It's great to have you back with us here on Balance of Power. I'd love your take, before we get to matters of legislation, just on the jobs print today, what it means for our economy now that the commission of BLS has been fired. Do you believe these numbers are credible?
You know, I believe that I would agree with actually the person before me. I believe the numbers should be a little bit higher than what was released today. But let's look at it just this year. In the first 8 months of the Trump administration, there's been 500,000 new jobs. And those are American jobs. Those aren't government jobs. That's real jobs. And I think it's going to have a huge impact. But as the president said in one of the prior messages that I heard, when you look at a year from now, when the growth aspects take an effect from the passage of the tax bill on July 4th, you're going to see a lot of new jobs.
Chairman Smith, the economist that was speaking before you, Anna Wong, also said, though, that some of the negative prints that have come up in the last couple of months are likely to still be negative. Those revisions still stand. If that weakness persists, is that indicative of the effect of Donald Trump's tariff policy?
I don't believe so. And I think she also said that June was probably going to be the lowest level, and then it should only go up from that point on. But just passage of the big, beautiful bill of the small business deduction, the National Federation of Independent Businesses claim that that tax certainty will create 1 million new jobs each year for the next 10 years. That's pretty substantial, and that's just one provision within the tax bill, and that was from the NFIB.
Well, it's interesting that you bring that up, Mr. Chairman, because there's been a lot of writing recently about the branding, the messaging around the bill. The president himself said he doesn't want to call it Big Beautiful Bill anymore. I think the White House is looking more for something like the Working Families Tax Act or the Tax Cut Act. And I'm wondering your thought on that, having just come back from August recess, the messaging and the communication with voters that needs to follow such a massive piece of legislation passing. It's basically an opportunity to educate people on what you just did. Does it need a new brand? Does it need a new look while you take this on the road?
What it needs is for people to know what's in the bill. And that's what we have to do a better job at. We have to show how this is a tax cut for working families, such as no tax on tips, no tax on overtime, increasing the standard deduction, which is what the majority of working class families use, increasing the child tax credit to $2,200, creating the Trump accounts for new children that are born, that $1,000 will be invested for them. These different provisions, whether it's increasing a tax incentive for paid family leave or child care, these are items that need to be discussed rather than just one big broad brush. The bill, as you know, had 103 different tax provisions, which we passed through the House Ways and Means Committee, but it also had border security, it had military spending, it had welfare reform, so it was a variety of things. But just from a tax perspective, of course these tax cuts, the majority affect working families.
Yeah. Well, I have to ask you not about only what's just been done, but what's coming up next. Mr. Chairman, there's talk of another rescissions package, for instance, because after the last one, we had a lot of Democrats come on the air here to say that they can't trust deals that are made surrounding appropriations in the House, and we may well end up seeing a government shutdown. One more rescissions package, and we shut down, is what I believe Brendan Boyle said, the top Democrat on the Budget Committee. So give us your read on this. You're talking to your colleagues. Are we at risk of shutting down after September 30th?
You know, I really hate to hear that my Democrat colleague says no rescissions at all. That's saying that everything that's appropriated was needed to be spent. I don't think that's the case when you're looking at trillions of dollars. I'm sure you can find some things that aren't being spent and we should rescind it. I am very disheartened what I've been hearing from the other side of the building, from the Senate, from Leader Schumer, from Chuck Schumer, by saying that there's going to be a shutdown. We can pass a funding bill out of the House of Representatives, and we will pass a funding bill. The issue is you have to have 60 votes in the United States Senate. There's only 52 Republicans, so that means at least 8 Democrats are going to have to join in. But if they refuse to join in, there will be a government shutdown.
Chairman Smith, it sounds like you're saying that a continuing resolution may be the only option here. How long could that last if that's the way that it moves forward?
I would expect that there'll be a continuing resolution for at least a couple months because there is clearly no bipartisan agreement on an overall appropriations process. And so a continuing resolution is what you're going to be looking at over the next several weeks. The question is, will the Democrats in the Senate support a continuing resolution? They're saying right now that they won't, but if they don't, they are clearly shutting down government.
Well, it's interesting. We're hearing talk now from the White House, not the first time, of a full year CR, a year-long CR that would bring us all the way to the next fiscal year. Mr. Chairman, does that give you the sweats when you hear that, or could that really happen?
You know, I would really like for us to do our job and to appropriate. Getting tired of CRs, but that requires Republicans and Democrats to work together through this appropriations process, and hopefully people will be able to do that. But it's a huge challenge. It's a huge challenge. I think right now, if you were going to ask me to predict, it's going to be a CR at least for a couple months.
Well, Chairman Smith, you're talking about getting the Democrats on your side. Would you commit to more rescission packages to do that?
Well, the Democrats don't want rescission packages, as what was said earlier. I'm all about making sure you're appropriating money and you're cutting waste, fraud, and abuse, making sure that you're funding the things that should be cutting. So there's times that there needs to be rescissions. There's times that items shouldn't be rescinded. But to say a blanket across the board, no rescissions, that's not how it works up here.
We understand your position on that, Mr. Chairman. I'd love to know where you stand on Obamacare tax credits. We've got a big set of expirations, is the word I'm looking for, coming up at the end of the year. And there are questions about whether you could actually make a deal with Democrats by extending them. There are also concerns, as they call it, the Obamacare cliff at this point, about what it would mean for Republicans if they expired. Should these be renewed?
I think you look at everything when it comes to such a divided Congress is on the table, and there's a lot of negotiations throughout the whole process. I have concerns with the premium tax credits that you're referring to. The fact that if you make $600,000 in Scottsdale, Arizona, you get subsidized for your health care. That's not appropriate. And so those kind of reforms have to be maintained if there's any step moving forward on extending those credits.
Mm-hmm.
Chairman Smith, can you talk to us a little bit about some of the talk we're hearing around a second reconciliation bill come October 1st? Is that a possibility?
Do you know, I've said all along that we needed to have one reconciliation bill, one big, beautiful bill, because if you look at history, there has not been a case in the history of the United States where two partisan reconciliation bills passed in the same year. That's never happened. And with these razor-thin majorities, I think it's going to be very difficult. So I'm glad that we were able to usher through the one big, beautiful bill. We delivered the largest tax cut in U.S. history, the largest investment in border security in U.S. history, the most significant welfare reforms in U.S. history, just to name a few things. The second reconciliation bill, I think it'll be a whole lot more difficult to move through the system.
Well, I can only imagine going through that exercise once again. Even though you can, doesn't mean you should. Jason Smith, it's great to have you back, Mr. Chairman. Thanks for joining us. He chairs the Ways and Means Committee in the Republican-led House, with us live from Capitol Hill here on Bloomberg TV and radio. They're going to head back home, Creedy, and come back next week to some pretty interesting challenges. As you mentioned, what are we down to, a dozen legislative days to figure this all out?
Absolutely. And the clock is ticking. It's still unclear if there's any way out of this.
That's true, as we just proved. I think in another conversation about this whole deal, Democrats and Republicans are going to have to get in a room at some point and figure their way forward here, and they're running out of time. September 30, the end of the fiscal year. Alongside Creedy Gupta, I'm Joe Matthew in Washington. We'll assemble our political panel next. Jeannie Shanzano and Rick Davis, only here on Bloomberg.
In case you missed it on Bloomberg Brief.
We do see that there are some real inflationary pressures. I mean, one thing is, of course, coming from the tariffs. We are seeing some push from various kind of climate situation. And so that is why we also think that there is a link between climate risk and financial risk. I do think there is for sure a danger that inflation could be quite persistent here.
Don't miss Bloomberg Brief, live every weekday.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, and the NASDAQ 100 index all in the red. Russell 2000 index of small cap shares, though, higher on this jobs Friday, by about 0.2%. Strong evidence that the U.S. labor market is slowing, rippling through markets, driving stocks lower and bonds higher. We've got the 10-year yielding 4.07% with the 2-year right now, 3.48%. Gold is up $49 the ounce, up by 1.4%. Spot gold currently at $35.94. West Texas Intermediate crude now at $61.79 a barrel. WTI tumbling by 2.7%. Bitcoin up 0.3%, 110,760 on a Bitcoin. Tesla has proposed a new compensation agreement for CEO Elon Musk, potentially worth around $1 trillion, a massive package without precedent in corporate America. Tesla shares, they're up today by 4%. Rivian Automotive cutting a small portion of its workforce as the electric vehicle maker nears the launch of a more affordable midsize SUV, the R2. Rivian shares, they're up by 5.5%. So again, recapping here, stocks lower, S&P down 28, down 0.4%. We do have the Dow Jones Industrial Average down 0.5. NASDAQ right now by lower by 0.2%. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Kriti Gupta and Joe Matthew.
Okay, Charlie, many thanks to Charlie Pellet in New York. And that's where we're going to stay, kind of, for this story, because Washington and New York City are colliding again. Doesn't really have to do with Wall Street this time, but in fact, the mayor's race. And Donald Trump is investing himself. We've talked about this a bit with reports. It began as reports this week that he might urge a couple of candidates. You've heard of them both, including the sitting mayor of New York, Eric Adams, convince them to drop out of the race. Curtis Sliwa, the other, the Republicans, so we could get this down to a one-on-one, right? A two-way race between Cuomo and Mamdani who probably got quite a kick out of this story. He was asked about it earlier this week in New York. Listen.
Today's news that the White House is considering job offers for Eric Adams and Curtis Sliwa. It is not news that carries meaning because of any impact it will have on this race. We feel just as confident as we did yesterday that we will win this race in November. This is, however, about an affront to our democracy. An affront to what makes so many of us proud to be Americans, that we choose our own leaders.
It's interesting, Creedy, because Donald Trump doesn't appear to be backing down from these reports. And he actually talked about this when he was asked. He's maybe looking for a job for Eric Adams at Housing and Urban Development, maybe in Saudi Arabia. Did you see this report?
I mean, the New York Times talking about a potential ambassadorship.
Yeah.
Has Eric Adams been to Saudi Arabia?
I don't know. They talk about Turkey a lot, but let's hear from Donald Trump. He actually got into this just last evening when he was at the table with the tech titans. Here's what the president said.
Are you urging or encouraging any candidates in the New York City's mayor's race to drop out, declare the field?
No, I don't like to see a communist become mayor, I will tell you that. And I don't think you can win unless you have one-on-one, because somehow he's gotten a little bit of a lead. I have no idea how that happened, but I'd prefer not to have a communist mayor of New York City. And, you know, that's what he is based on his policy, if you look at his statements in the past. So I would like to see two people drop out and have it be one-on-one. And I think that's a race that could be won.
Generating a flurry of headlines. Trump wants two-way race for New York City mayor. Adams considering dropping out of race after secret meeting in Florida. Talks between Adams and Trump advisors center on Saudi ambassadorship. Apparently, Eric Adams will be in town next week now. According to the New York Post, he's going to sit down with Steve Witkoff to talk about next steps. Got to play this to the panel. Rick Davis and Jeannie Shanzano are with us now, Bloomberg Politics contributors. Jeannie is in New York as we speak, democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick Davis, partner at Stone Court Capital, our Republican strategist. As the Democrat on the panel here, Jeannie, I don't know your thoughts of Donald Trump removing the Republican candidate from this race, but where is this going? Will the President of the United States dictate the next mayor of New York?
That is what Mamdani says he is trying to do. And it is stunning. I will tell you, the local media here had something of a mini field day because the mayor was supposed to have a press conference that got canceled. Not that there was any direct tie between this, but of course, every little move he makes now is watched to see, is he going to be announcing he's out of this race or suspending his campaign? I think what's so stunning is that most of us thought that Mamdani was something of a gift to the Republicans, like this was going to be the Republican foil. He is the new Speaker of the House, Nancy Pelosi or AOC, and Republicans will be running against him for the next several election cycles. And yet what do we see is we see Donald Trump saying, nope, we want him out, which is quite stunning. And I thought it was interesting that Donald Trump has now recategorized him. He is no longer a democratic socialist. He is now a communist. But I guess we can't let little semantics get in the way.
Rick, weigh in here and maybe explore the hypothetical with us if you can. If this does ultimately become a one-on-one race with Andrew Cuomo versus Zohran Mamdani, does Andrew Cuomo have a shot here?
Well, assuming that the Sliwa and Adams have probably somewhere between 25 and 30% of the vote, that shift makes a difference, right? I mean, that would be a material impact on the race if it all went to Cuomo. The problem is we don't know if they're all going to go to Cuomo. A lot of them are going to probably just stay at home. A lot of Republicans who back Sliwa are never going to vote for Cuomo. They're never going to vote for Mamdani, so they're not going to vote. So it's kind of hard. It's very much a moving average, right? But without them out of the race, there's no chance Mario Cuomo can win. And so it's really just a shot in the dark at this stage. You've got, only a few months left before the election. This is going to take some time to sort of play its way out as far as getting these folks out. And a lot of attention on Adams and this offer potentially to become an ambassador or something like that.
Yeah.
But we're not hearing much about Sliwa, who's got more support than Adams does. And he's already said, I don't want a job. Which would make sense. Nice. So how do you get him out of the race? Because he's really probably the more important candidate to move out of there than Adams at this stage, just because of the basis of he's got twice as much support.
Curtis Sliwa got the whole makeover and everything. I mean, he's not going to drop out of the race now, I'm guessing, right? By the way, I'm guessing Andrew Cuomo would love to get some Mario Cuomo signs up there. I know we're both old, Rick, but Andrew Cuomo, of course, who's who we're talking about here. But I'm curious, Rick, Jeannie touched on something important. I thought Mamdani was the foil that Donald Trump wanted for the next couple of years. Do you believe his intentions here?
Not really. I mean, look, you got to understand, and by the way, sorry for that Mario slip. I've been fighting him, for most of my career, so he's still embedded in my brain. Donald Trump has a lot of his business in New York. He has a lot of assets in New York. He is a Floridian now, but his entire life has been defined by New York. And I do think there is an aspect to that is, all his friends, a lot of the people sitting around at dinner last night, have homes in New York. They don't want to see a socialist, as Jeannie puts it, put in as mayor. And so, yeah, we're going to have a time of our life if he becomes mayor, and we can talk about this leftist surge inside the Democratic Party, and it'll be very hard for Democrats to run away from their largest city mayor in the country. But at the end of the day, it's bad for New York City. Donald Trump knows that. So I think a lot of what's motivating him is to do no harm to New York City, his assets, his businesses, his friends' businesses. I mean, it could be having a dramatic effect on his opinion about what to do about this race.
Jeannie, weigh in here. Again, explore the hypothetical with me. If Eric Adams is no longer in the race and he is being considered for many roles within the cabinet, whether it's at HUD or whether it's in Saudi Arabia, would Eric Adams make a good ambassador? What do you think?
Well, he hasn't made a very good mayor, so maybe it would be a better job for him than the mayoralty. He was subject not long ago to public corruption charges that Donald Trump's DOJ pulled back on, and those were dropped. So this is somebody with a record. This is somebody who has had, a lot of serious charges brought against him. By the way, Andrew Cuomo as well. Certainly neither of them found guilty or anything like that, although Governor Cuomo did, leave his very important post as a result. I would say a lot of this is being driven by polls, which show that if it's a two-way race, Andrew Cuomo certainly can be competitive with, even one poll showing him beating Mamdani. That said, he lost to Mamdani in the primary by double digits. I would also say there is a very serious concern, I would think, amongst Donald Trump and many people in the administration, that the financial capital of the world would be, certainly America, but the world as well, would be run by somebody who describes themselves as a democratic socialist and has policies that are very, very out of the norm of what we have seen in the United States. There was a very interesting study. He talks about no need for billionaires, but roughly half of the income tax in New York City is paid for by the top 2%. Imagine what that would do to New York City if those people flee, and flee they might. So there's a very real, serious economic repercussions to all of this, depending on if he does win. And he certainly could win if things stay as they are now.
Well, President Trump is not only weighing in on the New York mayoral race, he's weighing in on what will be a barn burner of a congressional race now that Jerry Nadler has decided to not run for re-election. And he's on Truth Social about this too, Rick Davis. The president writes, I'll be careful here, but this is the president. Jerry Nadler, one of the most disgusting congressmen in USA history, is at long last calling it quits. He's finally leaving Congress. I've been beating this bum, he says, for 40 years. First as a New York City developer where he opposed me for no reason at every corner, but could never stop me from getting the job done. He goes on to talk about then running against him as president, where this psychopathic nut job together with crazy Nancy Pelosi impeached me twice and lost. I could keep going. If you're with us on Bloomberg TV, you see it's a pretty long post here. Rick, we've got less than a minute. Will Donald Trump be stumping in New York for these two races?
He may stump if there's a decent Republican in the Nadler district, which may be irrelevant because it's a pretty Democratic district. And you can tell, I mean, Nadler should be very happy that he has had such a big impact on the psyche of Donald Trump. That's pretty impressive.
He calls him a lightweight in the same post. I don't know. We got to pick one. Rick, thank you. Jeannie, thank you. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. We always learn something with these two. An important conversation ahead with Austin Goolsbee, only here on Bloomberg TV and radio.
In case you missed it, on Bloomberg Crypto. What are your takeaways from recent IPOs of firms in the space? Circle, for example, we saw bullish last week. The investor appetite was certainly there for that one. What are your thoughts?
If I use the framework of intrinsic value versus options value, my personal belief is that a lot of these companies in the crypto ecosystems are option valued, so they're overvalued in my perspective. And in some cases that is a good thing and a bad thing, which is you're getting more attention, and so you know more about what's happening in the industry. But I think it's really important to just take a look at, how are these companies growing efficiently, where do they make their money, where do they not, and where do the losses accrue. And so, again, taking a step back, how do these companies actually grow the industry? How do they grow themselves? And are they actually providing intrinsic value to themselves and their shareholders is what matters most.
Don't miss Bloomberg Crypto live Tuesdays.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Between 2010 and 2025, we have a new form of capital. Because what lives in here, ladies and gentlemen, is a machine. It's not just what's in here, but all the networked machines that are connected to this, satellites, the carbon fiber cables, the algorithms, the server farms, all that. I call this cloud capital because it lives supposedly on the cloud. It's not on the cloud, it's on Earth, and it's inside our oceans. What does this do? What does Amazon, or the Google, or the Meta algorithm do? It doesn't produce anything. What you buy on Amazon has been produced elsewhere, has been produced by Amazon. What it produces is a remarkable power to input and infuse desires and thoughts into your mind. So it's the first time we have machines that do that which once upon a time advertisers, human advertisers, human marketeers, orators, preachers, politicians, poets did, which is to change our mind, to modify our behavior. This is now automated. So anyone who owns concentrated quantities of cloud capital has an immense power.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the threat to central bank independence, the Jane Street troubles over Indian derivatives and what it tells us about India capital markets overall. And we go to a gold mine in Australia to see what mining companies are going to do with all that cash.
I think that the difference this time is what's going on around central banks.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda on it, only on Bloomberg.
In case you missed it on Bloomberg Tech Asia.
How does Samsung think about competition? Because you have also so many Chinese makers coming out with foldables, with good cameras.
You know, rather than focusing on competition, I think we have been focusing on our consumers. I think healthy competition with other companies, I think will bring more innovations and then bring more benefits to consumers.
Don't miss Bloomberg Tech Asia every month.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee at the Economic Policy Symposium in Jackson Hole, and this is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are falling as that bleak jobs report sparks a bond rally. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index are all declining. Russell 2000 index higher, little changed. Small cap shares advancing by about 0.1%. The S&P currently lower by 35 at 64.66. The S&P down now by about 0.5%. Dow Jones Industrial Average lower by 290 points, down 0.6%, while the NASDAQ Composite Index is down 56. That is a drop of 0.6%. The NASDAQ 100 Index down by 0.2%. The 10-year at 4.07%, with the 2-year that's currently yielding 3.49%. Gold is up $47 the ounce for the precious metal, a gain right now of 1.4%. Gold at $35.93. West Texas Intermediate crude down 2.9%, 61.64 a barrel, and Bitcoin now up by less than 0.1%, little changed at 110,425 on Bitcoin. JP Morgan Chase and Mitsubishi UFJ Financial Group are leading a roughly $38 billion debt package to fund data centers connected to Oracle in Wisconsin and Texas. Banks and private credit firms have been competing to underwrite debt deals supporting the development of large data centers that are being built as artificial demand continues to be in demand. Right now we have got Oracle, which reports next week. Oracle shares, they are advancing today. Oracle up by 3.4%. JP Morgan Chase, however, trading lower right now, down by 2.9%. It is the compensation agreement everybody's talking about. Tesla's proposing a new pay agreement for CEO Elon Musk, potentially worth around $1 trillion, a massive package without precedent in corporate America. Tesla up by 3.5%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kriti Gupta.
Always a good Friday with Charlie Pellet. Thank you, Charlie. He'll be back at the top of the hour here following our conversation that's coming up with Austin Goolsbee. I'm Joe Matthew. Yes, indeed, alongside Kriti Gupta in Washington. Great to have you with us on the Friday edition of Balance of Power. Jobs Day, and a lot of questions about the trajectory of our economy as we head for the next Fed meeting here. And Kriti, there are concerns about a slowdown in the job market, which may well justify the interest rate cuts that President Trump has been pushing for.
There's the slowdown. We knew we were kind of getting on the off-ramp of hiring anyway.
Yeah.
But the margin of that off-ramp is really what's surprising here. The estimate was 75,000. We're getting 22,000. We had Anna Wong earlier come and talking to us about the fact that we might actually get an upward revision, but even say 50,000, which was her best case scenario,
yes,
doesn't sound too juicy.
You'd still be short, I guess, technically, of the estimate in this particular case. I'm glad to say that we're joined today in Washington by Michael McKee. He's been down for a couple of days with the Stephen Myron hearing, and now for an important conversation that we're going to bring you with Austin Goolsbee, of course, the president of the Fed Reserve Bank of Chicago. Michael is Bloomberg's international economic economics and policy correspondent. And this is the day before the blackout period starts. So this is the last we're going to hear.
We got about 10 hours to go, so we're hoping that we can squeeze in 9.5 with Austin here to get the full view of what the Fed is thinking.
Well, what's on your mind as you read the data this morning? The White House is framing this as kind of a one-off, even though last time we got a bad jobs report, the BLS commissioner was fired. Michael, how do we interpret this?
Well, that's an improvement, I suppose, in the White House response.
Yeah.
I mean, you can't blame him. It's the same thing for any party. When the news is bad, you try to spin it as good. In this case, the news is bad, but the president may get what he was looking for. It's not the reason he wants to get what he was looking for, but it's likely he's going to get interest rate cut. So. I mean, we'll ask President Goolsbee about that in a few minutes, but it seems like Jay Powell set the stage for that, and these numbers certainly ratify that decision.
There were still questions, though, about just kind of hiring pauses or freezes that we saw where we did have that negative revisions number. Are we expecting a bounce back here? If this is a one-time data set, does it get better from here?
There is a lot of theorizing that it probably will, that maybe this is kind of the low period right now, that once the uncertainty over tariffs lifts some more and the stimulus from the big beautiful bill starts to flow into the economy, that company investment will pick up and that maybe some of this will rebound, but we don't know for sure.
Well, it's a great pleasure to have you with us here in Washington, and of course, President Goolsbee in Chicago. Michael, why don't you take it away? We're going to be watching and listening.
All right. We'd like to welcome Austin Goolsbee to our broadcast of Balanced Power here on Bloomberg Television and on radio worldwide. Austin, you heard us talking here, 22,000 jobs, 4.3% unemployment. How's that economy of yours holding up?
Well, you know, you never make too much of any one month, but it's definitely below what we would consider the break even for job growth. The only thing I want to highlight is we're getting some cross currents in the data, and so we want to be careful thinking about where we are in the business cycle. We know that in 2024 and going back into 2023 as well, when immigration was high, we were getting jobs numbers of 185,000 a month, which was faster than the break even, but it wasn't a very good indication of where we were in the business cycle. And that could be at work in these numbers too, that they could be artificially lower than the break even because immigration's going the other way and labor supply the other way. So for me, I like looking at a broader portfolio of numbers, and I think things that are rates and ratios prove to be a little more accurate as indicators of business cycle last year. Those include the unemployment rate, the layoff rate, the vacancy rate, the hiring rate, and you see some stability on those.
You've called them the four horsemen of the labor market.
Yeah, the four horsemen of truth on the labor market. Yeah.
The labor market does seem, though, to have deteriorated some. Does this report today basically lock in a rate cut for September 17th?
You know the rules. I'm not allowed to speak for the rest of the Fed, the FOMC. I'm only speaking for myself. I want to get more information. I'm still undecided as we're going into this. If it looks like the labor market is deteriorating on grounds more than just the monthly payroll numbers, because I want to emphasize again, when you have population growth changing around behind the scenes, just the aggregate monthly payroll growth is not a great indicator of the business cycle. If we start to see deterioration across all the four horsemen of truth in the labor market, the unemployment rate, the hiring rate, if we were to start seeing layoffs, then I think we would be nervous on the employment side of the mandate. But we can't disregard, we got to look at the inflation side too. And the more mild numbers we get on inflation, the better I'll feel about just focusing on the labor market. But in the last inflation reports, we also had this uptick in inflation coming from services. So I think we want to make sure that that's more of a blip and not a more ominous indicator.
Well, let me ask this. Because you'll be in the blackout when we get the CPI report next week, what would it take for you to hold off on a rate cut in terms of an inflation result?
I don't, it's not going to be a specific number. If you saw X number, then you would change. It would be, we're trying to get the through line of where the economy is. And one side of that shows relative weakness in the job market, at least measured by monthly payroll, more stability looking at more accurate measures. And then on the other side, if the inflation numbers come in and they give some indication that the inflation from tariffs is not looking to be persistent, or that the uptick in inflation on services, again, does not look to be persistent, looks to be more like it was just a temporary blip in the data, then that would provide comfort to me that we're still on what I was calling the golden path, and that rates can come down a fair amount.
Well, the administration thinks that you've fallen off the path. The universal response from administration officials today, including the president, is that you're still too late, that you should have been cutting earlier.
Factually, yes, that is what they said. I mean, my view is we go to the FOMC meeting and we look at the data and the economic outlook as best we can to figure out the through line. A lot of people outside the FOMC have a lot of opinions, but the independence of the monetary authority from political interference is critically important if we don't want inflation to come back.
Well, for the economy's sake, are you behind the curve?
It depends what you make of what the through line is on the economy. So, as I say, if you take the payroll employment numbers, they show weakness. If you take the open job vacancy rate or you look at the layoff rate, they don't show weakness. They show pretty stable full employment kind of values, sort of where they were, or sometimes even better than they were pre-COVID in what was a pretty tight labor market. And on the inflation side, we've had some really benign readings, which would not give you any indigestion on that side. But we now have at least one report where you see services inflation bumping up, and services inflation is not a thing that would likely be coming from tariffs. So it would tend not to be a one-time cost increase. So we got some currents that we have to balance out here, and that's fine. This is what always happens. There are conditions change. The central bank is supposed to be the steady hand, and there's political argument and there are market arguments, up, down, sideways. They have a lot of variability. And as I say, we're supposed to be taking the steady hand and figuring out the through line.
Well, the president's argument seems to be, at least the way he was talking last night, as, yeah, these numbers may be bad, but kind of channeling his inner Brooklyn Dodger fandom, he said, wait till next year. Next year, when all these tech palaces are built, we're going to see hiring like crazy. You've got to put in a new forecast for unemployment and for inflation at the next meeting. Do you see a rebound ahead and stronger economic growth and employment growth in 2026?
Yes. I mean, I think to me, until we get more convincing evidence, otherwise, I still think we're most likely in a kind of a full employment space where we're generating jobs and the economy continues to grow. This slowdown in payroll employment, the aggregate jobs number, as I say, you got to be extremely careful taking that as an indicator of the business cycle when things like immigration or labor supply and labor force participation are moving around behind the scenes. So to the extent that anybody's saying they think it's a strong job market and the job market may get even stronger going into 26, that's entirely a possibility. And that if it is, to me, that's still on the golden path that we're around stable full employment.
We can't, unfortunately, avoid politics in these situations these days. A few hours ago, Treasury Secretary Scott Bessent came out with quite a broadside against the Fed in the Wall Street Journal, laying out a lengthy bill of particulars against the central bank. Your research is bad. Your forecasts are bad. You've contributed greatly to income inequality. You've destroyed the housing market, blurred the lines between fiscal and monetary policy, and created a culture in Washington where policymakers rely on the Fed to bail them out after they make poor fiscal choices. Are these criticisms fair or unfair?
Look, that's for the American people or the pundits or somebody to decide. Like I say, what we do at the Federal Open Market Committee is go down there as a collection and do what the law requires us to do. That is, set monetary policy based on maximizing employment and stabilizing the prices. At a moment like this, where we're getting shocks that are pushing us in a stagflationary direction, driving down employment and driving up prices simultaneously, that's a difficult environment for the central bank to be in. I've been in the Fed for coming on 3 years, so I don't know about the long historical litany of complaints that someone might have. Overall, we just go there and do our job. That's what the law requires us to do, and so I'm not going to get into a political argument about it.
Well, let me ask it this way. One of the criticisms he makes is that the Fed has a gain of function problem. In other words, since the great financial crisis, you've had a lot of tools to the toolbox, including quantitative easing, forward guidance, things like that. And the Fed also strayed into climate change. You've heard those arguments before, and other things like that, the fate idea for inflation. Are any of those valid, and is anybody at the Fed working on whether or not they have worked as you hoped and should be kept in the toolbox?
Well, yes, people are working and thinking about that all the time, both at the Fed and among economic researchers, monetary researchers around the country. As I say, these are a bunch of things that are from the years before I was at the Fed. I'm certainly not going to speak to them. I don't have any privileged information about how those were determined. I think on overall dual mandate grounds, you have to say that as you look at 2023 and 2024, we've got the inflation. We're coming off a period where inflation was well higher than the 2% inflation target, but we succeeded in getting inflation down almost as much as it has ever fallen in a single year. And for the first time ever in the United States and probably of any rich country in the world, we had that massive drop of inflation without having a recession, without the unemployment rate rising dramatically. And that's what we should be trying to do. That is absolutely our goal, to carry out the golden path and to continue to carry it out now. And that involves figuring out the through line of where we are in the economy, not overreacting to 1 month's report or 2 weeks, what happened in the market 2 weeks ago. The law is very clear. The FOMC stabilizes prices, maximizes employment. Doesn't say anything about make administrations happy, make the stock market happy. None of those are in the mandate. Congress has given us the mandate.
You know, they might want to change that mandate down at 1600 Pennsylvania Avenue. Ultimately, Treasury Secretary Besson says what's at stake is the Fed's credibility and political legitimacy. Have you seen signs, or has anybody suggested to you that either of those have diminished?
No, I agree with those sentiments. The credibility of any central bank, and the Fed especially, is critically important. So that when you go through episodes like happened coming out of COVID, where inflation goes way up, but if you look at market expectations of what inflation would be in the future, people believed the Fed when it said we're going to get inflation back down to 2%. That is a sacred covenant between a central bank and the American public, that it's going to do the job as the law requires it. So everyone I know involved with the Fed system is open to criticisms, critiques, and analyses of models, how can they be improved, of forecasts, of the Fed tools. All of those things should be on the table. We should have an adult conversation about those. How can we improve our decision making? That's something different than should there be political interference with the setting of monetary policy? Should the central bank not be independent? And I'm totally opposed to taking away the independence of the central bank, as are unanimously all economists that I know of, because just look at places where there is not central bank independence. Inflation comes back, growth is slower, unemployment is worse. So we really don't want to go there, and I don't think that's what they're calling for.
Unfortunately, I have to ask you one more question. Stephen Myron looks like he will be joining you at the 16th and 17th of September meeting. He had some nice things to say about you in his paper on Fed reform last year. Was your appointment sinister? Does he have a point about a revolving door between political administrations and people who are on the Fed?
Look, I'm not going to get into policy. He said my appointment was sinister. I served in an administration, and some 12 years later, I joined the Fed. So I think it's a little strange to call that a revolving door. But I look forward to meeting Stephen Myron, and I'm proud he's coming from the Council of Economic Advisors, which was he had the same job I had 12 years before I joined the Fed. And there's a long history of CEA folks coming over to the Fed and doing a very effective job. I think anybody who comes and joins the FOMC is going to take the job very seriously. It's an important function, and we all just go down there and try to maximize employment, stabilize prices. That's what the law says.
Well, Austin Goolsbee, thank you very much for being diligent enough to come talk to us, and hopefully you'll talk to us shortly after the next meeting. I suspect it's going to be a very interesting meeting. Austin Goolsbee from the Chicago Fed, president of the Chicago Fed, former chairman of the Council of Economic Advisors, as he noted, someone with a vast experience in Washington and in monetary policy.
Sinister, huh? Interesting that he has not made up his mind yet. This meeting is days away.
Well, I kind of wonder. I mean, we don't have time to really go into depth with him, but I was wondering what other indicators he was expecting. Right. There'll be another jobless claims report, but that's about it in terms of the labor market between now and the meeting. I think if you read between the lines, he's saying he's open to a rate cut as long as inflation doesn't come in bad.
The piece on the labor market that I thought was crucial, he said, well, there's no layoffs just yet. That would be the alarm bell they're ringing. But anecdotally, we've heard of these hiring freezes, hiring pauses on Wall Street, in the tech space as well. Is this just a matter of time? Is that kind of where Austin Goolsbee is leading us?
Well, we're kind of at an inflection point. We don't know which way it's going to tip. Companies have been telling Fed officials for quite some time that they are on hold. They don't know what's going to happen to the economy, so they're not hiring. They're not adding to their expenses. We're starting to see some companies say we need to trim because the uncertainty just goes on. But do they start to trim a lot of people? That's the issue. The Fed watches the unemployment rate because it tends to, as Claudia Sahm always says, tends to start going up fast once it starts going up. And it went up for the last 2 months in a row. So if that continues, then we might see that. But we just don't know yet.
Well, real pleasure to have you playing into Balance of Power today. And thank you for bringing us that important conversation. Michael McKee, always a pleasure to have you in.
Charlie Pellet, welcome back.
Hi, thank you very much. Great to be back with you guys. As always, got to begin with a developing story right now. Keeping an eye on shares of Kenvue. They are plunging by 11.4% right now. Kenvue